to get to the point where.
It's also why Lucid's recent capital raise they mentioned is going to get us at least into 26.
Well, you have to do that because people do not want to own something where at the end of the day, no one can fix it. Now, I happen to believe in Rivian. I know they've got the money from Germany. I think that Scrooge is really good. But I'll tell you what I do worry about. The average person going to the showroom and asking that question, how do we know? And they're going to say, well, right?
That's why auto startups are so hard.
They really
Not a
are,
good-
man.
not a
That's
good
why
game.
that's why many revere Musk in terms of what he was able to
Okay,
accomplish.
you know
with
what?
Tesla.
How would you like to just get a piece of Musk by buying Tesla? No, I don't want to do that. It's too expensive. Yeah, but who cares? He's able to make the money. I think you should think about price earnings multiple. I want the guy who's going to the left, not the guy going to the right.
By the way, that net worth number that we began with, I don't know whether Bloomberg includes the 300. Sign off on that in Delaware.
Good morning.
Net worth, Carl, enormously, adding to his already sizable position. What are you looking at?
Your label, for heaven's sake. Xenia. Xenia. Not bad for him.
Getting into your neighborhood.
Xenia. You know what? You stepped up your game. Now, what were you talking about? It was McCormick? McCormick Spice? Were you talking about McCormick, the guy who won Pennsylvania? Or are you talking about the Chancellor?
Chancellor in Delaware.
All right.
Just pointing out that Musk is going to get even richer when that goes through. Finally.
I want to.
Oh, boy.
We are going to keep our eye on the Senate and the House. Where the count continues. A little bit of a split futures this morning as we see some of the Trump trades get a little exhaustion today. We'll keep our eye on it as the squawk of the street continues.
All right. All right, let's get somebody on here to talk a little bit. All righty. It is Friday. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. 9:23 a.m. About 7 minutes to go.
The markets are ripping, and we've also at Allianz IM. This is why we launched we call it the uncapped ETF. So instead of selling away the market returns above a cap, we effectively fund the downside protection, which is 15% in our case, by selling away the first few percentage points of the return.
First 15 minutes, I'm not doing much of anything except taking profits off the table usually. Reassess the markets after about 9:50, 10 a.m.
But it won't go 1-to-1 if the market goes with certain move over 12 months or take me again.
Today, looking for Tesla to continue higher. Tesla's pushing up a bit. Bought some TSLL shares pre-market on the dip.
Give or take 3 years out of 4, and so it's only down, one year out of 4. So
And it's going now. So looking pretty good. Tesla looking good. We got 6 minutes to go.
Once it's come down to the bottom and it starts going back up to the peak, you have a lot of years where it goes up by more than 20%. So those are the years that really matters the most to you as an investor. You want to be able to
Tesla.
those years. And on average, frankly, when it does turn, the market is up about 24% when that happens. So in that average scenario, if the market is up 24, and let's say that we have a threshold in our buffer ETF of 3%, then you're going to collect 24 minus 3, which is 21%. And it's very important here because you still have the 15% buffer underneath of you, which is the key point for owning the ETF in the first place, is build in some protection.
All right.
Down on a calendar basis, maybe 5 or so times over the past 50 years. So you have a big chunk of protection, but you can also get to participate in all the most important.
Don't forget Tesla. If it gets above 300,
And just to make sure,
gets above 300, call wall. This could run.
So the 3% is on the upside. So if the market goes down, you're always outperforming because you have
We get the dealers to cover.
And then if the market
Tesla gets above 300.
we call it spread, we call it performance threshold. If that threshold is 3% and the market is up 3, then you get 0.
Got it. Okay. So
Right?
the 3
But if
is
it's up
linear.
10, you get 7.
Got it. You're always taking
When-
the cost is 3 basically. The cost is fixed 3% point basically the upside to fund the protection of the downside.
That's right. Yep, that's right.
Okay. So then, all right. Then if you have a view that equities are going to be volatile but uptrending, and generally it works if you have a bearish view, but you have to be in equities. Where does it works there? There's a few different ways to frame it, but I guess it depends the utility on how you put it in the portfolio compared to stocks, bonds, or alternatives, because then your range of outcomes that we're talking about, the quality of that, the desirability of that depends on what you took out of your strategy, basically.
That's exactly right. That's exactly right. And it really comes down to why you want to own it in the first place. And it tends to be for people that are going into retirement or they're already in retirement. For decades, we've all read the same textbooks, right? You take some portion of your equity allocation and you move it over to bonds. And the question is why you do it. And you do it because you want protection.
Okay, we're about to open. We got 3 minutes to go.
Doing it. And what you get for that is that, yes, you get some stability, but not all times. So 2022 is a good example of when the bonds didn't really do their job in a call it the 60-40 portfolio. But then on the flip side too, when you move over to bonds, you're also giving up the equity risk premium, which means you're giving up upside potential. And let's face it, when let's say you're fortunate and you retire when you're 60, and you retire with $1 million nest egg, or maybe even 2, you're gonna have to live off of that nest egg for a long time. So the beauty of the uncapped buffer ETF is that it gives you immediate protection against 90% of down markets, but at the same time it gives you great upside participation to all those market rallies over the next 10, 20, maybe even 30 years if you live till you're 90.
There you go. I like the specific example. Appreciate it. Thanks, Johan.
Always a pleasure, Oliver. Appreciate it. Thank you.
Absolutely. Likewise, Johan Brown, head ETF market strategist.
Okay, 2 minutes to go. 2 minutes to go.
The buffered fund. When we come back, let's open up this market and see what moves. Got stock specifics and earnings bouncing around, but the indexes right now are pretty flat.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
All right, we're open.
It's your number one broker with the best full service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with your fees.
We're experiencing technical.
All right, let's turn off extended hours.
A modern approach to wealth management.
It's time to look forward
Find the next track.
from every click to every tick.
There goes Tesla. There it goes.
Available anytime, anywhere.
Okay, this could be a good one.
for free.
This could be a good squeeze. Thank you very much.
He's Alex Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on Schwab Network.
Okay. We've got about 60% red, 40% green at the moment, 45% green, trying to build. Top of the list, Mercado Libre, Booking, Worley Automotive, Costco, VRTX, Vertex, Clack, Constellation Energy, Regeneron, Intuit, Centos. That's an economic indicator. Centos, you know what we think about Centos. If Centos is trending, that's telling you the economy is doing fine. Over 1 million customers worldwide. Sells uniforms, rents them out, all sorts of identity programs. You've seen their trucks around, I'm sure. When I first saw them, I thought it was an armored car, but it actually is one of those vehicles that runs around uniforms and stuff. So delivers them, I guess. Anyway, the market's open, looks good. Apple pushing higher. Okay, AMD looking for AMD popping to 150. All right, I need to look at some profits here. Okay, Bitcoin's hanging in there. That looks good. Bitcoin. TLT trying to regain. TLT. I heard an explanation yesterday about bonds holding in this area, why they should hold. Okay, TLT. Trying to get back to 200. I'm probably going to take this off. I'm off a little bit. Just one less position to be looking at. It's not doing what I thought it would do originally. So even though I'm taking a small loss, I'm going to take it off. I'm out of TLT. I'll concentrate on other things. Hold on one second, folks. I got to do something real quick.
strategy, right? Where you're
Okay, Tesla on the move. Tesla squeezing.
following a portfolio rather than just full on.
Okay, there goes Tesla.
Okay. So we slipped out of that wedge. Now we're back into it at the top end. So even after we break it, we still kind of use it as a technical indicator. I don't hate that.
Yeah. Oh, yeah. I never take the indicators off because you never know when we do come back into a wedge. And so we are hitting the top end of that wedge right now.
Oh, there goes Tesla. Nice. Nice. Nice little squeeze there. Looking good. Looking good. All right, there it goes. AMD looking better. AMD looking good.
And if you kind of look at that, you're looking at 60-50 on the radar here, where we could see, substantial area of resistance, but also kind of signifying the fact that the market from a technical standpoint may not get too concerned until we actually hit 60-50. And if we kind of complement that with the rolling up and rolling out of calls at the 60-25 level, it seems like that could be where the market wants to go. So I'm going to be keeping that on our radar here over the next couple of weeks and see if we're actually able to hit those hit that level. And if so, what's going to be
TLT out. All right, let me look at a couple of SMR. Okay, that's jumping around. SMR. Go ahead and take that off. Iron Condor.
Is there pressure still on the call side, or has that normalized after the big rip?
All right, we'll take the Iron Condor off.
On the call side over the last couple of trading sessions here. Now this morning, actually puts are actually outweighing calls. But once again, I think that's more just institutional positioning, moving those collars to the upside, moving the call side more to put out our money, and then moving those puts up as well as the portfolio continues to move up. I don't think that this is full on bearish intent yet, but you will see.
Okay, nice pop there. An SMR that had earnings last night. I didn't catch it.
There's a lot of positioning there as well, so it might be a big hurdle to be able to try to break through it. But it could also be a magnet to be mindful of here. And if we're looking at the intraday levels to the downside, 59.45 would get you into the intraday negative gamma scenario here. And then I do have it highlighted between 58.60 and let's say 58.10, right below.
Okay, Tesla. Nice little rip on Tesla.
Nobody wants to see us kind of reverse and lose all the gains that we saw over the last couple of trading sessions. But if we were and come back and try to retest that 58.60 level, we could have some gappy action or maybe a lack of liquidity that kind of thrust us to the downside here. Just something to put on the radar. I don't expect that to be a thing for today, but that could always happen. But call side skew has been prevalent in this market. Even though if you're looking at the options volume, it hasn't been too aggressive, Oliver. Actually, last week we saw more aggressiveness on the option side, especially on zero DTE, than we have this week. But if you're looking at the equity side, equity options, the options in NVIDIA, Tesla, Apple, things of that nature, that has ramped up, and I think that's also kind of fueling this melt up in this market. When you're looking at the
Oh yeah. All right. So we're melting a little bit.
Okay, Home Depot is up a little bit more. Profit taking probably continues after the profit taking. Apple, nice pop on Apple. Just a little bit higher. We got NVIDIA. Looking for NVIDIA to keep going. I want to buy some NVIDIX, but I couldn't get in pre-market, so can't chase it here. Tesla, nice move on Tesla.
Multiple, it is expensive, but I actually love this chart because it's basically measuring how many stocks are above their 50-day moving average minus how many stocks are above their 200-day moving average here. I also have a ratio chart that shows the same thing. Basically just saying you can either subtract these numbers or you can divide it. You're going to come to the same result here. When we had that pullback, we actually had a major reset when you're looking at these underlying equities here. I mean, it was really top heavy.
SMR still chopping around.
What does that mean? Going into the remainder of the year, there's still a catch-up trade that is out there. Once again, I bring up defensives. They haven't really gotten a lot of love. Interest rate sensitive, of course, maybe some other factors that are in place here. But this does actually show that market breadth has been a little bit weak and could actually.
What's Microsoft? Microsoft, looking for Microsoft to move as well. Looking for a follow-through in Microsoft.
We actually do have some more opportunity to the upside. There are some stocks that really still participate in this rally, and I don't think right now, if you're looking at the grand scheme of things for the remainder of the year, that this rally's done.
Okay. All right. Good stuff. Good context. Thanks, Kevin Green. Good to see you. We'll Welcome back.
Getting a little squeeze on SMR, a little fair value gap.
Let's go to Diane King Hall for the earnings. Got a lot down this morning on earnings, but plenty of discussion to be had. I think some of these might be a bit of harsh reactions, but let's find out. Diane, let's start with Pinterest. We talked a little bit about it earlier. Alex's point is that they just haven't been able to get quite the diverse user base that they need. What do you see in the report?
It's true. I mean, most of their user base is women, so they don't have the diversity within the user base in terms of the numbers. They did beat expectations.
Tesla, a little profit taking on Tesla.
98 million. Adjusted EPS was 40 cents a share. That was better than expected. Global monthly active users rose. It totals now 537 million. That was better than expected, but that doesn't matter. They also have some weaker than expected guidance. Guidance coming in between a range. They're saying it will come in a range of 1.125 billion and 1.145 billion. She was looking for more than 1.14 billion. So guidance is a little light on the
Apple looking good. Microsoft, okay, trying to get some follow through in Microsoft. Let's check out Mr. Softy. Microsoft chopping around. Looking for this to push higher. All right, 3 white soldiers off of the low. Recent lows, earnings out of the way.
So they said as expected revenue from the third party demand partnerships, they saw weakness there and they expect that to continue into the fourth quarter, that weakness in that sector. So that is putting some pressure on the company this morning. And again, you know, when you compare it to other companies within the space, other social media companies, it just doesn't have the same momentum. So you're seeing shares get hit hard this morning, off the lows, but still down more than 12%.
Okay. Yeah, kind of par for the course, if you will, for Pinterest in some ways. I guess just to
Okay, Tesla still squeezing.
Kind of now fresh growth happening around AI and the
I'd take some profits off into strength. I bought some shares pre-market on the dip. I wanted to do the same thing with NVIDIA, but I didn't get a chance. I was busy looking at a few different things. NVIDIA. Okay, you can see pre-market. Pre-market had dipped over here. Missed that right around 6 o'clock. I was too busy watching Tesla, TSLL. That did the same thing. So a nice entry over here right around 6:30. But above 300, we knew that Tesla would most likely squeeze because dealers would have to buy shares to hedge. If they keep doing it, they keep buying shares. If people keep buying calls, they're going to have to keep buying shares. So this could be a perpetual loop until it exhausts itself. I took some TSLL off just now, though. That was a nice run from 16.25 up to 17.30.
It seems like there's just so many options and that they're far behind that they're not getting the
NVIDIA looking for the follow through, AMD watching. Really, what I'd like to see Microsoft do something. Microsoft. Okay, same dip that we saw in a lot of stocks this morning. Okay, going down the list, let's take a look real quick. Stocks on the top of the NASDAQ 100. Mercado Libre. Okay, inside day, Mercado Libre. Not really interested, don't like the pattern. Booking.com, this has been most active all week from last week, Thursday. So Thursday I gapped up, looking for a follow through.
It wasn't so much the metric. That's the conversation with KG.
Okay, still squeezing Tesla. What's Apple doing? Apple just sitting here. It is trading, right? Apple? Yeah, it's trading. Okay. Apple, all right, so booking.com is number one. I'm looking for a lot of stocks to do exactly what Booking's starting to do. It's been very active, but I want to see a move back to the 90 EMA that gets bought. Some stocks that we've had recently, I took Mobileye off yesterday. Okay, just looking for a little pullback to the 90 EMA. It's been outside the upper Bollinger Band much of the last, 7 trading days. So I'm looking for it to pull back first. It's starting phase 2. So this is going to be a nice trade into the future. Twilio, looking for that to follow through as well. Okay, it's starting to flag Twilio. Microsoft, looking for this to catch up with the other stocks that are trading at the highs. Microsoft has just basically been sideways. It is above a 50 in the 200-day, so that's good, but not jumping out right now. Apple, above the 50-day. Flat price action, looking for it to test the upper bands, hopefully. Meta, looking for that to launch higher. We're almost at the upper Bollinger Bands. RSI is still rising. Okay, that looks good. MACD crossing over. Something I noticed or was thinking about this morning, S&P 500. Look at the triple MACD setup. Okay, we know that this is the first week up after 2 weeks consolidation. We got a new president-elect, and we've got all 3 MACDs turned up. The long-term trend, this is what Gerald Appel suggested, the creator of MACD, suggested for the longer-term swing time frames, 1939. Many of you follow this. We're pushing higher. Does it mean I'm looking for prices to continue to just rip higher? No. What I think is going to happen is we're probably going to flag to start the week, probably come back in this range. I'm just speculating. I don't think we're going to have a candle that doesn't get back into this week's price action. So I'm looking for a follow through. 6,000 being the major level. So we'll see what happens today on OPEX if we get a follow through. But the MACD is what I've been watching. This crossed over all 3. Looks really good. Tesla. Okay, waiting for the opening range. Okay, Tesla's a bit extended now, wouldn't you think? So I'm probably going to take a couple of days off on Tesla. See what it did last time it gapped up? Boom. Faded for a few days. I'm thinking we might start the week next week with a fade. So that was a day trade for me. Scalp. What else? Let's go down the list of stocks that are on the top of the NASDAQ 100. Worley Automotive. Costco looked really good. Costco, I'm looking for 1,000. Costco looking for 1,000. Okay. MACD set up. Note the long term. Do I think it's going to go through 1,000 and just take off? Maybe. I'd rather think it's going to move up a few days, maybe into middle of next week, and then pull back to the 90 EMA. Okay, that looks pretty good. Bollinger Bands are opening up, though. That looks pretty good if you like Costco. Also, check out Walmart. That's trading at all-time highs. TJ Maxx, a favorite. TJ Maxx, moving above the same kind of idea with Microsoft. Retail, it's going to get a lot of action. It's at the 50-day. Like Microsoft, it's lagging its peers, but definitely has potential. Okay, let's look at retail, XRT. Retail's up at the highs. NVIDIA pulling back a little bit. All right, so NVIDIA, I might get a chance to get into NVIDIA. I'm going to buy some NVIDIX shares. Probably wait, though. Maybe get a dip. We get a dip here. Okay, the dip looks good. I don't know. All right, there goes Tesla. More. There goes Tesla. Some more. Nice. Nice move on Tesla.
We're going to get into some tech, some fintech, take a look at Block. Be right back.
Okay, these SMRs, these small modular reactors. All right, so this one looks pretty good. SMR, following through. Nano Nuclear, we got that position. I had Oklo. I took that off yesterday. Got some questions about that one. I took that off yesterday. Nano Nuclear. Okay, that looks good. Nano, let's see. I'm probably going to add to that one. Nano, when do they report? Nano Nuclear and E. Reports November 20th. So we got a couple of weeks on Nano Nuclear. That reports in 2 weeks on Wednesday. Unconfirmed. So I'm not sure exactly when they will, but somewhere around November 20th, I believe. All right. Tesla. What a nice move on Tesla, huh? Okay, Microsoft. Looking for Microsoft to follow through. If you bought on the dip yesterday, Microsoft. Okay. Bitcoin, watching Bitcoin. And Coinbase.
Welcome back to Morning Trade Live. Let's keep talking some earnings. Another one getting hit is Jack Dorsey's block, aka Square, down more than 7%. Tom White's looking at the
AMD hanging out at 149, looking for a bounce. Okay, going down through the list again. Going through the list. Okay, Mercado Libre is the top of the list. Costco we talked about. Vertex Pharma. Vertex. Top of the queues. Vertex is breaking out. Some of you are in this one. I do not have a position in Vertex. ISRG. Intuitive Surgical. That's been on the most actives lately. You can see why it's starting to move higher. It's only $530 a share. Let's see what else. Fortinet security stocks. Fortinet's breaking out. Security stocks. Okay, what's CrowdStrike doing? CrowdStrike has earnings coming up. CrowdStrike's running. So, Candy, you're doing good on CrowdStrike, eh? Above the 200-day. Palo Alto Networks. I know Frano likes Palo Alto. And what's the other one? CyberArk and Zscaler. Okay, Zscaler. Okay, not doing as well. But it is higher. It's above the 200-day. I do like Palo Alto at highs. And Fortinet. Fortinet looks pretty strong. Okay, I wouldn't chase it up here. Wait for your A, B, and CD pattern. Okay, A, B, C, D. All right, you already had one dip. Look for it to pull back. So you can tell by the first dip early in the morning that there are people looking to take profits. But equally, there's people coming in and buying the dips. So that's a good sign if you're a day trader. If you follow what the idea there, you got quick profit taking, but you got people jumping in as well, buying the dip very quickly. So you know that there's momentum traders in this. I just don't want to buy it up here at the high. AMD, same thing. Okay, so we're looking for buyers to step up on AMD. Okay, Tesla's still kicking it. Tesla kicking it. Okay, so it's starting to stall up there. Okay, Microsoft. Microsoft's probably one of my favorites right now because something that Tony SMU mentioned in the trading room. You know, it was a discount. It's at the 50-day, 200-day. It's above both right now, both of them. The dotted line, the dark brown colored line, that's the 200-day. 50-day is the green line. So looking for this to take a move back up to 438.50. I did have a iron condor on this one, as you know, for earnings, but I took that off for a profit. Took that off for a profit. Okay. So that was the main reason is because it was too far out. I did it for a higher credit. Apple also had a iron condor on this one, no longer do. I took that off for a credit. Also Meta, took Meta off. Had an iron condor on this one for earnings. Okay, but I took it off, what was it, Tuesday? No, Wednesday. As we continue to move higher. Okay, that was a nice credit on that one. Headed up towards that short strike at 620. Okay, looking for some strength in Meta. Okay, and the other two were Amazon and Google. I had iron condors on, took all of those off. Okay. AMD, I rolled up AMD's put side. Rolled those down rather, rolled them down. That turned out to be good. I took this one off, I took this side off yesterday. Okay, so now we're just looking at the upside. The calls up here, I'll be fine. I don't think we're going to get anywhere near 180 anytime soon. But it is looking better. Apple, Microsoft. Okay, so back to Microsoft, looking for Microsoft to follow through. Google was the other one. Google, iron condor. I'm out of this one too. That was earlier in the week on Tuesday. When it got back to the mean, it pulled back. That was good for the exit.
Well, they've already engaged with an institutional Bitcoin miner on a 15 exahash deal selling Bitcoin mining ASIC chips that Block's internal proto team has developed. These are 3-nanometer chips. Jack Dorsey on the call was adamant that, and has been for a couple of quarters now.
Short spraying in SMC. I don't think it's going to go straight up. Super micro, it's going to take some time. People taking profits. Super micro. Tesla's still going. Wow. Impressive Tesla move. Impressive Tesla move. Okay, Coinbase not doing anything, just sitting here now.
On their own platform in the future.
Great stuff, Paul. Thanks for the help. Appreciate it.
Coinbase. Let's see what Coinbase looks like. COIN. Coinbase up there at the highs. CONL. Okay, so it's probably going to consolidate right in this area around 200, the 200-day. If not, if we follow through and Bitcoin breaks higher, that would be great. But it looks like Bitcoin's a little exhausted after the run we had the last few days. Bitcoin. Okay, people taking profits. It's a Friday. Does trade round the clock, so looking for the next dip to buy. Nano Nuclear pushing higher. Okay, going down the list again. Team Atlassian. Okay, that continues after earnings. Intuit, Centos. Centos, I talk about this a lot. Centos, look at the trend in Centos. Okay, if you're thinking about the economy and you're wondering, do the people on CNBC and Bloomberg, do they know what they're talking about? I'm sure most of them do. They're always talking their book. Centos is a good economic indicator. If it's moving higher, that's an indication the economy is improving. Because with a 1 million plus customers worldwide, it's telling you that they keep buying uniforms, buying new uniforms, renting, all the other things related to corporate identity. This company is doing very well. As you can see, we talked about this over the last few years, that if you watch this, it will give you an indication of what to anticipate. 2020, here's COVID. What's it done since? It ran up, it consolidated in 2022 when everything else was dying in the bear market. After the bear market, We turned, and now look at it. It's just, you could call this a, what do you call it? Eiffel Tower kind of move. Maybe we have a dip in the future. Most likely, because it's getting a bit extended now. Tesla's still going. Tesla looking good. Big squeeze on Tesla. Okay, we're above some of these resistance levels, so your guess is as good as mine where it's going from here. Okay, Upstart. I see you guys talking Upstart. Okay, I had a big move this week. Yesterday, popping up. Okay, so if you like what you heard in earnings, wait for a B and C pivot. All right, you're probably going to get a B and C pivot. People take profits. Okay, let's go take a look at Upstart earnings. Okay, here's Upstart. Okay, so it had earnings, beat expectations. Okay, all 4 metrics are green. That should make you very happy. Okay, not only did it cap up, earnings are looking good. Earnings growth, 85%. Revenue growth, 20.5%. Earnings surprise, they beat the upper estimate. Okay, they're looking for a loss of 15 cents. They only lost 7 cents, so they're moving towards breaking even and producing a profit. So that's a good idea, Upstart, but I would only buy it on a dip. Okay, if you like Upstart, hopefully you get a better dip than this, a little dip there. Maybe the momentum traders don't want to let this dip too much. Like Tesla keeps going, still going. Okay, Microsoft, watching Microsoft turn the corner, trying to get back above this level, yesterday's high. Okay, S&P still grinding, S&P 500 cash. We were pretty flat at the open. 6,000 is the level. So if you're thinking about selling premium, I'd be thinking about call credit spreads above 6,000, 0 day perhaps. Tesla's still squeezing. Holy crap, Tesla. Looks like everybody's piling into Tesla. What about put credit spreads on Tesla? If you're thinking about put credit spreads, you got to wait for it to dip first. Okay. Selling the gap, 275, buying 270. But you got to get a move back down first. I don't know that we're going to get it anytime soon, the way it's trading at the moment.
Interesting quarter where folks actually got paid and made some money on some bets. So that kind of hurt the stock a little bit, though. Still tons of growth ahead. We'll be looking forward to that coming up shortly. About
Microsoft looking for the follow through. All right, the New York Bang Index stocks are mixed. Whenever they're mixed, you want to be very choosy about what you do. Watch the S&P still grinding higher, S&P 500. Okay. We know what we're anticipating. The weekly, first week up. I'm not anticipating we're just going to make a higher high next week without retracing into this week's price action. So as we push away, I'm taking profits off in the strength. I want to reduce my exposure. Collect a lot of cash because next week's probably going to be pretty volatile as well. All right, looking for Bitcoin to bounce. SMR looking really good. Okay, SMR. Let me look at SMR. I have the 25-30 call credit. Okay, so there we go. Okay.
Didn't the Republican side of the polling actually get really? That's what I was going to get at. So that was last reading.
Well, just index of consumer expectations. So looking ahead.
Okay.
Breakdown by just people's own affiliation. So who knows, what they're actually. But the Democrat piece was 94.8, Republicans 72. But current conditions, Republicans were 36. So what I would imagine is you're going to see a repricing. There's going to be a lot of optimism from those who
Okay, so SMR on the move, looking really good.
a downtick pretty dramatically from those who categorize.
Okay, so these small modular reactor companies, SMR getting the bid. What about Nano Nuclear? Okay, that's at the high. And Oklo, I sold this yesterday into strength. Oh, good thing I did. Okay, maybe I'll get another entry on this one. Oklo, SMR, looking good. Looking like it's going to fade a little bit, maybe. 25 strike.
Exactly. The respondents who self-identify. It also just kind of speaks to the nature of our kind of hopefully less going forward, but who knows? Just the nature of how people project their own kind of feelings onto their economic situation. A lot of people scratch their head and they go, all these nominal figures are very impressive generally for a lot of economic indicators, and people who are being unhappy. It's like, oh, a lot of it is a political bias that's filtering into it.
I think that there's some of that, sure, but
Right.
some of it also is the numbers are awesome, but if it's not helping you, that's almost insulting. Like if I'm not someone who's able to invest in the market, I don't really care that the market is at all-time highs. If my wages aren't going far enough at the store to continue to
Tesla's still
maintain
pushing.
my quality of life, I'm going to be unhappy. It doesn't matter what GDP is. So some of these macro
Okay, we're
numbers
starting to flag a little bit
indicative
below
of
18.
but if it's
Tesla
benefiting different
TSLL.
disparate way, those who aren't benefiting
NVIDIA pulling back a
it's not
bit.
working for me. I think that also is something that
Meta pulling back a bit. All right, so the New York FANG index stocks are starting to fade with the markets. Okay, let's see. SMX. Okay, we got all down volume leading, so they're selling into this strength. Not a bad idea. Maybe some SPY puts for next week. I don't think we're gonna just take off to the races. SPY puts for next week. That would be the 11th.
You're seeing a realignment. You can see it in sort of the demos from the exit polls. You can see it in sort of the class breakdown. And so those parties are becoming different parts of the class breakdown. It's been becoming more working class in Republican, which historically in the recent 20 years ago, that wasn't the case. And so you're seeing that shift where maybe those who make up those parties are also disparately impacted.
All right, Supermicro did make it up 27 and change. Pre-market looking for it to bounce. Shorts cover. They're getting a little reprieve right now. Tesla still looking good.
This is meant to reflect as best as possible a broad population. So, hopefully the sampling is relatively representative. But 73
Trump media
from both the expectations
moving the opposite direction.
Reading of 70.5. Current conditions continues to be weak though. So this is the piece where it's like there's hope that was starting to build up in the expectations piece, but the assessment of today, what it's like right now for people, does not jive with all-time highs in the market. This has been those who have been calling for a recession have been pointing to things like this for a long, long time. And again, it's that K-shaped recovery conversation. Again, something that could take hours to unpack and explore. But 64.4 is not good. This is essentially GFC level, reflection of what you feel like your current condition is. Those who are responding to the survey. We talked about the breakdown. It's very, very political in many ways. Expectations of 78.5. There is a little bit of hope. I want to see if that maintains now, or on how it is impacted by some of these changes. And then relatively anemic inflation expectations. 1 year at 2.6 is basically in line with where it was at 2.7, and 3.1 is modestly different. I mean, I know that 1/10% and everything does make it is a big number, but when it's coming to a survey and people assessing how they
Trump media.
Is meaningless. By the way, your current conditions, to your point about being really low in the 60s, got into the 50s, which was even below GFC during the COVID breakdown. So you did have this massive shift around COVID, and then another leg lower in 2021. And then it came back, and then basically the last kind of 3 months. So we went from current at 81, 82 at the highs in January, down here to 64. And that's where I feel like the political discussion is kind of unavoidable in this, because I do feel that probably contributed a decent amount kind of nerves going into the election and kind of the one-sided, affiliations weighing on it.
The low of 2008, the November print of 2008 was 57 and a half. Okay? Objectively, it's not 2008,
Right,
but there's people who think it's essentially the same thing.
right.
And so that you can't ignore that. And these are the indicators that, many looked at when they're trying to forecast these things. That's what I'm saying about using the information available.
Mhm.
Whether or not you agree with someone who's saying they're not
All right.
having a good time in the economy, there are still a lot of people saying
Trump media on the move.
Yeah, might be their problem though if they're projecting their own social negativities. All right, the inflation expectations pretty solid, right? Like kind of muted, not really moving much. 2.6 versus 2.7 last time. 5 to 10, 3.1 versus 3 though.
Yeah, I think that you look at something that's, I think they interview somewhere around like 400, then it gets to like 600 by the end of the month. I mean, there's going to be margins of error in this. There's going to be, difference in terms of samples month to month. You're also asking just an everyday person to say, how they feel about inflation. I mean, I couldn't tell you if I think inflation is going to be 2.7 or 2.8 or 3.1. Like,
it's gonna bounce
and
around.
I'm in this world, and so the fact that it's a 0.1% difference, you're looking for serious trend shift. If this went from 3 to 3.5 to 4, that's meaningful to me. This is expected to bounce around within a small range.
Kind of also relevant to what Powell talked about yesterday when we were asking about what's happening in the bond market. Are you worried about inflation coming back, et cetera? He was like, look, we don't see these things sticking in. We don't see a rise in inflation expectations. We don't see it in the market for break evens. We don't see it in the survey data. So it does kind of echo his reasoning for caring more about preserving employment and trying to fight inflation at this point.
Yeah, I think they've said it for a while. They feel the risks are balanced, and before they were not balanced, and that's going to impact their decision. I think he was
Okay, Trump's open again.
He said he didn't want to have those conversations about his job. I think he enjoyed having that conversation. That was less time he had to spend. About the fact that the long end of the curve, that's more market driven, was saying a very different thing.
Tesla's still hanging out at the highs. Microsoft pulling back. All right, so the New York FANG index stocks are mixed. That's telling you to just chill, wait, because mostly profit taking at the moment. Trump media still going. Big squeeze today.
Hopefully some normalization in coming readings. Jeff Pierce joins us as we shift back into some stock talk here. If you're feeling good and you're heavy on the sentiment, Jeff, you might just go and fix up your home. Telsey analysts have an upgrade on Home Depot ahead of their earnings. I wonder if we'll see some of this positivity filter into that category.
Well, that's certainly what the company's hoping, right? A lot of this is going to be focused on the pro business. It's really a big part of Home Depot's strategy. As you pointed out, Telsey Advisory upgraded them now for market perform price target now at $450, up from $360. The firm projects that a return to outperform the shares in the S&P 500 over the next year. They said the company has a significant opportunity to grow their pro business, better serving complex pro customers, particularly with that acquisition of SRS Distribution. It is worth noting that the analyst also moved Lowe's price target to $305 to $275 and has a written outperform rating for them as well. As you mentioned earlier, we're going into Q3 earnings next week on Tuesday. Earnings per share expected to narrow while revenue expected to rise. Estimates right now have the EPS at about $3.64. That would be down about 4.5% year over year. Revenue expected to come in around $39.13 billion. That would be up about 3.8%. If you look at average ticket, estimated to come in about $88.71. That would be down slightly from last year. Shorthand, if you ask the bulls, they say the company is well positioned for the next kind of home improvement cycle. They expect to see that pro side of the business benefit from some of those bigger projects that consumers have not been doing. They expect those to return. Bears would say there's too much uncertainty in the economy, keeping the consumer soft and dry. We also think
Okay, Tesla's still going. Oh, holy crap, Tesla's gonna rip. Holy smokes.
So the supply chain problems still kind of lingering, but less disruptive than they were in years past.
Yeah, certainly less disruptive. That's something that's kind of faded into the background. It's still a concern for a lot of these companies. But
Tesla's still ripping.
You're looking at when you're talking about Home Depot and Lowe's are the high interest rates, which we know are coming down. That's
Tesla.
the DIY project, also existing home sales. These companies are very heavily tied numbers. Comp sales
TSLL's on the move.
deeper than the 2.1% expected. That was the seventh, consecutive quarter. of falling.
Squeezing.
Transactions were down 2%. Revenues were up slightly, about 0.6%, which is an improvement from the declines we've seen in Q1 and Q2 of last year. But still, the numbers have not been great. Operating income was down, adjusted operating margins down as well.
Futures just sitting here.
Inflation's easing, unemployment remains relatively
NVIDIA. Okay, the FANG stocks are just off at the moment. SMR. What are you doing, SMR?
items, I think, is where Home Depot is hoping we start to see that demand pick up.
Okay. Well, I guess people got to fix stuff post hurricanes. Makes sense, I guess. Pretty straightforward.
Near 25.
For temporary pop, unfortunately, I guess. But for the stock, kind of makes sense logically. All right. Fresh upgrade ahead of a report. Always signals I feel conviction on their views. So we'll check in next week on the earnings. Thanks, Jeff Pierce. Let's do some trading. Looking at Home.
Meta still drifting lower. So is Google, Supermicro, Amazon, NVIDIA, Netflix. All right. So we just got profit taking.
Yeah, I think that the general trends that are in place.
SMR looking for the breakout.
You know, the home improvement sector moving into 2025, and if we do see any further decline in rates, I know we're getting a backup in certain parts of the curve right now, but that can shift pretty quickly. And overall, the general trends here, I think, still favor Home Depot moving forward. I do think that we're going to continue to see some higher price action, possibly challenge the highs that we did see about a month and a half ago or so. So today's trade example is to capture further upside. Again, trying to find a range to capture to the upside is the way I should phrase it.
Okay, so a range. They're saying that this thing's going to do pretty well on earnings, obviously with the upgrade. So you're going along with it, but looking for it to stay below 425.
No, actually.
SMR.
That's why this trade example, I think, is interesting. So
Okay, looking for this to dip back down below 25.
Because, so you do have some exposure way up, but I'll get to that in a moment. The idea.
Nanonuclear looking better.
High implied vol going into the announcement. Those calls.
Okay, Nanonuclear and NE. That's higher too. Nanonuclear. Okay, looks good. It's headed back up to the upper Bollinger Band. Microsoft looking for the bounce. No bounce yet. Tesla pushing.
December 425 calls. You can do that at 403 in the stock, right around $1.90. So that's your risk, $1.90. So the break even here, Oliver, on this trade example is what do we got? 406.90 before it becomes profitable. Now that is that's intrinsic value, but the break even on the top side is
EMC.
So it would really have to explode to
Supermicro looking for the bounce.
In an area where it could become problematic. But I think if we
okay, what's Home Depot doing? Home Depot up what 1%. Home Depot still hanging there. Boeing. Still no follow through. Boeing looked better this morning. It's just jockeying around. Okay, going down the list again. Let me go look at the S&P 500. Axon, top of the list. Axon. This has been on the watch list off and on. Axon. Okay, big gap up. You can't chase that. Look forward to flag or base at some point in the short term. Axon's number 1 on the S&P 500. Insulet, diabetes related. Pod moving higher. Number 2, Expedia. So the travel and leisure sector has been doing very well. We saw that with Booking.com. Expedia doing well. What about Trip? Trip, nothing there. But the travel and leisure sector, like Royal Caribbean, Norwegian Cruise Lines, those are doing well. Carnival Cruise Lines. So these are areas to focus on. Okay, let's keep an eye on Tesla. Tesla's still squeezing like crazy here. Holy smokes. Look at the move on Tesla.
Obviously, if you get above 425, then you got, you got.
Indonesian Energy you're looking at? Okay, thank you, Frank. Indonesian Energy.
Should that be the situation?
All right.
I think that given the
What are you doing on Endo? You looking for a bounce?
we do see a move higher. Typically, it has,
Okay, Boeing, Nvidia. Okay, looking for this dip to get bought. A lot of these stocks have pulled back. Oklo giving another opportunity. I sold it into strength yesterday before the close. We're right near that level now. Axon, Expedia, Fortinet, Tesla is number 5 on the S&P 500. It's number 4 on the NASDAQ 100. Tesla's still squeezing.
The note does hinge pretty strongly on the notion of lower rates, though, too. Thanks, Dan, for the trade.
All right, Oliver.
All right, Bullish Home Depot into the report. Good stuff. Dan Deming, managing partner, KKM Financial. When we come back, we'll talk about the turnaround story of the morning. DraftKings is getting hit early. But
TSLL.
the market looking past a pretty deep cut to the guidance.
Okay.
Looking at the general growth still powering up at this company. We've got the CEO joining us next.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
Tesla's still moving higher.
This lets me adjust the base, add more
Okay. Energy names, there are a few that are bouncing. EOG. Johnson Controls. Corey mentioned that one earlier in the week. Johnson Controls. Johnson Controls. Nice one. Nice call. Nice call, Corey. Johnson Controls, all of the things that need to be fixed after a hurricane related to traffic and such.
Shares of DraftKings are in the midst of a big turnaround on the morning post earnings. A drop off.
Tesla, note the TTMs in the bottom panels.
Looking at the growth instead. Stock is now up. Joining us, the CEO, co-founder, and chairman at DraftKings, took a DKNG.
Okay, looks good. Tesla.
Jason, thanks for your time this morning.
Thanks for having me.
Okay, what time is it? 10:23.
You guys' earnings here because there's a lot to take away from it. Let's kind of start with the first, which was the cut to the guidance. Seemed like maybe a big run by the Chiefs or something else at NFL. It hit your guys' bottom line.
Well, really the focus.
Volume starting to taper off a little bit on Tesla. Notice the volume tapering off. So people are buying. They keep buying calls. As they keep buying calls, the dealers are having to buy shares to hedge. That's why we got this big rip higher.
You can see it. Some of the states release data every week, so you can see when there were bad outcomes. So I think that was already built into the stock, and people are gaining confidence in the guide next year, maybe even thinking there's some upside. And obviously, we had a great quarter. We beat consensus. We grew 39% year over year. So I think a lot of that's what's happening here too.
Yeah, top line growth still screaming almost 40%. Revenue of $1.1 billion. Monthly unique payers up to almost 60%.
Tesla's still ripping higher.
How much of that growth is sustainable going forward? Who's the marginal customer that you're acquiring right now? Is it in states and areas that are coming online, or is it in the places that are already legal and people are just starting for the first time with DraftKings?
Well, it's a combination of both. I mean, you have to remember, even the oldest states are only 5-6 years old, and many of them are 1, 2, 3 years old. So still very, very early in development.
Okay, here we go. Tesla just keeps squeezing.
From that perspective, though, even from our perspective, knowing that, we've been very pleasantly surprised with the customer acquisition. We did not expect it at the beginning of the year to be this strong. We've since updated all of our assumptions to account for, those things, but really just blown away by how fast the industry is growing and excited about it.
right now, do you view it as growth at near any cost, given the amount of users joining and the fairly novel nature of still gambling? To your point, not a very old industry, 5-6 years, even more recent in other states, many states. Are you not worried too much about the bottom line profit right now? Is it all about getting people in?
Well, I think it's a balance of both. Obviously, we want to make sure we're acquiring customers because over the long term, we'll make a lot more profit if we do that very efficiently and well. But also want to make sure that we're demonstrating strong and growing profitability. We're excited. We're going to, make 900 to $1 billion in adjusted EBITDA next year. That's a huge accomplishment. Remember, in 2022, this is a company that had a loss of almost $1 billion. So to turn that around in a matter of 3 years to where we're actually projecting at the top end of our guidance to make $1 billion in adjusted EBITDA, I think is a great accomplishment. And to be able to do that while still maintaining the growth rate, 39% in Q3, I think is something that really we're very proud of. And, for us, it's about balance. It can't be one or the other. You have to do both.
Adjusted EBITDA negative about 58.5 million, down from the year before. The street was expecting you to lose.
Okay, watch the TTM. Watch for that first
So you edged them out
dark
there.
blue.
Do you have a timeline for wanting to turn the bottom line sustainably positive? That's kind of coming back to the question of what is in your mind is the trajectory for growth versus profit. Is there a point at which you want to be smooth sailing profitable?
Well, it's always going to be a bit seasonal. I mean, if you look at this quarter, we're going to generate hundreds of millions of
Oklo could be turning here. Oklo, watch Oklo. It might turn.
NFL starts, so it's the time.
Let me take a look at Oklo real quick.
And Q3 typically will be lower profit.
Okay, LO Oklo.
We do expect going forward, that we will have profitable quarters.
Looks like it wants to break out. Oklo, maybe something further out in time. Let's see, Oklo. Okay, when are their earnings? Oklo. Okay, LO. November 14th. All right, so next week. Oklo reports next Thursday. Okay, so be aware of it. Are they going to beat like SMR? Let's see what SMR's earnings look like. SMR. Okay. SMR. What happened there? Why didn't we get Oklo report? Why am I looking at Oklo? SMR. New scale. Okay, so earnings are growing. Revenue is still down. Okay, Tesla's still squeezing.
Acquisitions and partnerships. What's on your mind there, Jason? How much more is there
Oklo going? Okay.
Via acquisition?
Well, I think acquisitions for us are really not a huge focus per se, even though we have done some tuck-ins recently. We try to be more opportunistic, and when we see things that make sense that we think could be additive to the business and won't distract from our core mission of winning in U.S. online gaming, those are things we consider. At some point, we'll look to international expansion, and M&A could certainly be a means to that, but we're in no rush there. I think we view the opportunity in the U.S. as so significant and growing that that's more of a nice to have when the time is right versus, something that we feel is an urgent need in order to drive growth. So our recent acquisitions have been really more focused on capabilities. We recently announced SimpleBet and then previously acquired Sports IQ. Both of those dramatically enhanced our sports betting offering, helped bring the cost in-house that will help improve our bottom line margins over time, and more importantly, help with our overall strategic goal of winning in U.S. online gaming.
How do you view policy, Jason? We just had a big event, got new leadership coming into D.C. in January. Do you have strong views or plans on either pushing legalization or visibility on how the legal side might fare under new administration?
Well, what's
Oklo continues higher. Oklo.
Largely regulated at the state level, so really, our action and what we were.
Tesla's still squeezing.
And certainly, we just as interested parties, and always there's some potential for legislation at the federal level to affect these. So obviously, we keep an eye on that. But really, you know, for us to get new states open, we need state level legislation.
Nanonuclear going. SMR is looking good.
We'll have to see how these election results end up affecting things, but overall, we feel like, you know, it certainly was not a move in the wrong direction. And
Okay, FLR, floor.
Understood. Jason, thanks for the info. Appreciate it.
Thank you so much. Appreciate you having me.
Absolutely. Good stuff. Helpful to understand the turnaround in the stock. Jason Robbins, CEO, co-founder, and chairman of DraftKings. Pretty
Okay.
they're now $1.80 to 40.80 with the almost 5%.
Tesla's still pushing.
Coming up, let's watch some charts ahead of next week and also some analyst notes. Mostly upgrades, right? All of them today. Bank of America, TAP, yeah, all upgrades here. TAP kind of the one that stands out to me with a pretty big move. Bank of America, though, an analyst going against Buffett bailing out. A little old Chewy trying to keep up.
Amazon, Axon, let's see.
Giving you even more specialized trading support.
Molson,
Our team of passionate traders ready to
TAP, looking good.
no matter how complex.
EOG, the energy stocks, some of them are looking good.
24/7 live help and access support by phone.
Eli Lilly, bouncing, Eli Lilly. Okay, just be careful with this Eli Lilly basing in this area. Pharma companies might have some issues with the new administration. Okay, Tesla, nice follow through on Tesla, still going. Epic squeeze on Tesla underway.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free.
Tesla hits $1 trillion market capitalization for the first time since 2022. Lilly, definitely got a nice move on Lilly. Okay, Supermicro starting to bounce. Tesla's still going. Looking for, okay, there goes AMD. AMD on the move. Oklo has earnings next week.
All right, let's talk some charts. We've got some pretty big bullish notes out this morning. Bank of America, Molson Coors, and Chewy, Jenny Horner, Rick Ducat. All right, Jenny, let's start Bank of America. Citi upgrading to a buy, and this is after Warren Buffett, Berkshire have been dialing out of it.
They have been dialing out of it, but they've also been dialing out of Apple, and I guess that hasn't.
And everything. They got a bunch of cash.
I was going to say, they've been pulling back on everything. When you're sitting at a cash pile of like $300 billion, yeah, I think that you're sitting pretty happy right now, especially because there's lots of opportunity, I think. But with Bank of America, I mean, all these names today we're talking, theme is overwhelmingly optimistic, and that's no exception for Bank of America today. Citi did upgrade
Tesla. Wow. Wow.
54 from 46, saying the best way to play the bank group post-election is convergence, saying that the valuation spread they feel between Bank of America and JP Morgan remains very outsized, adjusted for returns. They also do see a very attractive risk and reward in Bank of America, saying the bank is now at a low risk overall firm. It could benefit from a lighter regulatory environment. And I will say that for as much as I frankly talked about the benefits to the Mag 7, given the fact that there's a lot of regulatory pressure.
Tesla's still squeezing. Epic squeeze on Tesla.
Will benefit the banks hugely. I mean,
wow.
We're talking perhaps more M&A, less regulation, more large deals. All of this bodes extremely well, not just for Bank of America, but for...
It is 10:34 on the East Coast, 10:34. I got to take a 5-minute break, and we'll be right back.
Financial world have been on a pretty nice tear. This week, this name has gained 8.5%.
Wow. Pretty big big move. I mean, it looks like the chart's kind of breaking out. Rick, what's going on?
Well, Oliver, my thought is that you might be able to quibble about the short term, is it the best time to buy or whatnot, but long term, it's pretty hard to make a case against the big banks, So when we look at this chart here, what we see first, August 5th was such a significant point for so many stocks, especially in the financial sector. That was the day that Japan had all those problems with their stock market and everything. So significant low. It gives us the basis for our white channel here. Our lower boundary matches up along here with our higher boundary, roughly where we topped out, just parallel lines here. We can also see that we did make a breakout above our previous highs near 44.13. That wound up being the low point as well the other day. So when we look at RSI, we can also see that we had this green trend line in play. We broke through it to the downside, but we held on at the 50 midline. Now we made our way back up very briefly into the overbought area, backed off a little bit now, still quite high, but we are not making a new closing high. We're not on pace for that yet. We're kind of hanging out near, where we topped out yesterday so far. If we were to keep moving upward, plus one standard deviation channel, one standard deviation above our blue linear regression line comes in at near about 47. To the downside, old highs, green line, that's support near 44. Below that, another set of old, kind of high points, the linear regression line itself, and our downward sloping blue trend line all around like 43, 42 or so, or 42 and a half or so.
All right, so it kind of got messy a little bit there, but the pop earlier this week definitely helps establish a real breakout. But we haven't got a lot of volume. It's kind of been a fairly wide range up here. It seems like if you're bullish on the banks, we definitely want to see, some consolidation. You don't want to drift back below that 44 for Bank of America. It's kind of a scary gap. You don't want to see it close.
Yeah, that would be a bit of a shoe to drop there. Price could move quite fast, very little volume there, very little time spent in that area. But once we do start getting to 43, it's a pretty significant corner of
Okay, watch for some profit taking up here, Tesla.
and this volume note. So 42 to 43, major support zone.
Okay, those of you looking for an entry and upstart, look for a little dip. Nothing yet. Upstart. Let's see. Microsoft still dipping. No follow through on Microsoft. Okay, so inside of yesterday's price action, this is what I'm thinking about with the S&P next week. I don't think we're going to go straight up on the S&P every single day. We've had a big up week. I do think that we're probably going to consolidate, come back into this week's price action next week. So taking profits into strength makes a lot of sense. Stocks like Tesla that ripped higher, reduce your exposure. AMD is trying to get going here. AMD.
They did also nudge up their full year profit outlook and said they were taking this majority ownership stake in the brand Zoa, which is deemed as more healthy. It's also backed by Dwayne The Rock Johnson,
Palantir.
founders. So I thought that was interesting. But they did say that while this U.S. beer industry was softer than anticipated during the peak summer season, consumers have exhibited this value.
What's 3M and Caterpillar? What are the industrials doing? 3M. Nice move on 3M. TLT also bounced. TLT. So Caterpillar, looking at Caterpillar. That gap down. All right. So XLE, energy, not so much. USO, crude oil, consolidating. So communications off a little bit with Meta pulling back a bit. Microsoft still pulling back. Apple pulling back. All right, so the big tech names had a good week, pulling back a bit. Keep an eye on your New York FANG index chart. Okay, so inside day for now in the upper half of the daily range so far. Tesla's still going, so that's helping things. AMD, turning the corner, AMD. Okay, booking.com, the travel and leisure sector, probably focus on that. Makes a lot of sense. Royal Caribbean, the airlines, UAL, at the highs, UAL. Okay, DAL. Let's see what the hotels look like. Marriott, following through. Marriott. We know Booking.com and Expedia. These are all giving you a reason to think higher. There goes Expedia. So that's cruise lines, airlines, Airbnb with earnings out last night. Gap down. Probably headed to the 50-day Airbnb. Real estate, XLRE. That's actually moving the opposite direction. All right, we're starting to see some profit taking, start to take some profits in Tesla. Take some profits. Yeah. Eli Lilly on the move.
But in terms of volume, right here, this is the obvious here. Look at the size of the volume node, near 62. If you were to look for a place of
Okay, so airlines, cruise lines, hotels.
technicians would have on their radar there. To the downside, retest of these old highs or even the old downward sloping trend line. So between like
What about rails? Let's see what they're doing. No. Old Dominion Freight, that was active this week. Old Dominion Freight over the last couple of weeks, gapping up on earnings. What's SAIA doing? Okay. Okay, Orly, ORLY, Orly Automotive. Okay, that looks okay. Tesla, Booking, Mercado Libre. Okay, Mercado Libre off, so is Amazon a little bit at the moment. Okay, so Amazon, I told you I didn't want to chase this. I was looking at it on Wednesday. Again, yesterday, I was looking for an ABCD. When I looked at the ABCD pattern, I said, you know what? Let's probably wait until it comes back to the 9 EMA. That's probably going to be the best opportunity. Still bullish Amazon going forward. Mercado Libre gapping down. What's the other one in Africa? I forget it. I forget the name. The German-based company that does similar things in Africa for like an Amazon. It just slips my mind right now. Do you know what I'm talking about? Jumia, right? Jumia? JMIA. Okay, that's moving lower. So that's going nowhere. Tesla's still fading, folks. Tesla, you want to take profits off on your Tesla. Okay. It's likely to see some decent amount of selling. People who get trapped up here, gonna freak. Look for a BNC pivot. We get a BNC pivot, I'll probably get back in. Or maybe not. Maybe we'll wait until next week and see if we can get a move back to, say, the 5 EMA. I don't think it gets back to the 9 EMA, but the 5 EMA makes sense. Consolidate up here. Let's see how options settle after this OPEX and looking forward for Tesla. Trade desk. Trade desk gapping down, Tony. Yeah, maybe. TTD, maybe, Tony.
To gain market share now relative to the pet retail backdrop, which should be an industry, overall should just continue to build as the industry does improve, in this analyst's opinion, in 2025.
Okay, so let's go again, Tesla, TSLA, Tesla. Note the first dark blue band on TTM. Okay, this could rip in the opposite direction now.
There's the potential now for still multiple expansion as the profit profile does increase. I think that the Chewy is such a great company. It pains me, frankly, that I don't use it because I'm loyal to Amazon, but I have to say they have to figure out their stocking.
Netflix pulling back.
When I go to ever order anything
We sold some
on
Netflix into strength yesterday. Netflix, let's take a look at some of these. Netflix had a nice pop to sell into yesterday. Okay, it's probably going to come back to the 9 EMA. We'll get back in right around there. What's Boeing doing? Boeing, I'd like to see this start to do something. It's basing down here. So once this starts to get going, you have a good stop, a good risk reward on Boeing. Machinist strike over with, right? A stop underneath the Bollinger Bands. Maybe even an Iron Condor. Bollinger Bands is still pretty tight though. Okay, so Oklo didn't suck me in on that one. Oklo. I'm trying to reduce my exposure into next week. I think we're going to have a different theme, maybe. I have to do a little bit of study. See what's going to be working. Let's see.
That could mean like the low is in, that's like where the base is starting to form. Obviously every situation's different, but in this case, we did make some progress to the upside. Earnings gave us a catalyst, extraordinary.
Okay, so I talked about this yesterday. Okay, this is 2017 into 2018. This is Trump's first. First year. Okay. Now you can hate Trump, you can love him, doesn't matter. The point is, what did the S&P do in his first term? He's likely to repeat a lot of the things that he did. So let's look at. We started with materials first time. Let's start at the end. Let's try consumer discretionary. That rose. Okay. Consumer discretionary. XLV. Kind of like doing the alphabet backwards. It rose during his first year. Healthcare. So for those of you trading Lilly, I took it off, by the way. I took it off. Lilly, most likely, was a little choppy, but there was talk about what would happen with pharmaceutical companies during his first term. You can see it was kind of choppy, so be careful. Here's healthcare. Let's look at utilities. Those rose. I mean, everything rose. The S&P rose. So I'm just looking to see which ones did the most. Watch Tesla still drifting lower. Take profits. XLP, consumer staples, that rose a little bit. XLI, XLK, technology, almost a straight line. The entire first year. So tech's probably going to do well. What did NVIDIA do? NVIDIA wasn't the same NVIDIA back then. What about AMD? AMD was pretty much the same company. Pretty choppy. What about Microsoft? Microsoft, pretty much the same company. I mean, all of them are doing AI now, but Microsoft is a pretty smooth trend. What about Costco? Choppy. Walmart, steady as she goes. Walmart. Okay, the theme. So if you have an ability to look or to set up a chart that you can pinpoint the year. Okay, if you have a chart that can do that, like with stock charts, you can set up, the beginning date and end date. All right, so I've got March as my end date. Beginning is the first year after his inauguration, first term. And just go through and see what works the best. That's something I'll do this weekend as well for you guys and ladies. AMD. All right, AMD starting to bounce. AMD. Okay, looking for AMD to stretch its legs and get up there and touch the 50-day, maybe next week sometime, midweek, the way it's going. Okay, so stocks are kind of off right now. They're drifting lower. Futures are fine.
Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, Nano Nuclear just grinding along. Nano. Okay, it looks good. Oklo pullback. SMR. SMR above 25 briefly. Okay, looking for a BNC pivot now. SMR.
All right, we got big tech struggling a little bit this morning. Equities, though, holding in for the most part. S&P still up. Dan King Hall, George Tillis, join me for a check-in on the market before we check out NTO. Big tech kind of
Okay, I took the put side off of the SMR credit spread. I took a credit spread yesterday. Not a credit spread, an iron condor for SMR earnings yesterday. I took the put side off for a profit. Okay, there's SMR. Okay, let me adjust this. 25 and 30 is about right there.
We're seeing, kind of overall gains when we look at the S&P 500 and even the Dow. We know that NVIDIA has been added to the Dow today. I think the consumer.
Okay, so that's $153 per contract. So I'm looking for this to fade back into today's price action.
I think overall the way the market takeaway has been that having both Donald Trump as the next president, a Republican-led Senate, and obviously the House race is unclear.
All right, TLT. All right, so Tesla looks fine. Okay, so you got somebody taking some profits there, but it hasn't settled down yet. Okay, I have no position in Tesla right now. Okay, took off profits into strength.
George, you want to lease a Cybertruck for as low as $999 per month?
No, not me, OJ. I don't consider it a real truck. It's a novelty item. There's no doubt, but
well, you can lease it now for under $1,000. That just hit today. The all-wheel drive variant starts at 80 G's. Cyber Beast you can lease for $13.
Okay, all the New York FANG index stocks are pulling back, taking a break after a big run up this week. Okay, again, the stocks that are leading, Mercado Libre. These are the top 5 stocks on the NASDAQ 100. Mercado Libre, gapping down inside day. Booking.com. We do know that all of the travel and leisure stocks look pretty good, most of them. Booking, Tesla, Costco, Orly Automotive, Paychex, PayPal. Okay, let's look at the financials because those got carried away with themselves. JP Morgan. Okay, inside day. Okay, a base up here would be perfect. We need to see a base. I'm thinking KBE at some point. KBE, the banking ETF. They'll do better in the first Trump first year of his administration. Let's go back to S&P. Okay, so here's the first year. Let's look at the banks. KBE. Okay, kind of choppy, right? JP Morgan. Sideways. Eventually started moving higher after a lot of the Dodd-Frank and whatever else regulations on the banks were reduced. All right, what about insurance companies like AIG or Travelers? Yeah, very choppy back then. Okay, all right, so.
Point that George is making. I think part of it is because that package is meant to like be a bailout.
Tesla still consolidating. I wouldn't do anything with Tesla now, except maybe take some profits off.
The challenge in China has been about the consumer, the pullback in consumer spending. So I think in terms of what the
At this point, it's a Friday OPEX. I'd be looking for ABCD patterns. If not, just take it easy. Take the rest of the day off. You know, we had a nice run up this morning. What's Bitcoin doing? Bitcoin's trying to push a bit higher. Bitcoin.
Goes ham and starts levering crazy tariffs. George, maybe Xi Jinping wants to keep some ammo, some firepower to fight back. What do you think?
Yeah, I think so. Because if you look at what they're doing, it's very piecemeal. It's not necessarily a widespread stimulus. And I agree with Diane. It really has to go down to the consumer, because you can ease bank lending, but doesn't necessarily mean banks will lend to consumers or consumers will borrow. So you have to bypass that through.
All right, 3M. Let me take a look at 3M. I do have a position in 3M. December calls. Okay, 3M looks pretty good.
Hiring of government workers, but I think they may need a direct stimulus to the consumers to help really boost activity in their economy domestically. Ideally, this is where they want to go.
CRM
Domestic consumption.
on the move. CRM. Okay, looking good. Bollinger Bands opening up.
And maybe the administration coming in the United States will help China move in that direction, because
Bullish.
their exports are going to be at risk of being taxed essentially by tariffs.
Okay. Makes sense. China stocks down right now, 5.5%.
Okay, all of the New York Bank stocks are doing the same thing. Okay, except for Tesla, which is fading from the high. New York FANG. Inside day on New York FANG. 3 white soldiers. Not going to go straight up. This is exactly what I'm thinking about on the S&P 500. S&P will push higher, but next week we'll probably be dealing with a little bit of retracement. Okay, so don't buy at the high of the day, whatever you do. Try to be patient. Bitcoin, looking at Bitcoin. Okay, Bitcoin. Same thing with Bitcoin. This got a hell of a move to the upside. Bitcoin, I'd be looking for a little flag. Don't chase it. Sell some premium. Maybe you, if you have shares of, I don't know, Coinbase, maybe you sell some covered calls up here, say 300s or something like that for, I don't know, a month out. Or do nothing, just sit on your position and just wait it out, because we're probably just going to flag up here. Nano nuclear, Tesla. Okay.
The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn. Thanks, Nicole. Hi, everyone. I'm Jenny Horn, host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the market. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at launch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, and trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
Schwab Bank Investor Checking, the checking account built for investors.
Okay, SMR.
By J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One broker,
Royal Caribbean, Travel and Leisure, Royal Caribbean. These are doing well. Airlines, what's Spirit doing? Save, still drifting a bit lower. United and Delta are my favorites. DAL, because they make money. Delta. Yeah, it's a Friday. It's a Friday. He had a really good morning on Tesla. Talking to myself, he had a really good morning on Tesla. Could buy a few things, I guess. Apple pulling back, looking for dips to get bought. That'll probably happen around 11 o'clock. It's 11 o'clock right now. Okay, so geez, we're there. Oops.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So glad you are with us this Friday. What a week it has been. And we have a big show for you today in our 360 Spotlight. We'll be joined by the president and CEO of Barrick Gold after the company's latest earnings report. And our disruptor, Upstart, those shares soaring to new 52-week highs after the earnings. George Sill is standing by. He'll break those down and give us an example trade. Our 360 round will recap yesterday's Fed decision and take a look ahead to 2025, what stocks could do under the second term for President Trump. Here's a look at the numbers. Right now, you see stocks are somewhat mixed. The S&P gaining 0.33%, while the NASDAQ is down 14 points. The S&P is sitting at 59.93. Everybody has their sights on 6,000. The Dow is up more than 0.5%, 283 points. So we've seen records throughout this week. A lot of excitement, a lot of up arrows, but taking a bit of a breather in the big moves, right? Here's a look at the Russell. And that's up 9 points for the small cap. Now, you do see oil and gold both pulling back. Gold's down over $11 today, and oil sitting at $70.29 the barrel. The VIX moves even lower. That fear index at 1480. The U.S. dollar 104.62. That's gaining. And Bitcoin continues its strong week here. New highs this week. It's at 77,060, down slightly. So for a top moving stock story here, Jenny Horn's with us, markets correspondent here on Schwab Network, and we're taking a look at Airbnb. Well, this one's falling after its quarterly report. What stood out to folks within the numbers? Good morning, Jenny.
Good morning, Nicole. I have to say that I just read the headline that this name's lower because it missed on all of its metrics. I mean, that isn't exactly the case, I will say, when it comes to Airbnb, because there was still lots to like. And I have talked about this name several times. We were initially higher off these earnings, then we were lower. Now we are obviously hanging on to about a 9% move to the downside. So not exactly the reaction that bulls would want to see, but I do think that it's considerable. They were still able to grow their revenue by about 10%. Also were able to come pretty much in line with earnings expectations, but all things considered, there were still things to like. Net income was one of the weakest points, coming in around $2.13 a share. That was significantly beneath the $6.63 per share reported a year ago. They did note a $2.8 billion tax benefit during the third quarter of 2023, which was a huge reason we saw a lot of this pressure. But overall, they did highlight that they're focused on now expanding beyond their core markets and into this under-penetrated markets around the globe. Average growth rates right now continue to expand. That was also a bright spot. And they mentioned they're going to continue to be focused on accelerating their next chapter, which takes them beyond now at this point accommodations. So I think that what we saw a lot of this pressure is because they do expect sales to come in around now in their fourth quarter between 2.39 to 2.44 billion. Midpoint was slightly beneath the 2.42 billion expected. They also did say they expect growth in nights and experiences booked during that period to be higher than third quarter, but still they imply that their take rate, or that sales figure divided by the value of services booked, will be slightly lower on a year-over-year basis due to the unused gift cards they saw a year ago. However, I will say we also heard from Expedia having a great day. I do think the travel and all in all.
All right, S&P just sitting here just below 6,000. I don't think we get above 6,000. We'll probably pin in this area.
Airbnb trades at a premium to the travel and tourism space at 33 times its forward earnings. And I think with that high valuation, perhaps we were just looking for blowout earnings, and that's not really what we saw.
Okay, Jenny Horn, thank you. Good look there at Airbnb. And I did see Wedbush has a $155 target this morning, put an outperform rating. And I saw one for
Bitcoin might get something going today. Bitcoin.
America neutral rating. So they both think there's some upside potential in this.
Bitcoin looks like it's got something going.
Insights the news shaping the markets for
Ed Risco is with us, Chief Investment Officer at Insignio. Thank you for being with us. We've had a big week.
Watch Bitcoin. That might get something going.
Look, really, obviously, the surprise of the week, and not so much because Trump won. I think it was the magnitude of the victory, right, that caught markets by surprise, which I think is a positive. So I think the market has reacted rationally, and we can get into that in a second. But Trump winning by close to 5 million votes in the national polls, or sorry, in the national vote, means he's going to have a mandate, and he's going to be able to get a legislative agenda through. So I think that's actually bullish, because I think a lot of people were expecting, even if Trump were to win, divided government, more of a focus on tariffs and foreign policy. This is going to allow Trump to focus on the domestic.
Bitcoin looks really good, folks. Looks like it might get going.
U.S. economy, but bullish for U.S. stocks and U.S. assets, and less negative for ex-U.S. assets, I might add as well.
Let me look at Bitcoin,
So what did you think of anything?
ETFs.
Yeah, so obviously the Fed, cut the rate as completely expected, so no surprises there. I think the market did pull back a little bit, its expectations for a December cut. Powell kind of left the door open for that, sort of becoming more data dependent once again, refocusing on inflation risks, which I think makes sense. But keep in mind, if the Fed does not have to cut rates because the economy is strong, that's not necessarily a bad thing, right? Stocks would much rather prefer a stronger economy and the upside to come from EPS rather than from the multiple, because rates are going down.
Yeah, understood. I mean, we have this mandate, right? The dual mandate about labor and inflation. Does one worry you more than the other?
Well, we still don't think we're completely out of the woods
Almost ready.
longer term on the labor side. We still see weakening labor demand. I have a suspicion, I haven't seen it yet in the data, that might have been over some
It's over in the other
uncertainty here.
closet.
Now that we're over the U.S. election, we'll see if labor demand continues to trend lower. If it does not, and if it stabilizes, then the U.S. economy is looking in great shape, and the labor market can continue at this pace for quite some time.
There's no doubt the Trump administration is pushing that we will all prosper, and that's going to help to move confidence up. And there's a lot of great messages there. At the same time, people are worried about tariffs, and that could mean more inflation and or deportations and fewer folks coming over the line, which could mean maybe a slower economy. I don't know. What do you make anything
Let's
of
get
those
going, man.
comments?
Yeah, no, absolutely. That's a concern for sure, and something we need to be very vigilant, and investors should be very vigilant. I'll say two things, though. One is Trump just beat the Biden-Harris administration because of inflation. I doubt they're that stupid that they're going to commit the same mistake twice. So I think they're going to be somewhat guarded. One thing to remember are campaign promises, and the other thing is the reality of governance. So I don't think that they're going to commit the same mistake that Biden-Harris made. Voters have a very long memory with inflation. The second point that I would like to add, like I mentioned in the beginning, because he now has a mandate, there's going to be less emphasis in my mind on the tariffs. Had he had a divided Congress, tariffs and foreign policy would have been the only thing available to him. So I think this is a net positive for investors and for markets.
I see. How would you advise folks to put together a portfolio today?
Mara looks the best. It's sitting on top of the 200-day.
Equal weighted S&P, for example, I think it's much more attractive than the market weighted one. I think you want to potentially look at all the sectors and market caps that are going to be catching up, right? So this is not, it's not that I'm expecting the Mag 7 to fall, but they're just not going to do potentially as well as some of the other sectors that have been beating up. There's a lot of catching up for them to do. I'm looking at small caps, I'm looking at mid caps, looking at financials, energy. There's lots of sectors that have been underperforming that now have an opportunity to outperform going forward.
Yeah, any warnings? Anything you wouldn't be doing at this time?
Well, I'd be careful and sort of...
Mara, out of all of these stocks, looks like it could get going above the 50-day moving average. Mara. Okay, watch that one. Riot, it's at resistance, Riot. So I'd look for that to dip first. MicroStrategy, at resistance. BITO and BITX, those are both at resistance, along with Coinbase. Maybe some CONL, that's possible. It's above the 200-day too. So Coinbase, CONL, and Mara would be favorites at this point. S&P. Okay, I got to go take my son to school. I'll be back about noon. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 8th, little after 10, a little after 11 a.m., Friday the 8th. I'll be back around noon.
There's obviously a lot of increased animal spirits because of what potentially is coming down the line. So I really just do think it's a matter of time.
Matter of time for 6,000 and 7,000?
7,000, not so quite, not ready to go there quite yet. We need to see the evolution of a lot of sort of patterns, right? Inflation, what's the sort of longer term path of what the neutral rate is going to be, what does happen with tariffs, right? So we still have a bit to go. But like I said, 6,000 in the short term really just seems like a matter of time.
Yeah. Yeah, I mean, we're just points away. Thank you so much. I'm Ed Raceco. Great to see you from Insignio. Thank you very much.
Thank you.
Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. Mike Shore will take us through the trades for JP Morgan, FedEx, Microsoft. Trading 360. It's a great week. This is the best week of the year for the S&P and the Dow. A lot to discuss. We'll be right back. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Mike Shore, Director of Trading Education at Prosper Trading Academy. Good to see you both. Mike, what a week we have had. What were your thoughts? I mean, it was just wild. A lot of volume, a lot of new highs. What did you make of it, and what does it tell you going forward?
Not unexpected, but I think that I'm a little bit surprised that we haven't seen some profit taking here, and that's what's making it tough about this market. It's clearly bullish. Go ahead.
No, I'm saying, so you're waiting on the profit taking. When is that happening, right? Yeah. Okay.
Right. How many more new highs do you want to go and buy? And so, usually in these trending markets, whether they're up or down here, it's up. I'd like to see the sellers come in, and then where do the buyers come back in? And so that's what I've been waiting for. So I've been largely, I'm mostly I'm a day trader, but I do have swing trades on as well, and it's hard to keep just reaching and reaching and reaching.
All right, let's get to JP Morgan, a name, a fan favorite when it comes to the financials. How are you feeling about this name and what might drive this?
And that's where I'm kind of leaning back into. These are the stocks that tried and true, and something that will at the very least hold its own water or maybe even lead the way. And so what I was looking for here in JP Morgan after it spiked up after the election, I was looking for a pullback to that bottom of that gap up, which we almost got to, not quite, and then it actually did bounce a little bit before that. So I don't know if this trade is actually enterable, but I continue to like the upside in the financials.
Okay, let's see what Rick Ducat has to say about the charts, please. Good morning, Rick.
Good morning, Nicole. And I guess I'll say the same thing I said during Morning Trade Live with Oliver Rennick when we were talking about Bank of America. Maybe we could quibble about whether it's the opportune time to do a specific trade, but long term, it's pretty hard to make a case against the big banks like Chase and its peers. So when we look at our chart here, long-term upward trend, you can see our blue line has been pretty consistent here. But we also had, like so many other stocks, a notable low on August 5th, especially in the financial sector, where the Japanese stock market had some issues. And now we also have a more steeper white trend line that we could draw going across these lows. Either way, though, the ceiling was right here. Repeated resistance at 225 or so, 225, 226. That was also where our intraday highs. We had a volume node right here. Big candle to the upside, big, push, big gap up here. Then we formed up a rounding candle. You can see, even though we had a very large red candle, it's still completely contained within the previous day's big green candle. Sign of interruption, sign of, potential stall in momentum here. And you can see momentum has backed off a little bit. We were in the overbought area. We're kind of back below this pink trend line here, but we are still in the bullish territory. So to consider support and resistance, upside resistance, +1 standard deviation channel, basically where the highs we hit today came in, +1 standard deviation up from our blue linear regression line. This is a yearly chart too, just zoomed in. +2 channel comes in, 269 or so, 270. So the supportive areas that we have to watch now, the lows are green line here, 235 or so. And then this other area that I circled once again, linear regression line, old ceiling, around like 226, 227.
All right, thank you for that chart too. Zoomed in when you're there. Final thoughts on this one, Mike?
Yeah, it looks like we're looking at the same chart. I actually had 234.77 as my entry, and he highlighted 235, but let's not quibble between 23 cents. And I don't think this is a rocket up type of trade, and so that's why I'm going to do a call calendar targeting the 450 strike, or excuse me, the 247 half strike. See if we can make a little bit new highs, but it's going to be a grind type of move here. I don't see anything that really is going to stick out to shoot this thing up, but it's certainly bullish.
Look, I will say Evercore ISI has a 238 target with an outperform rating. It is at 238 today, and we did see a downgrade from Baird. They actually rate it underperformed from neutral, so not as much love of late for this name, interestingly enough. But it has been a winner. It's up 65% in 1 year. Let's take a look at FedEx now. We think this is an economic indicator. What a choppy chart. I mean, gapped up on earnings, gapped down on earnings, hit a high back in the summer, but is on somewhat of an upswing. What do you think this is headed and why?
Yeah, well, we broke through the 100-day moving average. That was the big thing. And if things are going to get rolling here in the United States, in a real sense, FedEx is going to, especially at these levels, is going to lead the way. And so I continue to be bullish on FedEx.
Okay,
That
bullish on
100-day
FedEx.
moving average.
Yeah, understood. And look, a lot of folks would say if it's a good economy, it's good for FedEx, or maybe the holidays, a lot of shipping. Let's see what Rick Ducat has to say.
you know, kind of same deal. I don't see people ordering less stuff online going forward. I mean, you know, I'm not a fundamental analyst, but it's, you know, just kind of seems obvious. So when we look at this chart here, we can see that this is Nicole's description was really spot on. You know, it's a very gappy chart, a lot of big swings, a lot of empty space in the chart here. So when we look at our more recent term price action, we can see that we formed a significant low here, 234.45, our 52-week low, connects these subsequent lows, connects this low here from early September. From that point in September, though, we have trended upward more steeply. Now we've got kind of this rising wedge type shape here. This was our upper boundary. I drew it going along yesterday's highs. We're kind of pushing beyond that point now. So, you know, now we're above all our moving averages. We've taken out all of them. They're all starting to trend upward. Look for our yellow 21-day to cross above our orange 63-day EMA. That's a sign of trend improvement. Maybe not specifically a great trading signal, but an easy visual clue that the trend is continuing to improve. Momentum. Moving to the upside here, it looked like perhaps we were getting a bit of a stall out. We fell below the 50 midline. We also fell below our light green line there, but we have recovered. And not only that, we invalidated the red downward sloping trend line. So momentum improving. Next stop, overbought area. So now support and resistance. Well, you know, we see this chart. It's very gappy, like I said here. If we look at our zoomed in look to kind of assess the support and resistance, even though we don't have a lot of great price levels nearby, we have volume nodes here. We have these areas of heavy trading here, these important areas around like 275, 280, and then 299 or so, 298. So these are those shaded areas. Those are places to look for support and resistance. This area right here, our red line, matches up with the low that we had before the gap down. So looking for the gap to be filled would be one basic thing a trader could be on the lookout for.
Right, understood. Look, you know, it's worth noting too that we did see a nice move up in both UPS and FedEx when UPS reported its earnings late October, and then FedEx moved up in sympathy. So that was some good news there. And the two were in somewhat of a price war, trying to woo in small businesses. And everyone's waiting on a dividend raise too. So there's a lot going on with this name. Any final thoughts here? I'll pull up Microsoft next. Mike, give us Microsoft too.
Well, with Microsoft, it's kind of the same thing. This is where you know we're in this market that is almost irrationally bullish. But where do you want to lean there? I want to lean on the stocks that you know I know and trust. And actually, it's kind of surprising that we were sitting down at the 50-day moving average just yesterday, and so that break through that 50-day moving average, that was my catalyst to get long Microsoft.
Yeah. We saw basically this move has brought the Magnificent Seven to 17 trillion in the highs, you know, between the Trump and the Powell and this week. This group, the Mag 7, has certainly shined. And we know also NVIDIA went into the Dow Jones Industrial Average today. That's also worth noting. So your thoughts on the Microsoft chart, please, Rick?
A chart that is kind of range bound really since July, I think you could argue. So we had this big rally here. We topped out in this area around 470 or so, but then we had a very precipitous fall off here. Earnings eventually gave us a bit of a boost, but a big drop off here. However, it did give us a range to watch. You can see we had this significant low, our light green line near about 388, roughly where we bottomed out during the low point that I was just describing here. That also lets us create that white longer term trend line here going across the lows. We didn't really have that come into play. You know, price has mostly stayed range bound, like I was saying. So between, you know, this low point near about 388 to this higher point near, 441 to 446 or so is kind of a zone here based on our gaps and our significant highs and lows. Mostly we've been within that level. Even more recently, blue trend lines here converging toward each other, going across the lows and the highs respectively. Downside breakout that did not reach our green supportive line here, marking this extreme low at 404.50 or so. But now we've recovered back within our triangle after our gap down on earnings. We've recovered above our moving averages, kind of stuck where we were before. Not a lot has really changed. We're pretty much where we were, heading into earnings, almost there. You know, we're a bit off still. But to the upside, 431, important high point, repeated ceiling here for price. See how many times price has closed around that area and struggled to break above it convincingly. Beyond that, resistance zone that I mentioned, around 445 or so. To the downside, trend line, moving averages right around 420. Then our green line, our lows, 404.51, lines up with purple, 252-day EMA.
Yeah, thank you, Rick Ducat, for all the charts this week. And, you know, when you think about what a week it was, and I know you have some of the tech names in here, the NASDAQ's up over 5% this week. If you sat on the sidelines because you were so nervous, you missed an incredible move. Final thought, Mike?
Yeah, and like I said, I'm continuing to be bullish, and I don't think that I've in the last 6 months that I've ever been on the show where I'm like bearish. I would just like to see a little bit of selling come in so we can get a little bit of value as opposed to just reaching and reaching and reaching. But that's what the bulls are going to do. The bulls are going to buy until the sellers stop them, and they're not doing it yet.
All right. Great to see you both on this Friday. Mike Shore, Prosper Trading Academy, Rick Ducat there on the charts, JP Morgan, FedEx, and Microsoft here on the Big Three. Thank you. Coming up, we'll spotlight Barrick Gold. We've seen gold prices steadily rising all year. Now what? What about the miners? The president and CEO of Barrick Gold will join us to discuss the company's latest earnings, gold and copper production, the outlook, the demand. Trading 360 will be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time to spotlight Barrick Gold. Gold and copper miner reported its earnings yesterday for the third quarter. We're looking forward to having a great discussion. Mark Brissow's here, President and CEO at Barrick Gold. Thank you for being here. Tell us about the latest quarter, GOLD, folks, the ticker and best ticker symbol you've got. Some of your thoughts about the latest quarter.
Nicole. So a quarter, a steady quarter, certainly a quarter that benefited from the rising gold price. Earnings up 33%, a strong attributable EBITDA of 21% improvement. We kept our dividend, strengthened our balance sheet, bought back some shares, really as we're going into a big capital investment growth period starting next year. So it's important we keep our balance sheet strong.
Yeah, the gold prices, copper prices that help to buoy business overall, right? You said higher gold prices and higher copper prices did help the company along. Do you anticipate that kind of trend to continue? What kind of trend do you see for prices?
I think, Nicole, with the elections over in the US, everyone's trying to digest what's going to happen. But I think what we've seen is what's supporting the gold price is the high debt embedded in the Western economies, the developed economies, and of course we're also experiencing a softer Chinese economy. So we've seen a growth. The drive in the gold price has really been demand for physical gold. And more recently, we've seen the Western investors start coming into the market through the ETF, because the ETF has had outflows until just 2 months ago. So that's good for gold. There was a correction with the announcement of the Trump victory, but up at 2,680 is still a very good gold price. And I don't believe that the trend is broken as far as the bull market goes. Copper, a little bit in the oversupply side right now, but the demand side of the equation is still very strong, and we expect medium to long term that demand will grow and exacerbate the undersupply on the mining side for copper. And copper, as you know, is driven not only by the green energy focus, but more importantly, infrastructural development.
Yeah, dividend solid in place there. I saw that you plan your quarterly dividend. No issues there, right?
No issues.
And then I think about also about, when you read the headline, it said that you missed on the top and bottom line, but it showed the growth that you had. It showed the revenue growth. It showed that you were buoyed by higher prices. I mean, what do you say to the naysayers who may be concerned?
So, Nicole, mining is a long game, and right now with the rising gold price, a lot of investors looking for that immediate, instant gratification, and the Barrick story is about fixing a combination of assets. We merged with Randgold back in 2019, and really looking to build back the organic growth opportunities, and we have an abundance of those growth opportunities now very clearly in our sights, both in gold in the form of our Dominican Republic expansion and Pueblo Viejo, and our Nevada assets in the United States, and then 2 big copper projects, one in Africa and one in Asia.
There are, and those are exciting, no doubt. There are a couple of things, that I think about, the uncertainty of what's going on, the macro uncertainty, geopolitical uncertainty, and that certainly gives a gain to all kinds of precious metals and such, and people do run to this group overall. Middle East conflict still seems to be going on. That may still hold and give a nice boost to gold overall. At the same time, we're reading today how oil is falling, concerns about China demand. I mean, no China growth. How concerned are you about the China story? Where does that fit in, if at all?
I think the China story is impacting on the copper story at the moment, and it's bound to be like that. New copper mines coming into production in the short term, but overall, the long term, I always say, copper is as strategic as gold is precious. But certainly on the global economy risk side, gold is a metal that you should have in your portfolio. And what's exciting for us is right now we've seen the gold price being led by physical buying of the physical metal. But the opportunity is to gear that through the equities, and that's the traditional follow-on investment, and definitely lots of upside in companies like Barrick, which are trading at or below their underlying value.
I was reading, so there's a couple of stories that I was reading about. One was you replenishing some of the reserves. I'd like to hear about that and how that's going. Also, terrorism in Pakistan threatened foreign mine development. At least 20 miners have been hurt, killed, wounded. And, you know, I didn't know if that was part of your region. It had said Barrick Gold in there. You know, where's that story fit into the big picture? The terrorism and also the replenishment that you're doing.
So Pakistan, let's deal with the last one first, is a complex jurisdiction. We are invested there. We're invested in Balochistan, in a very remote part of Balochistan, very far away from those incidents that you're referring to. And it's a very big investment. It'll be the biggest foreign private investment into the Pakistan economy ever. And it has a real opportunity to deliver significant value to the Pakistan economy overall and to the Balochistan economy specifically. So, and it's one of the largest gold, copper, undeveloped projects in the world today. So significant in every aspect. On the growth side, you know, we've really and again, we've seen lots of M&A activity in mining, people paying premium to do transactions, to be able to deliver growth or increase the size of the businesses. I've always built the business on the back of discovery and development, and that's the real way to create value in the mining industry. And certainly the Barrick of today has a number of major projects in the making. We're just finishing off 2 feasibility studies, which will deliver 2 big mines over the next 4 years.
Yeah, a lot of new projects, new exciting growth that you're seeing going forward. I will also add, folks, the stock gold trading at 18.24 today and 1 year up 20%. But today, Scotiabank maintained their outperform on this name and has a price target of $24. So seeing some upside from the $18 where we are today. Mark Bristow, thank you. President, CEO, Barrick Gold. Great to see you, Mark. Thank you.
Thank you, Nicole.
Coming up, the disruptors. George Sillis standing by. I'll take a look at Upstart, the company's earnings report. We're seeing shares hitting 2.5-year highs on that report. Huge gains today, 45%. We'll double check that. The numbers, the details, an example trade for you. Trading 360. We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage Insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Pittolides, live on the floor of the New York Stock Exchange. A great week on Wall Street, but some names under some pressure. We bring in Diane King Hall, senior markets correspondent here on Schwab Network, taking a look at Block Square, is what it used to be called. It's down about 5% today. Good morning, Diane.
Good morning. Yeah, the stock taking a hit off the back of its latest quarterly results today. Investors focusing on the miss on the top line. But let's go through the numbers for Block, as you mentioned, formerly known as Square. Adjusted EPS came in at 88 cents a share. That was a little better than expected. Revenue, that was a miss. Revenue came in at $5.98 billion. The street was looking for more than $6 billion. Another concern seems to be for investors, gross payment volume. That was 62.4 billion, so that was a little weaker than expected. Revenue growth was just a little more than 6%. Gross margins 37.6%. In terms of their monthly active users on Cash App, that's a big part of its base. They saw 24 million monthly users, so that was an increase. That was a double-digit increase on a year-over-year basis, up 11% for Cash App users. And that did contribute to its profitability, but again, not enough when you think about what the revenue metric was. The company has been going through some cost cutting and taking some different actions there. So they said that they're going to be also continuing to reduce their investment in Tidal. That's part of its cost cutting measures. Another thing they spent a lot of time on the earnings call talking about was the integration of Afterpay. It's buy now, BNPL. Piece that they've folded into the business. They expect that to be a bigger part of the Cash App business going forward. But again, that miss on the top line is really disturbing Wall Street today.
Yeah. And such a mix. Morgan Stanley has a $60 target. It's at 71.
Yeah.
And I saw that JP Morgan has a $90 target today. So obviously, if you look at the 1 year, you'll be happy with the chart. If
Yes.
you look year to date, you're not so happy.
Exactly.
All right. Thank you, Diane King Hall. Great to see you. Thank you. Let's continue and talk about our disruptors, and that is with George Silas, senior markets correspondent, taking a look here at Upstart, which is up now 46%. New highs. Break down this report. I mean, what kind of crazy moves are these, and what have they merited?
Yeah, there seems to be a theme going on, Nicole, as of late. Obviously, the markets are doing well, and the economic environment is doing well. So there's a lot of appetite right now for growth stocks that are starting to show promise. So Upstart is one of these names. It's essentially a technology-based artificial intelligence lender that does dynamic scoring for underwriting of personal loans, but they're also moving into other areas over time, like auto loans and credit cards. And we know that the financial services sector has done extremely well, based on the aspects potentially of the Trump administration providing deregulatory relief to the industry, but also looking at the yield curve, it's actually widening out. Everyone talks about the 10-year yields and the aspects of consumer finance and, of course, autos and mortgage financing, which are expensive to consumers, but the lenders are making a lot of money. And Upstart is a lender, and so ideally speaking, they're moving in the right direction because of the widening of the yield curve. But at the same time, the company is actually getting very close to break even on an adjusted basis from a profitability standpoint, which also creates sort of a magnified move. But they reported earnings, and they actually came in ahead of estimates. Now, for the quarter, they lost 6 cents on an adjusted basis, but that was much better than the 15-cent loss that was estimated. Sales were pretty robust, 162 million versus the 150 estimate, so it was higher by 20%. But if you look at next quarter, they continue to raise the estimates for sales and earnings. They are expected to post 180 million versus 162 prior estimates, and then also prior estimates have them losing about 2 cents a share, where in fact they're now expected to earn an adjusted profit of about $5 million. So things are moving in the right direction for them. And typically speaking, when you see stocks or companies go from losses to break even and then eventual consistent gains, you end up seeing these magnified moves with the stock now higher by, like you said, 45%. The other thing to mention here quickly is there's probably an element of a short squeeze going on based upon the magnified move. And I looked at the short interest, which is close to 28% of the free float. So that's just an additional, variable that I found as well. But with that said, you're actually seeing some analysts like Piper, they are quite bullish on the stock. They increased their price target to $85 from $31. But at the same time, if you look at Wedbush, they increased their target to $60, but they maintain a neutral rating.
Yeah, understood. I mean, when you think about AI lending, the AI trade, the AI excitement, most of the guests that come on certainly seem to think it's still very much in play, and that's this move today. Tell me about your example trade. I mean, I don't even know how you go about doing one today.
Yeah, so I'm not chasing this one. The reason being is that I think the 10-year yield will probably soften a bit, and I think that'll create some compression in net interest margin expectations for the finance companies. But with that said, if you look at today's low, which is actually near the open, it's around $65. So there's a possibility that Upstart actually gives back some of the gains. But I do think that perhaps today's low will hold. There's a gap in the chart at 65. So very simply, I'm going to sell a December with 42 days to expiration, a $65 cash secured put. Now that put also is has a 35 delta, which implies that there's a 65% probability that the stock will stay above $65 by expiration in 42 days. You can actually sell that for about $3 a share in premium or $300 a contract. So the whole premise behind the trade is if the stock goes higher, that's fine. If the stock pulls back to 65, that's also fine because that premium will erode to zero. But just in case it does fall, you basically have to take ownership at $65, but your cost basis is 62. So again, anytime I sell puts or anybody sells puts, you have to be willing and able to post margin in order to assume ownership of shares if you're put the stock at the prescribed strike price.
All right, George Silas, great to see you. Thank you so much. Appreciate it. Coming up next, our 360 round, we'll dive into the Fed's decision about cutting rates, 25 basis points. What could be next? The record week that we have seen here on Wall Street, the second term for President Trump. What does that mean for your wallet, your portfolio? Trading 360. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round. We have our panel right here on set. Ben Emmons, Chief Investment Officer, founder, FedWatch Advisors. Hillary Kramer, founder, CIO, Kramer Capital Research. So glad you are both here with us today. Thank you so much. Hillary, you often have a lot of great stock picks for us. I'd like to just get a broad picture. Ben, what did you make of this week that was?
So we actually are nowhere now, right? Like the yield went up really a lot on this, Trump election, and yet we're back to where we started. And I think that reflects that the market is briefly priced in what could happen in 2025, but now we have to take stock of what will happen next week, which is CPI. So I think markets are definitely onto the, okay, he is the new president. We're going to get tariffs. We're going to see fiscal stimulus. But we actually really don't know what that actually is about, right? So we just price it in and take it a bit back and start focusing on CPI. I
was thinking what a great week this was. The S&P and the NASDAQ have had the best week in a year. The S&P's up over 4%, the NASDAQ up over 5%. If you had gone to cash, you missed it. What did you think about the week that was, and did you find opportunities for making moves in a portfolio?
Well, luckily I was in position and for this, yes. So especially with the technology, I mean, it was very clear that really in the know polling companies, they knew it was going to be a Trump win, right? So therefore I was there. But if those people, if anyone who tries to jump in now, it goes back to Ben's point. We don't know what's going to happen next week. This is a true Trump rally, a relief rally, because no one likes uncertainty. So I think it's everyone should just be very careful and realize much of the rotation is already done.
An incredible move this week, and a Fed okay to the Fed, right? They gave us the 25 basis points, but not clear whether or not the next one was a pause. Did you think a pause is coming next, Ben, or a 25?
He definitely hinted subtly at this pause. What was interesting that he did kind of take a stance on inflation expectations and inflation, saying like, we haven't won the battle yet against inflation. We cannot let inflation expectations go higher, but we will react to that. So I thought that was interesting because we're going into this meeting like more dovish feeling, right? And the Fed may, win inflation and you could cut rates more. That he kind of pushed a little bit back there. He obviously didn't want to go to what happened with the election, but he does know in his mind, like the Fed has to start calculating that in the next projection to say, look, next year will be a completely different year than what we have this year. So you have to be a little careful. So I think, can there be a pause? Quite likely. Unless we get a very weak labor report, then I think that will keep coming.
And I want to touch on your 2025 comment, Ben. Just when I look at the names, maybe you could focus on one or two. Some of the names that we've talked about so much this week that have done so well, Palantir, Upstart, we just finished talking about that 46% move, SentinelOne, Carvana, Reddit, Mobileye. Those were some of the names that you had sent to us. So kudos to you for getting in on some of those winners. Is there still room, and which ones do you focus on
now?
now?
There's room now, especially in Mobileye, which is based in Jerusalem. Intel spun off Mobileye. That is assisted driving and self-driving cars. And Mobileye supplies their parts and their software to the 5 OEMs that supply all over the world, the top 5.
And a deal with Lyft.
MBLY. Yeah, there's really opportunity there because of that overhang from any kind of Israeli company. So there's room there. Palantir, even though Goldman Sachs is still at an $18 target when Palantir is heading towards 60 fast, there might be a turn of events there. Just think about the relationship with Palantir. Peter Thiel, Republican, all these government contracts around the world going into energy, going into healthcare. So Palantir is one that it might not be over. Yes, you missed it being $7 in the last 52 weeks, but it could go higher from here. And SentinelOne, most people don't know, the ticker symbol is S like as in Sam, and that's an AI-driven cybersecurity endpoint company. So it's cybersecurity, but they make sense of big data and where there are security breaches, especially with those that are working from home on their iPad.
And how about the elections? I mean, the elections, there was so much talk about cybersecurity. Ben, tell me more about 2025. You mentioned some fiscal stimulus. There's a lot of talk about tariffs, and maybe with the support that President Trump has gained in the Senate, the House has a lot of, actually, I didn't get the final, but it was looking like it may be Republican.
Close.
Maybe he doesn't have to do quite as many tariffs. Maybe he doesn't want inflation because he already saw the last administration with inflation. What do you see for 2025?
Well, I think Trump says exactly what he does. So when we come into January, you will have this raft of executive orders ready, all trade policy, all tariffs, all immigration, all those things. So
And tax cuts.
and tax cuts too. So he'll come out of the gate flying, I think. If you listen to Howard Lutnick, who really drives his administration, I mean, they're having huge plans to completely rebalance the U.S. economy, essentially reshoring a lot of our manufacturing activity.
Yeah.
And it's already happening. So I read the other day that Madden, which is like one of these sport makers, they're moving away from China in anticipation of what Trump is going to do. You're going to see other companies probably doing the same thing. So we're going to see a lot of movement next year. I think the economy will stay strong because this push that comes through the markets is a reflection of that strength in the future. And the Fed will probably have to move towards some sort of a hold position for a period of time because higher economy and more growth means also more inflation.
Inflation. Oh, Ben, you totally hit on it. It's inflation. It all means inflation's coming because no one can make sense of that 10-year bond. Why were the yields moving higher? Inflation concerns.
Yes. And the long bond. I mean, a quick thought on the long bond because that's a big topic.
Yeah, so they asked him a lot of questions about it. Why did this all
Yeah,
happen?
exactly. What's
You cut
going
rates
on?
and the rates are going to go higher. Well, my take is that the Fed cut rates right at the moment the economy is already taking off, so they give the economy a little push behind it. Then, of course, yields go higher because it reflects stronger data. The ISM services data this week was really good. But I think what Powell's looking at, these inflation expectations, if that goes higher too and it drives up yields, they will have to respond to that. So I think it's really the growth picture that's driving it. But inflation,
So a pause or maybe even a hike, they have to respond to that.
Well.
Hillary, when we think about 2025 and the conversation about will tariffs bring more U.S. manufacturing, and that has led executives somewhat mixed on the thoughts of what happens. How do you position for 2025? Are you feeling more bullish or bearish? Or not?
Bullish again towards technology, which I already referred to. The banking stocks, yes, they've already caught a bid big time, like Goldman Sachs. But we could see some nice upside in some of those more regional banks that haven't seen it yet. So I would stay away from the manufacturing because the margins are going to be so difficult. Because and we don't know if there's going to be trade wars or if there's going to be issues with supply chains. So I would be really careful. Just think about what happened with Deere and Trump between 2016 and 2020.
Yeah.
There's a lot of issues.
Okay. All right. Great conversation. Thank you both, Ben Emmons, Hillary Kramer. Great to see Ben and Hillary today in a week that has been incredible. Best week in a year for stocks. Thank you, friends, for being with me. I'm Nicole Petalides, live here at the New York Stock Exchange, Trading 360. Thanks for being with us. I'll see you at 2 p.m. Eastern Time. Download our Schwab Network app. It's free. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. I'll see you at 2 o'clock for the watch list. Fast Market is next.
So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours live programming to kick off every day bright and early at 8 a.m. Eastern with our futures show breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in studio hosting our 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day. We invite top analysts and investors to determine what's driving the early action, how to interpret the news, and what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host the Watch List, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, and host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the market. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at launch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We're talking big tech. We're going to have discussions on those. We'll have some option strategies in Apple, which is up about 18% so far this year, but has been relatively flat over the last month. And Tesla, which has rallied 27% just this week after Trump was elected. And like Folio breakdown consumer sentiment data in NVIDIA, the chipmaker stock is near all-time highs into their earnings on November 20th. Now let's take a look at the major indices. We've got the S&P 500 hitting record highs. We've got the Dow hitting record highs. NASDAQ did also earlier. S&P 500 up 0.4%. The Dow up nearly 250 points. The NASDAQ 100 fractionally in the green. And the small cap Russell 2000 up about 0.25%. To help me break down this market action, let's bring in my co-host for the day. That's going to be Kevin Green, senior markets contributor here on the network. KG, give me your take here. It seems like the momentum trade more than anything post-election, post-Fed, is the reason that we're seeing this optimism, right?
Yeah, it continues to kind of move to the upside here. We're trying to test the 6,000 level in the S&P 500. We've been kind of playing around fairly close to it over the last, let's say, hour and a half here. But we are seeing, obviously, a lot of optimism, especially when you're looking at those risk-on type trades or maybe some of those FOMO type of trades that are out there. But what I do notice for today, the sectors that are actually outperforming or the catch-up trade is also working. Real estate and utilities, consumer discretionary, obviously that's going to have a lot of Tesla in it, and consumer staples. If you take out consumer discretionary, those three other sectors actually were laggards over the last couple of trading sessions here. So I think we're seeing a little bit of cooling in mega cap tech for the most part, and you're starting to get a little bit more love when it comes to the value plays in the market.
Yeah, definitely. Max 7, all of them are in the red except for Tesla, which is above 318 at this point. We're going to talk Tesla later on in the show, but let's expand this conversation. Bring in our next guest. That's going to be Joe Mazzola, head trading derivative strategist at Charles Schwab. Joe, give me your take here. We're hitting record highs. Everything is going great for the equity markets. Investors are happy. Are you happy, Joe?
Am I happy? Well, look, the 401k is up, and that makes me happy for the Mazzola family, and it also makes me happy for the U.S. because, look, you've seen a pretty substantial.
We're back.
Equity market.
Tesla's hanging out at the highs.
Some of the risk assets that you guys were talking about before, whether or not you own Bitcoin.
Okay, looking for some B and C pivots.
10,000 points from Monday's low. you know, Russell's up 8%, Nasdaq's up 5%, S&P's up.
Meta looking for a turn here.
All in one
Let's
week.
see, Meta
You know, I think the markets are just trying to figure out
552.50.
long term could look like under this new regime, and at least
See,
in the
Meta.
short term, they feel pretty good. You know, just think of a
For
sector like
586, Meta 586.
you know, if you do get some deregulation, if you do get a further steepening,
Meta looking for
and if you do
a move here off the low. Meta.
you know, not only deregulation in terms of what these banks have to hold on their balance sheets, but also deregulation in terms of mergers and acquisitions. I mean, think about the amount of revenue that could generate for some investment banking activity. So financials have done really well this week, and I mean, you can kind of make a case, as you're looking along each and every one of these sectors, why they're doing that. Try to kind of create that story. Today, I heard you guys talking about kind of the catch-up trades with utilities, real estate, so on and so forth. I mean, you can also kind of maybe point to the fact that yields have come down a little bit. Right. So it's been a broad rally this week, guys, and whether or not it slows down, we'll see.
It's almost like it doesn't matter what the yields are doing. At least one or two sectors probably going to take a hit if they're going up, and like today, they're kind of rebounding as rates kind of come off those levels. We almost hit 4.5%. But KG, when you look at the fallout from the FOMC, we didn't really get any surprises out of Fed Chair Powell yesterday. I think some of the other major media networks out there try to put the spin on it with Trump, asking him about Trump. Is he going to get fired? We're not going to do that. We're going to focus on what he says and what that means for markets at this point. What was your takeaway from his commentary?
Yeah, well, Jerome Powell is a traditionalist. I don't expect any type of really big fireworks coming out of him, as well as a change of direction when it comes to policy. And I think that he actually kind of kept that trend yesterday. Now, one thing I do find very interesting here, now the market's kind of questioning if we're going to either
NVIDIA looking for a turn back up. NVDX. I'll probably buy some shares here.
We're not going to go back to back. And so once again, I think the market, when you're looking at the interest rate market, kind of backed out some of those aggressive expectations that we've seen over the last month and a half, almost 2 months here. You did have the initial reaction of selling yields, or selling bonds, obviously, because of the election. And now I think you're going to see, for the most part, maybe a little bit of range-bound action here. I mean, from a technical standpoint, we should be seeing yields come down a little bit. You don't want to see it too aggressively coming to the downside here, but I think from a technical standpoint, you should see them coming down. But from policy, it seems like it's going to be same old when it comes to Powell. Data dependent, balancing risk, inflation, jobs, and the last thing I will say though, his expectations as well as his explanation on housing inflation, I think was really good and thorough yesterday. But it seems like it's also a transitory narrative that we just have not seen come to fruition over the last couple of years. And we got to see if that's actually going to take hold. And if not, we could have some sticky inflation at these levels. I think that's the fear for the Fed.
Yeah, Joe, what's your take on that? Because I think that's a concern right now that Trump's in office. What type of impact are his policies going to have on inflation? Right? Fed Chair Powell, he's not going to get fired, right? Because he's in the middle of a rate cutting cycle, and Trump likes that. Historically, from his last presidency, he likes the Fed cutting rates, but at the same time, is that a concern moving forward where if you start spurring growth, that inflationary pressures might remain sticky?
Sure. I mean, Fed Chair Powell said the short-term consequences, he doesn't see much on that side as of this point right now. But I mean, think about long-term, right? He said
check your stocks like Meta, Netflix, NVIDIA, Microsoft. Looking for BNC pivots, Apple, Amazon. We've come a long way this week. No reason you can't wait until next week. Amazon could be a bit lower. If you're day trading, a different story. NVIDIA looking for this to catch a bid every time it dips. Intraday. NVIDIA. Here's an ABCD pattern on NVIDIA.
With their fiscal policy that puts you know, Powell and the governor's in a little bit of a corner there, right? Because at what point, you know, are they cutting too aggressively, knowing that around the corner, you know, they could be seeing that spark of inflation? So it puts them in a bit of a tough spot, but I think at least in the short term, they're in a fairly good position.
Yeah, and I think one of the concerns is when he gets into office and the impact that Elon Musk has. If there's some efficiencies coming in Washington, D.C., maybe we're going to take a little bit of a dip there as far as jobs data goes, because they're talking about trillions in cuts there as far as the administration goes. KG, when you look at the consumer and the economy humming along, the the soft landing narrative in full play, you get consumer sentiment data that's pretty robust again this morning. So everything seems to be in a good place here for equity markets, and maybe that's why the optimism continues to reign here, right?
Well, I would say for consumer sentiment as well as consumer confidence, I would expect post-election bump. I think we have seen those in the past here, and I would not be surprised if that's going to be the same moving forward. That could also come with maybe a reduction when it comes to the inflation expectations, and I think that's what we saw today. I believe that came in 1 point lower, or a 10 basis point lower than the street's expectations. So that could be another thing to just be mindful of here. I don't think the narrative has changed yet, right? We have this, enthusiasm that's being permeated within the market, but we still have lofty valuations. You still have, revenue expectations moving forward, kind of contracting, if you will, when it comes to guidance from a lot of these companies. So we're still at kind of frothy levels. I just think that we are now looking for pockets of the market to be able to, leverage capital. And I think that's the only thing that has changed here, but the multiples are still very expensive. So yeah, I would say to still be very cautious when it comes to this stuff. Use your risk parameters and have those in place. And I think when you're talking about policy, Powell said it perfectly yesterday. We don't know. No one knows. And so until they actually do know, they're going to be able to model it out. It's going to be way far in advance. And even if we do have an increase in fiscal spending, we're probably going to have the extension of those tax cuts coming down the line here. Until those actually go into place, we probably won't even see that actually really hitting the economy for another 8 months, 9 months, even a year, right? Like this is going to be a very long process. I think we got to kind of keep our eye out on the near term, which is going to be top line growth as well as stabilizing margins for a lot of these companies, which, in my opinion, wasn't that great for this earnings season. They're looking at it on a 5-year basis.
Yeah, and to expand on that a little bit, Joe, is now the valuation's starting to get even more elevated at this point. And Jerome Powell, I don't know. That's great. Be data dependent. That's what we want you to be. And that's why you're in that position. But when you see markets move the way that they have based on this euphoria that's coming, is there a tale of a little bit of heating maybe that optimism a little bit here for investors because we're getting stretched here?
I mean, look, I think the market is going back to their 2016 playbook, right? And they remember what happened in the November and December, post the election, when Trump first took office. You saw a big bump right away, right? And then there was a leveling off. There was a leveling off for a couple of weeks. As some of that FOMO kind of dissipated, and then the rally into the end of the year. What I think could be the playbook this time. You kind of have to go back and say, okay, well, what sectors could do well, and we already kind of talked about financials, but you can also look at other the discretionaries. I think one of the concerns there would be if some of the input prices go up, right, from some of the tariffs. What does that do for some of the goods? Now, once again, those are longer term issues. Those aren't things that are going to rear their ugly head right here in the next couple months. But these are things that investors need to be thinking about down the road. And we have a couple stocks that we'll be talking about later on. I mean, Apple is one of those where what happens to their input prices given their reliance upon China. So when tariffs, if that's something that investors start to maybe focus on a bit more as opposed to what they are right now, then that's something that I think could be an inflection point. But as of right now, there seems to be some momentum behind this rally.
Joe, I want to ask you a really quick question as we're kind of talking about sectors and industries that could perform and maybe underperform within this new regime. What are your thoughts when it comes to communication services? Because we know that there has been obviously some issues when it comes to
all right, NVIDIA watching,
free speech, but the regulatory aspect of
Tesla hanging out, consolidating.
Right? What do you think? Do you think
Futures continue to pull back.
We usually kind of lump those into the same bucket as tech, AI exposure, but there probably is going to be some impact when you're looking at the Metas of the world, or the Googles of the world? What do you think?
Well, I mean, you can make the case that Meta has not participated in this rally, right? Because of, because of kind of where they've stood in the past. But if you look at, let's go back to maybe the basics, right? What are the basics? What drives stocks? We keep talking about the narrative, but let's go back to the basics and look at earnings. What sector had the best earnings growth so far in Q3? It's been communication services, and it's because of stocks like Google or companies like Google, Netflix, and they've done very well. Could that continue to go forward? Right now, as you're looking at expectations for Q4 and then even Q1 in 2025, expectations that communication services will continue to do fairly well. One of the things that could help, propel those names going forward is you could see some de-risking in terms of the regulation, right? I mean, look at the FTC. And look what's happening with the FCC and all of these
Scanning through stocks.
that to a certain extent, and even
It is Friday, the 8th.
some of these
OPEX.
monopolies. It's very likely you could see with the new regime a lot of that pressure being taken up. Now we don't know for sure, but I think that markets are pricing it into a certain.
One more week for monthly OPEX for November.
To kind of expand on that, Lena Khan, I think the walking papers are probably in the mail right now at this point, and that's why you saw that initial pop in Google Alphabet. Do they not, go forward with trying to break them up moving forward? So yeah, definitely a lot to digest here as the new administration is going to take hold next year. All right, guys.
Google.
Quick break. When we come back, we're going to take a look.
Higher low.
The iPhone maker stock is up about 18% so far this year, but has been in consolidation mode over the last month or so post earnings. Stick around. Fast Market's coming right back.
Robinhood looking good. Watch for Robinhood. My son wanted to buy some of this.
Hey, stop. Exploring a sale of its Jefferson unit, according to Bloomberg, which said that the sale of the company, which makes navigation charts, could fetch as much as $6 billion as Boeing does seek to lighten its debt load. Now, this comes after Boeing CEO Kelly Ortberg told CNBC last month that he would rather do less better than doing more and not well when asked about the possibility of having to shed assets. You see there, the stock is fractionally higher. Scott?
Okay. All right. Pippa, thank you. Pippa Stevens with the update there. Shannon was talking about, regional banks. The Russell up 8% this week. It's the best since June of 2020. The KRE is having its best week in a year. How are we thinking now about a renewal for regional banks without some of those?
Yeah, Robinhood looks like it's going to break higher.
For the last 2 years, it feels like.
So
Look at the weekly.
Q4 of 2020, we're saying the economy is going to expand. And when the economy expands, you buy small cap value. And so there's actually an ETF, SVAL. We sold that at the end of 2021. It was a great trade. What it owns is the regional banks and industrials, but it has a quality stream. And that was up 9%.
All right, so Hood Weekly looks pretty good there, Frank. You'd be buying it at the high, obviously. It is coming off the low, just back up to the high of the day. So a nice little dip if you bought it a few minutes ago. All right, maybe next week. I don't want to buy the high of the day with the S&P down here at the low. S&P at the low.
You have to look at the balance sheet. SVB collapsed because they had a poor treasurer. They didn't manage their balance sheet. But I think plain high-quality regional banks, that ETF is a good way to do that.
Yeah, I mean, Basel III was already going to be watered down from what it was initially feared. Yep. The banks and CEOs had successfully sort of lobbied for that to happen, you have a
NVIDIA.
fully diluted pond of regulation as it relates to that, right? There could be even more watered down at this point, right? All that's beneficial.
Yeah, I think people were buying the big banks because of the liquidity, just like they went to big cap tech when they didn't know what they wanted to do. Now I think there's a better feeling that from a fundamental perspective, you have a bid now.
What's Qualcomm doing? Qualcomm still messing around?
When you look at small cap banks, like below $10 billion.
Qualcomm turning the corner now? Okay. Another day lower after earnings.
And so I think that's something that's been kind of lost in the era of investing in the small cap value. So we're big believers.
So on that note, Shan, I find it, we mentioned we get into the regionals because we talk about the Russell having such a strong week up 8%. Tony Pasquarello of Goldman Sachs just put his weekly note out where he's talking about what he calls a quote,
Microsoft,
shift in thinking, where he says for a long time now you've been paid to stay in the pocket and simply
Nano,
S&P in its off-the-shelf cap-weighted form.
Coinbase. What's Bitcoin? Bitcoin chopping around. TLT, 3M, 3M. I have December calls on 3M. Looking for that to bounce more. 135 call on 3M. Looking for that to bounce some more.
Equal weight versus cap weight S&P. What do you think?
I think it's very easy to give this argument because you know that I have been quite constructive on small caps for some time. However, I think what you really want to think about is what are the drivers of that move to large cap growth, for instance, and you were really looking at it in terms of what Brian was just saying, strong balance sheet, strong free cash flow, the ability to be a fortress, if you will, in a time of uncertainty. I think now what you're looking at is that historically, when do smaller companies do well? When they have a foundational tailwind of economic growth. Boy, that seems like it's going to be a catalyst. Two, in a lower rate environment, right? We're probably not going to see rates going down as much as maybe we had thought a few months ago. However, the trend based on Powell's comments yesterday is clearly to the downward direction, as is inflation. The last thing, Scott, is that it's really about the universe of these companies and the representation of some of these more cyclical businesses. If we're looking at a potential industrial influx of activity, there's a lot more representation in this universe in small caps. So I think it's less about just a cap trade and valuation, and that's the important thing. It can't just be about valuation. There has to be catalyst.
You guys see Coinbase this week? Kevin Simpson, you own it in the Q DVO. It's only up 45%.
Okay.
Bitcoin's hit a record high. You have people coining Trump as the Bitcoin president. It was just one of the asset classes that ripped along with so many different other things in the, quote unquote Trump trade.
Well, we honestly didn't think it was going to go up 40% in a week, so I'll confess to that. But it was a proxy for crypto. It's an actual business. They're returning to profitability. Trades with a 33 PE. Again, it's in our growth strategy. We'll get to a few other names in there today and have a lot of fun on a Friday. But when these stocks rip, boy, can they rip.
What about what didn't work? Staples, utilities. Brian, they did nothing this week. Among losers in Staples, Dollar Tree, Brown Forman, Dollar General, Archer Daniels, they're losses 7 to 4% respectively there. China names, obviously, given part of the announcement today, the package over 5 years to tackle the local government's hidden debt. A lot of the China-related names are down. Bond proxies, as I said, Staples, utilities down because if you do have the prospect of higher rates, if the Fed's going to be a little bit slower, if the Trump agenda is more reflationary, then you have the possibility of rates at the longer end, deficits increasing, rates going up, bond proxies going down.
Yeah, I think we learned pretty quickly that it's not just about new power generations and all that AI.
Super.
You actually have to run a business that has
Bitcoin chopping around. NVIDIA off 1%. Boeing trying to bounce. Boeing's trying to get something going here. SMR off the highs.
In our U.S. Portfolios are Costco and Walmart. And so the other areas have been expensive. I think people were hiding in those names, and they're not growing anymore. And so from a product and service basis, fundamentally, I don't think people are using those products either anymore.
What about healthcare, Bryn?
You got to pick your spots, right?
A lot of them were down this week.
Well, I think pharma. I think
RFK Jr. gets a position somewhere in there. And I think with pharma next year, that to me is the area where you could see just a lot of mess. And we'll see what position he actually gets. If he actually
AMD a little bit lower, looking for NVIDIA to make some higher lows. NVIDIA. All right.
Yeah, to say the least. And
Microsoft making a new low. Microsoft. So I have to wait until next week for Microsoft to rally, looks like.
We've always viewed healthcare as being a combination of both offense and defense. However, there's a lot easier way right now to garner offense in your equity portfolio. And there isn't this overhang. I think, when you look at the platform for Trump 2.0, that healthcare question remains. And so that's why even on the private side, Scott, looking at that realization of healthcare companies in the private equity space, maybe not quite as much of a catalyst as those other sectors that I mentioned earlier.
All right, quick break.
All right, Robinhood. Robinhood.
Tell you about that. Kevin Simpson's got a handful of new moves as well. We'll do all of that.
Okay, that's going here, Robinhood. I don't like the idea of buying high of the day, Robinhood. Let me just look at earnings. From what I remember, they're doing better. But they missed expectations, right? Yeah, they missed expectations. They beat the low estimate, 16 cents, but earnings growth, 288%. Revenue growth, 36.4%. Robinhood. Okay, they were looking for 18 cents. They missed by a penny. I don't think that's that bad. They missed by a penny. Watching Robinhood. Okay. At the high of the day right now. Oh, that makes sense, Frank. Okay. That makes a lot more sense. INOD. Innodata. Okay, this one looks a lot better, Frank. Yeah. Nice move. That one's still going. Okay, Eli Lilly continuation on the reversal off the low. Eli Lilly. Yep, nice move on Eli Lilly. Okay, just keep in mind, Eli Lilly, Stephanie Link has been buying this one. So were institutions buying the dip? Eli Lilly, nice reversal. Upstart, I was listening to Schwab on my drive to drop off the son. They were talking about selling the 65, I believe the 65 cash secured put for $3. If it be okay with being assigned at 65, which would give you your cost basis at around 62, selling the put, cash secured put for $3, $300. Doesn't look like Upstart's coming back anytime soon. So that's a nice idea. I like that one. Okay. I just like selling puts on pullbacks, not at the high of the day. Okay, watching NVIDIA for some dip buyers, momentum players maybe.
Look at when I'm buying something 42 days out and I'm selling the
Watching the histogram on NVIDIA. Check NVIDIA histogram. Watch the histogram on the bottom. Okay. And on the daily on the right, you can see histogram is bullish. So I want to look for that to continue. Let's go to the 15 minute.
Very true. And I would leave it with this point, Tom, is that even though you look at the 220 strike,
15 minute on NVIDIA.
It's fairly close to an at the money. I mean, give or take a
Okay, you can see the histogram is starting to turn on NVIDIA. Dow, keep saying Dow Transports. Trump Media on the move. Okay. Trump Media, DJT, squeeze play. NVIDIA looking for a higher low.
Yep, good look at the slightly downside. Put calendar here in Apple with expectations that maybe it goes down. Got some sound risk on that short option over the next 14 days, also into expiration. All right, thanks to Joe Mazzola, head trading derivatives strategist at Charles Schwab. Thanks for joining us. Have a great weekend, Joe. But coming up after the break, Kevin and I are going to be
Okay, looking for NVIDIA to make a higher low, a higher high. NVIDIA.
For a look at sentiment data in NVIDIA. Chipmaker stock is up nearly 200% so far this year, near all-time highs. Stick around, we're coming right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by American, unlocking the power of thinkorswim.
Okay, watch NVIDIA.
Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Okay, Meta looking for a turn. I like buying dips. Invariably, you'll get a dip this time of day between 11 and 2. And if it wasn't for Friday OPEX, I'd be looking for a lot of these to at least move a bit higher off the low. They're all looking bullish. TTM is turning. Okay, this is the 5-minute. Look at the 15-minute TTM. Okay, looking for that to turn. Okay, VWAP right there. So if we push through VWAP, note the TTM is turning yellow. Start to head back towards cyan. That could be a nice rip to the upside for NVIDIA.
Thank you. Let's get the headlines now with Pippa Stevens. Hi, Pippa.
Hey, Scott. Special counsel Jack Smith is looking to pause the Trump criminal case to assess what he calls the unprecedented circumstance. The notice came as part of the prosecution's motion to vacate all pending deadlines in the election interference case. Smith says he will decide by December 2nd how to proceed. Israeli Prime Minister Benjamin Netanyahu has appointed a new ambassador to the United States. The U.S.-born Yehiel Leiter, who previously served as chief of staff in the finance ministry, will replace Ambassador Michael Herzog. Netanyahu said Leiter was a highly talented diplomat with a deep understanding of American culture and politics.
Netflix turning, NVIDIA. All right, we need some green candles now.
Fueled by a dry and unseasonably warm conditions in the Northeast, which has put
Tesla, I don't know. I would take some profits and reassess. The futures are starting to turn.
Causes for the wildfires are still under investigation. Scott, back to you.
All right, Pippa, thank you. Pippa Stevens. Coming up, Josh Brown hitting the sell button on a key name in his portfolio. He is going to join us next and document that trade.
Yeah, I have Trump Media. I have some December puts, just in case this pulls back. All right, so let me just show you what I got here. I got okay. The calls are dead. Trump media. Okay, watch NVIDIA. NVIDIA should go here. NVIDIA should go. Watch NVIDIA. B and C pivots. All right, put in the C pivot. Watch histogram. Okay, we're looking much better. Netflix is turning too. What do I want to do with Netflix? I sold some Netflix yesterday. I had NFXL. Okay. So I sold into that move up to the upper Bollinger Band. Netflix, very strong move yesterday and Wednesday. So inside day, it looks like it's going to keep going though. RSI is hanging out there. I just don't want to buy again. Just a scalp maybe. A scalp would be fine. Google, Google's IBD stock of the day. Is that what you're saying, Prano? Google. All right. Okay, let me go over to Investors Business Daily. Let me just check out Swing Trader and see what they're doing. Swing Trader. Netflix. Quarter position on Netflix. They're at the highs. Full position in XLY, consumer discretionary. Full in software tech, IGV. NVIDIA, IBT, Kava, Kava breaking out.
Just the magnitude of the aggressive moves, the response to that volatility crush, and everything else that's happened this week. What I do find interesting is there's plenty of stocks that people are finding an opportunity to lighten up on. People are focusing bets, whether that is on the year-to-date leaders, which really carried the day yesterday and into today, or whether it was the one-day burst of rotation into cyclicals and financials and the like. So it's enough to carry us here. 6,000, I don't think in itself has a ton of significance, except that it's also 25% up year to date. It's also comes at a point when the S&P is looking a little bit overbought. That's not.
Yeah, SEZL. I agree. That was on the watch list.
You should set expectations accordingly to how fast it can pile up gains from this moment on.
People are talking on that note today, Mike, that you have a risk on, clearing event that could last.
In the previous watch list, we had SEZL. Okay, let's take a look at SEZL. Okay, SEZL.
But that doesn't mean you go up every day. It doesn't mean you don't have pullbacks. And if you look at things like the path from election day through an inauguration, at some point in there, usually you have some give back. Maybe it's January's business. But even at that, we're already up a few percent, from right before the election. So, you have to just, I always feel as if you don't get hurt setting expectations low if you remain involved.
Of course. That's where we are. All right. We'll see on closing bell.
Nice.
We got within a point.
SEZL from last week's watch list. Nice follow through breakout.
And I do know that while we're in break, we will probably cross 6,000 just because that's the way things go in TV.
Okay. 6,000. There we go. There we go. S&P. Beautiful. NVIDIA, looking for a follow through. Okay, looking for all these stocks at the low to turn back up. So if you want to scalp these, stop underneath the low of the day. All right, Google, SMCI making a higher low. AMD bouncing. Home Depot bouncing. What's Boeing? Boeing at some point should be higher, I would think, in the coming weeks. Still consolidating, so you have a good risk reward. Stop underneath the recent lows of that flat base. Bitcoin looks like it wants to do something. You're in Moderna. Okay, Robinhood, just watching Robinhood because the son wants to buy it. I kept telling him no. We're at the upper Bollinger Bands. Wait for it to back off to the 90 EMA. That would be the best entry. I like it. It's bullish. It's above the 50-day moving average. It's been above for about the last 10 weeks. So it looks good, Robinhood. NVIDIA. Looking for the follow through in NVIDIA. Bitcoin turning back up. Okay. Let's see. Coinbase. Okay. Home Depot earnings next week. Home Depot. Nice gap up today. Just sitting along a flat VWAP. All right, let's look at the stocks that have been working today. Costco, Mercado Libre, Costco. Big move on Costco. Jeez. Big move on Costco. Okay, what else? Booking.com, that's been doing well. Travel and leisure seems to be a theme. Joe K talking about, let's see what you were talking about there, Scott. Joe K.
Welcome back. The TV gods were looking out for us today. We did not cross 6,000 during the commercial break, but we'll keep watch as we welcome in Josh Brown. So give me your thoughts on this week before I get to these moves, because it's been quite extraordinary on many levels and many different things, Josh.
Yeah, I think it's such a great affirmation for investors everywhere that risk is rewarded over long stretches of time. And I was just looking, my first appearance on CNBC, talking markets with the viewers, the S&P 500 is at 1,200 or 1,250 or something. So it's up 400% in the last almost 15 years. And, not every day and not every month. And
all right, so he's looking at STN.
Stretch where we have taken huge steps back multiple times. But, the overarching message has always been you won't be rewarded every day for the risks that you take. But if you take intelligent risks, things are ultimately going to work out. And I think that affirmation right now, whether we hit 6,000 today, Monday, Tuesday, is not the most important thing. Most important thing is that people are listening and they are taking care of themselves and their portfolios accordingly.
All right. So we'll watch that as we talk to you about these moves. So you sold Sweet Green. That's number one. Tell me about that move and why you did that.
Yeah, Sweet Green went up a bunch after I bought it, and it's a recent position of mine. And I bought it on technicals. They reported last night the stock was off like 5-10%. I thought it was a good report. The guidance, they gave a range where maybe it was a little bit of a disappointment. And I saw a couple of firms either just reiterated or
3M
targets this morning. So I don't feel terrible that I walked away from the trade. It may set back up. I may want to get back into it. It's still on my screen.
It was Goldman downgrading today to neutral.
Yeah.
They had it at a buy. They maintain their $40 price target, as we know, it's where the stock
You know
is now.
what, Judge, one thing with me is that I have a lot of exposure to the space already because of the stock we're about to talk about.
Yeah.
But I'm also in, Shake Shack, and at a certain point, like you have to pick your favorites.
Okay, so Sweet Green is toast, so to speak, but toast is not. I guess I'll say it that way, because those shares are surging today. New 52-week high, highest level since December of 21.
Yeah. Look, this company added 7,000 net new locations over the last 90
Dell
days.
looking at
And they
10,000 February 125 puts to sold to open.
And the beauty
Dell,
of what this
okay.
company does is they get themselves in the door via the payment gateway. Anyone who's ever, bought a muffin in an airport understands, the screen, and you hold your phone up to it. But once they're in the door with restaurants and restaurant chains, that opens up the potential of all of these other solutions they sell. And what they found is that when companies, for example, use their white labeled ordering solution, so like being able to go on an app and order something from your favorite restaurant, because Toast is providing that technology, the loyalty of that customer goes up and the frequency of ordering. And that is the growth business. Annual recurring revenue, which I think is the most important part of this story, hit 1.6 billion as of the last quarter. Judge, that's up 28% year over year. There aren't that many companies in the payment space that have been able to grow at this pace, and now they're doing so profitably. So I feel that my early interest in the stock is now being vindicated by the actual results, and I'm going to stick with it.
All right. Just for clarity's sake, too, I'm just saying that Sweet Green is toast in Josh's portfolio. You never know. Never know what people think
Sweet Green.
you're saying.
Oh, Sweet Green will be fine, but again, I can't hold everything. I took a small profit there, but this one I'm going to stick with.
Wasn't making a broader comment, obviously. Thank you, Josh. Good weekend.
Home Depot,
Josh Brown. The setup is next.
Apple, looking for the bounce, nothing yet. Looking for some ABCD patterns. It's Friday, so it's not a big deal. That was my gardener. All right, so I don't feel a lot of momentum, so I'm not going to jump into anything at the moment. I do like what NVIDIA is doing. Of all the stocks out there looking for dip buyers, NVIDIA is probably one of them. But the momentum, again, isn't that great. The volume has tapered off since the morning. I would imagine a lot of people just taking the rest of the day off, you know? Amazon starting to bounce. Amazon. Okay, I was looking at Amazon. Maybe a scalp here on Amazon. Let me try Amazon. What the hell? I'll try it. Amazon. Do I want to do Amazon? Let me just check this out again. Amazon. TTM is turning, so this could get going. All right. Let me just shift gears here. Go back to Bollinger Bands. NVIDIA. S&P grinding higher. Trying to take 6,000. Probably going to pin in this area. Amazon. Okay, Bollinger Bands very tight on Amazon, so this could go either way.
You know, people forget that Cisco actually is a great barbell opportunity.
Amazon. Let me try some Amazon. What about today's calls? Got to work today.
Increasing dividends for 10 years is a great name.
Can we get back to 210? Calls are 30 cents. 210. The 207s were in the money.
We still think that Bob Iger's doing a good job in terms of taking out capacity there.
Shopify is Tuesday. You own that too.
Yeah, we own it in Canadian dollars in Canada, and we own it in U.S. dollars in America. But you think about really the bellwether of our economy. We talked a lot about on the show today. Small, mid-cap companies, both private and public. And Shopify is the portal for small mid-cap.
U.S. dollars. Dollar strong this week.
Yes.
What do you think about discretionary stocks in general, which have had a good week, carried obviously in part by Tesla and Amazon, but is there renewal for these kinds
Okay,
of stocks too?
watch NVIDIA and Amazon. I like these two.
And Lulu and some of these names in the restaurant space and the recovery and the reorg of Starbucks. There are great stock picking ideas in consumer discretionary. And we talked earlier about how we think earnings in financial companies are understated. We think consumer discretionary companies, especially into next year, earnings are way understated. And you want to look at the consumer discretionary sector, take out Tesla and Amazon, and then look at those great companies in terms of how they're earning.
Okay. We'll take a break. We'll come back. We'll talk about a stock. I mean, I know everything's been talking about everything that's up. We'll talk about a stock that's been on a 6-week losing streak. One of our committee members owns it. We'll kick it around next.
These Amazon 210s are really cheap. I don't know that we're going to get up there, but if we do get some kind of momentum, maybe you get 100%. Maybe it pops to like 60, 70 cents. Amazon. Okay. Let's keep an eye on Amazon for a few minutes. NVIDIA, keeping an eye on that one too. Different screen. Bitcoin. Watch Bitcoin here. Watch Bitcoin. Bitcoin trying to go. Mara, Riot, Coin, CONL, BITO, BITX, and STR. MicroStrategy. All right, watch Bitcoin here. Riot. I know. Tony likes Riot. Riot. Here's Riot. Okay, Riot is a doji. I like Mara only because it's sitting right at the 200-day. So if it gets any kind of momentum, if Bitcoin gets going, this could pop. Not much to look at right this minute. MicroStrategy, another one at the highs. BITO, if you just want to trade an ETF and not worry about options, BITO is an option as well, so to speak. And BITX. I think, Scott, you do BITX, right? BITX, BITO. BITO's a little bit less expensive. I forget which one. BlackRock. What does BlackRock have? BITX. Bitcoin strategy. All right. So Bitcoin looks like it wants to do something. Bitcoin. Okay, it looks like it's going to go here. It's above resistance. Okay. Got a big cup and handle with 100,000 target. 100,000 is the target.
It's about to have a 6-week losing streak. It's down again today by 5%. Bryn Talkington owns that, the BHP group. What's going on here?
China. I think we're probably going to use this as a tax loss this year. It's just been brutal. Like it's down 19% on a price, 15% if you say the 5% dividend.
Okay, let's look at FXI because I want to make a point here. Okay, so, you know, you had to run up, the gaps up, and I told you I have a really horrific experience with China because every time, you know, you get in on news, you think it's going to keep going. Next day, it gaps down. Gaps up again, you sell down here, gaps up again, runs for a few days, and then gaps back down and starts to move sideways. Well, they just, from what I understand, they just injected another 1.3 trillion yuan into the economy or something like that recently.
To me is like a different structural headwind, but I think within the energy space, I don't think it's going to be a drill baby drill. You listen to
1.4 trillion. 1.4 trillion in QE. Why would they keep building like crazy? People are not buying the properties. Amazon looks like it wants to go. Amazon. Okay, buyers at the low of the day. Amazon, you see the wick. Amazon. Watch the ABCD pattern potentially. Could start going. If it can manage to get back to 210, the 210 calls at 30 cents or were. MicroStrategy, MSTR MicroStrategy. That one looks pretty good. That's starting to go, Frank. Okay. MicroStrategy, MSTR. Let me just look at the earnings on this one. MicroStrategy reported earnings on the 30th of October. Reports again January 30th. Horrific looking numbers as far as this is MicroStrategy. So you're trading it based on charts. That's about it. Earnings growth 82%. I can't say anything else about it because there's really not enough to go on. MicroStrategy. Okay, so it is looking a little better. MicroStrategy still's going. BITO, less risk on these. I would imagine. BITX. These stalling right here could pull back into the 9 EMA. I like it better if it gets back to the 9 EMA. Many of these Bitcoin ETFs will probably be a good potential entry. All right, Tesla hanging on to highs just below 319, 317.30. What's VIX doing? What's VIX doing? VIX at the lows. Okay, so we knew that after the election and after the Fed, that volatility would collapse, and that's exactly what we're seeing. All right, since Wednesday, volatility has collapsed back down to the lows. So anybody that was long VIX, you know, got crushed. So the good thing is at these levels, as VIX continues to move lower, is puts become cheaper, but also options are becoming a little bit less palatable because IV is coming back down on many of them, unless you're trading the earnings. Like SMR last night, the earnings were 300%, 316, I think it was, 316%. So I have an iron condor on this one, so this is working. I chose to go end of the month. IV was still pretty high. SMR. Okay, so I don't think I need to adjust this one. It's coming right back down to where I thought it would. Okay, the red lines are my strikes, the short call and the short put. Okay. So it's right in the middle. That's exactly where I want it to be. I might actually close this one for a profit because these are pretty volatile. Let me go to let me go back to let's see, SMR.
Well, we did it. Moments ago, the S&P 500 hitting 6,000 for the very first time ever. We're a little below there, but trust me, we did. We first hit 5,000 9 months to the day ago, February 8th, 2024. This year we hit 5,000.
25,
So it's taken
30.
9 months to go 1,000.
Yeah, I got a profit there. I'll just let it fade into the close. I'll probably close it before the end of the day. SMR as it eases back into profit zone.
It's amazing. Okay. It's amazing.
I was wondering what the chuckle was for, but
You
why
know.
don't you give me a final trade since you're so giddy?
Well, thank you so much, and thanks for having us, by the way.
Yeah, let's go ahead.
Glacier Bank Corp, GBCI, a little bank in Montana, amazing bank.
All right, good stuff. Bryn?
I bet Bitcoin ETF, I think having past us, I think there's lots of institutional ownership and sentiment into the
Shan?
Financial.
GBCI. Okay.
CME Group.
GBC.
Printing money, and we think there's going to be a special dividend of over $6.
All right, that does it for us. The exchange is right now.
All right.
Political elections.
It's Friday. Not much going on.
These last few weeks. So a much needed weekend, I think, but still tons to get through. You mentioned the market, of course.
Boeing.
All-time high for the S&P 500.
You catch a bid end of day. Maybe the institutions start coming in
As we talked about yesterday.
at some point.
Even the S&P
Apple
that now, 6,000
off
is where we
0.2%
sit.
of 1%.
SPX is like right on that line. I didn't check. Let's see if it had crossed it.
Okay. Trump media continues to move higher.
All-time high in the S&P 500, 6,000.02. So not on it right now.
Tesla still hanging on to the highs, off a bit.
But we did. We
AMD pulling back.
S&P 500 cash into 6,000 territory. So a monumental day, one of those days where the hats come out on the floor.
And I will say to close out a pretty monumental week, because if you look at the S&P 500 right now on at least a week-to-date basis, there's 55 names that are making double-digit
High today, 6,002.
30, 40%. Only 5 are posting double-digit percentage losses. So definitely feels like that skew to the upside is carried through the end of this week. There have been obviously the very clear winners and losers, but it's almost like what Fed meeting at this point, I have to say, which I tuned into every minute. I was very focused on Jerome Powell. He did not want to talk about the election, and he did not want to talk about bonds.
Well, and then when he did talk about the politics stuff and there was a little bit of energy, that's where the headlines were made, which I think he wanted based off of Jerome Powell being a relatively calculated individual. He did not want to talk about bonds. And that was very, very key.
Clear.
So anything he could do to kind of get the attention off of what the market's been doing and on to something else, the headlines printed another way, I think was what he wanted. But what I thought was really fascinating, we talked about this with all the stuff on the calendar. This was the least hyped Fed meeting that we have really seen in the last maybe 4 or 5 years. And then it delivers basically nothing. So it's funny how the market has this like peculiar way of just knowing when things just aren't going to be a big deal. And it knew that ahead of time because there was just no hype. There was no volatility, nothing around this Fed event.
I know, and sometimes I feel like we try to make an event of a non-event. Not saying it was a non-event, but sometimes I do think you have to trust the markets a little, and I guess that only goes in certain situations. But we'll step away from some of the overall macro conversation here on the show today. We'll kick things off, as always, with upvote and downvote. We'll be charting and trading those upvoted names. FOMO today, we're talking DraftKings, and what a volatile session DraftKings has had.
S&P. All right, let's look at the New York FANG index.
So we'll dive into what the street liked, maybe didn't so much like about their
Okay, some buyers at the low of the day, still pushing higher.
major election takeaways. We are joined by a special guest today.
Microsoft is off a little bit, so is AMD. NVIDIA, just it's showing a lack of interest. Looks like traders have taken the rest of the day off. SMR continues to fade.
The fintech space has been on a pretty nice rip as of late. This name is no exception, up 14% on the session, adding to its 104%.
Nano Nuclear.
Yeah, no doubt.
Okay, and Oklo, these saw a little pop this morning with SMR earnings out, but those have faded. So they're probably going to consolidate up here. You see the Bollinger Bands coming together, so I wouldn't do anything with these just at the moment.
Always a volatile name, always an important name to gauge sentiment.
Okay, is Nvidia going to get bought off the low here? Nvidia, Doji at the high.
Broke through 270. It broke through 300 like a hot knife through butter, and it's surging, making new relative highs for at least the last year, probably going on a couple of years at this point.
I know, and it's somehow still the story of the day. I mean, even without any major news driving still this stock to the upside, no pun intended, it is still ripping on the session, and it's amazing to me. This is the
Amazon.
week today S&P 500 performer.
Looking for higher highs on Amazon.
28%, just falling behind Axon and Palantir. So big moves in the indices this week, and Tesla has been no exception. Of course, Elon Musk did manage to somehow create this like perfect hedge for Tesla stock with his support of now the soon-to-be President Donald Trump. The president-elect, though, is not expected to be a friend to EVs, with the potential concerns really weighing on most of the rest of the space. We saw names like Lucid, Polestar, Rivian, the day after the election lower. Tesla was, of course, the exception, rising about 14.8% Wednesday, adding just around 120 billion in its market cap, more than any single stock ever, except for Nvidia, which is 4 times the size at this point. Actually, now 3.5 times the size, to give them some credit. But I was reading a note out of Wedbush's Dan Ives, of course, who's a notorious bull, saying that Musk made the bet for the ages. He actually has a $300 price target. I'm curious if he's raised that now during at least the last several days, because we've obviously surpassed 300. I think for much of the year, people thought that was a crazy narrative.
All right, I'm just going to give it a little bit of time and see if it can follow through.
The stock trades at almost 94 times its forward earnings, the highest we've seen since April of 2022, when deliveries were still growing at 40% year over year. For this year, we're not really expecting delivery growth at all. Musk says we could see that resumption in 2025, but that is crazy in itself. We're not really expecting huge growth, but the stock is the most expensive in terms of valuation it's ever been.
Yeah, and if you're still valuing this company like a car company, you're in for a tough day, as you're likely short this name. This is a stock that is an EV, an AI application through autonomous driving and the research there and potential robotics. And I don't know if they'll break through or not, but that's always carried a larger premium for this company. But to me, this is a technical momentum-driven rally at this point, breaking through a major formation that maybe the chart master will take a look at for us. But multi-year resistances broke through, and it's off to the races now. We'll see if it can continue. Next one on our list, as we take a look here, is not far, as it's in the exact same industry. Rivian, which we heard earnings from. No, we talked with Jeff Pierce about this, I believe it was, Jenny, and I kind of highlighted it. I was like, hey, look, your business is declining. You don't make any money. There's a lot of reasons why there's disappointment in the stock. I can understand why there's a high short interest.
I can understand as well. And I do feel like this is the nature of a lot of these growth stories where you're burning cash right now to try to have that mass-produced vehicle. But third quarter, they saw a wider than expected loss. I mean, again, you can't really tell based on the move today, but we saw losses per share at around $1.08 versus the losses expected at around 96 cents a share. Sales of around 874 million that missed the mark hugely, which was calling for around 1 billion. They said sales were really sequentially lower because of deliveries. They did deliver just over 10,000 vehicles in their third quarter, down from just shy of around 13,800 in the second quarter. Sales were down. Profit margins haven't improved, though they were expected to. Street did estimate gross profit margin of negative 30%, an improvement from the negative 38% in the second quarter of last year. Profit margins came in negative 45%, although absolute spending dropped from 1.6 billion in the second quarter to 1.3 billion. So perhaps being now more frugal, but costs have been a challenge. I mean, management does still expect to produce a positive gross profit in the fourth quarter. I will say that they have some really big shoes to fill now, though, given the guidance they've set forth for the remainder of this year in the fourth quarter. Actually, so does Tesla, frankly, because all of these companies have said they're still on their path of like the last several quarters. So you've got to be able to deliver now. I mean, 51,000 vehicles what they're expecting, or for the year. Guidance does imply around 13,600 vehicles in the fourth quarter.
Tesla proved it can be done. You can turn the corner in this EV world as a new entrant to the market. No, it took them a while. I mean, but they were able to do it during the zero interest rate environment for markets and kind of live through that easy money standpoint. That doesn't exist anymore. Interest rates are not zero. and there's a company in the name of Tesla that's already proved it can be possible, there's a clock put on these companies. They put it on themselves with their profit targets and when they're going to reach those dates. And the market is much more likely to hold them to those targets today than maybe.
Okay, watching Netflix. It's got a bid here. Watch Netflix.
Rivian, a name that has done nothing but
Okay, Netflix. You could trade NFXL.
A very brutal
NFXL.
Figure out the sustainability
Okay.
of
It's at $30 right now.
as much as it costs this company. They got to scale up and they got to get that negative sign for the earnings to a positive one. We'll see if they're able to do it in time. Speaking of companies that are teetering on that line, Lucid is another name that is
Netflix.
trying to follow in the steps of the Teslas of the world and really struggling to do so.
Yeah, and I will say that.
Okay, there goes Tesla. Tesla again. Jesus. Look at Tesla.
Those numbers look small because they are still losing substantial money on every car that they produce. We did see that they actually did announce losses per share in sales that actually topped expectations. They do expect still to make 9,000 cars in 2024. And
look at Tesla.
Ride. They did sell around 2,700 vehicles, 2,800 vehicles roughly for rounding in the third quarter. But perhaps more important than their earnings was their coming SUV dubbed Gravity.
Trump media looks like it's going to bounce.
Start production this year. Customers can reserve a Gravity vehicle now. It starts at around $80,000.
What's IWM doing? IWM.
Stock has had a rough year. I mean, this actually looks a little bit better than Rivian, but we have pulled back. I mean, 57% from highs and 46% roughly on the year here.
When I look back, this is one of the names that came up in the SPAC boom. And so the nice thing about SPACs is that we know that starting point as a publicly traded company was $10. Well, it's trading just over $2 now. So
Supermicro turning the corner.
75 and 80% of value for those initial shareholders. That's just gone. Poof. And it goes to show that this has
Tesla.
not been
Yikes.
a space that's been beneficial to investors, despite the move and the desire to move away from internal combustion engine to electric vehicles. But one of the things, Jenny, that's really, really struggled in my mind, take Tesla off to the side. I talked about the AI and the robotics and autonomous driving and that's different. These companies are seeking to break into an industry with names like Ford,
ADMA. Let's see.
ADMA. How Ford is just perpetually a sideways stock.
Okay, ADMA is on the move. ADMA Biologics, that's being mentioned by Joe K.
In that industry,
ADMA.
being created. So unless you're bringing something new to the table, in the case of Tesla, robotics,
Nice
AI,
breakout of a base.
driverless cars, that kind of a
That
thing.
one was on the IBD 50.
What's your
That
best
looks
case
very
scenario
familiar.
becomes Ford? It's always been a tough
ADMA.
sell.
Let me see what the
I know,
earnings
I
look like.
agree. And
ADMA.
It's one of those names. I know we joked that American Airlines was like
ADMA.
like what was it, like 13, 14? It is. It's actually right now, ironically, at $13.89 a share. But this is another one where to me it's just perpetually at like $11. And
It's got 1,400% earnings growth. ADMA. Okay, I'm looking at ADMA. This is one Joe K just mentioned. Bollinger Bands, volume.
Slightly different, but somehow falling in this space as well. That is NIO, which has seen some weakness. And I was reading into the Chinese stimulus that's expected to be worth around $840 billion when converted to US dollars, as part of the local governments really trying to ease some of the hidden debt burdens. But the market, I was reading this article about how we're not seeing it come to fruition. We're not seeing it benefit these names, and we're not really seeing more of a budge to the upside. But I have to say that I think that following the Trump victory this week, Chinese stocks are declining largely because Trump has suggested that boosting tariffs on Chinese exports will be something he's interested in. I mean, he said as much as 60%. I have to say that would have a huge impact, of course, on some of these names. And so I think that that's perhaps more of the story of the week for these companies, less about like we're analyzing the Chinese stimulus, which
Okay, Amazon.
But I mean, that money isn't necessarily going away at anytime soon.
Yeah, it's just
Okay, Amazon.
in the case, and it's been my point that I've made several times over the last year, 2 years, is they keep doing the stimulus, and you get excitement, euphoria in the market for a week or two, and then there's nothing to show for it. And so at some point, fool me once, fool me twice. We talked about that before. At this point, we're like 9 or 10 stimuluses in, and all of these stocks do is trend lower. So I think the market just lost the patience with some of these Chinese ADRs and broad-based China exposure. Throw the kicker on there of potential tariffs, really making that job more difficult, perhaps, to make a comeback. you can see why there's a lack of optimism. 5% decline though in NEO, another name that saw better days in the past.
It's definitely well put, and I would say I entirely agree with you there. The lack of patience, I think, for some of these names is definitely the front-running story. But we'll be diving more into those that are U.S.-made EVs. We'll be looking at the charts as well as some example trades of both Tesla, I think, for about our 5th time this week, and Rivian. Stick around, Next Gen Investing. We'll be right back.
All right. Amazon, just watching. Futures are hanging in there. Tesla popping up. I'm on cruise mode right now. I'm just sitting here watching. Took a lot of profits off into strength. SMR, I'm looking at that one to take profits on that Iron Condor. I took the put side off at the highs. Monitor SMR calls.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern.
Okay, Bitcoin looks like it's trying to get something going when no one's watching. Watching NVIDIA, that's trying to turn. NVIDIA still looking. There's just a lack of momentum, lack of volume, lack of interest. We've had a tremendous week since the Fed and the election, so I don't know. Not doing a whole lot.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to
ARK K finally getting back into the 50s.
We're giving our Chartmaster today a brand new stock we've never talked about this week, and that's Tesla, because I think that we, honest to God, have talked about this name almost every single day, but for a good reason. So, Rick, walk us through the technicals here. I mean, this chart continues to amaze and surprise, and gosh, I mean, if I've ever believed in Elon Musk more than I do now, I don't know if it's possible.
That's the thing, Jenny. You follow the story in the news. This is what, is making the headlines and making the waves, and for good reason. The price activity is extraordinary. I can't think of another way to put it, really. So when we look at this chart over the past year, there was a key area that I've mentioned many times here. You see this light green line, 265, topped out there, roughly around there, all the way back there. Again, looked like we were maybe going to break upward during our last run up, but failed. Then, explosive move to the upside based on not only earnings, but also on the presidential election results here. So now we are, just far beyond any recent term price history here. The prevailing trend line that we could do, we have this channel here, and that's about where we stopped yesterday. But just, once again, just not even pausing, just an extreme break to the upside here. You could even do this very steep, shorter-term trend line connecting the lows from this very odd kind of island reversal low here to the subsequent lows next. But, like I said, too, very heavy volume happening on these moves up. Hold on for dear life, I guess I would say.
No kidding. We are full speed ahead here. So are we seeing
Tesla looks like it's going to keep going. Microsoft drifting lower.
Positively here, or are we seeing any divergence?
Momentum is looking, strong here as we look at this. First of all, you could argue that we had kind of just a broader series of upward progress here. We kind of bottomed out around here, managed to hold on. Then we made a big push to the upside above the 50 midline. Here looked maybe like a little bit of a question mark because we had higher closing prices, but RSI was actually very slightly lower. But I mean, it's all just kind of blown away now. We are above our red trend line. We're in the overbought area. We're making a new high over the previous high. I mean, you know, it's a very strong move to the upside. We're coming in about 76 right now. Remember, RSI only goes up to 100. So 76, you know, that's in the overbought area. That's a high reading. You know, that this is a strong push in terms of momentum.
No kidding. So, I mean, now when we watch levels, obviously we are somewhat in uncharted territory. I have to imagine we'll be seeing some price target adjustments from the analyst community. But what are you watching here as far as price? Again, the importance of standard deviations, which we oftentimes say when we're at uncharted territory, no pun intended again.
Right. So standard deviations, you know, you take your data, you measure the amount of variance away from like, you know, the central point, basically. That's how we kind of, the thinking behind these types of studies that we use. We're comparing price history to itself to point to relatively extreme
Futures
levels.
just sitting here just below 6,000.
Like runaway move where, you know, we don't have any
S&P cash, 6,000.
come in handy. We take our blue linear
Futures are trading 60.25, 60.25.
two standard deviations, roughly where we topped out yesterday, roughly where we hit our lows today. You know, now we're at 3. We're above 3 standard deviations, coming in at 318.82 plus 4, 351. Some ideas to watch out for. I mean, if we do get a pullback, this would probably be one area to look for potential support. 273 old high, and then it's you know, we did our low point was a bit above that here, but that was still roughly where to look for. And finally, long-term chart. You know, we had said we were in uncharted territory before, but if we look back 300 to 315, significant highs and lows multiple times. Haven't really spent a lot of time in this area. A definite resistance point, but we're clearing it. Next high around 384 to the upside.
Yeah, and I will say that this chart continues to become more and more compelling, especially as we see pretty much all indicators just point to bullish activity and bullish price. So now when we trade this name, Alex, obviously for example purposes only, walk us through how you think about this name when looking at maybe a more neutral to bullish example strategy.
Yeah, I've long said the hardest time to trade sometimes is when a stock makes a move like this, because you either are fighting that desire to kind of go counter trend, or you're jumping
Netflix, no follow through. Just pull back a little bit. Netflix. Okay, it just feels like there's no momentum. It's a Friday evening, no surprise. NVDX trying to push higher.
selling below the market, the 300 put twice, and then buying the 305 and the 290. So it's a $5 wide debit spread, and it's a $10 wide credit spread. The idea being, if the stock continues higher, it's done for a credit. You simply keep that kind of like a short put vertical. However, if it moves lower, there's actually a chance, if we look at the risk profile, where it can actually make more than the credit if it perfectly pins that 300 mark. I always kind of say the more important takeaway here is less about that added kind of kicker, but more than that added kicker reduces the break even. It increases the probability of success on this. So again, 305, 300, 290 put butterfly in December, done for $1.50 credit. Stay all these options on the money. So stay above 305 by that December 20th expiration. You simply keep that credit and you move on. If it does get to 300, we can expand to as much theoretically as a $650 profit. Probably a low probability event, so I wouldn't bank on that if you were doing this type of a strategy. But it does define the risk and have that break even at 293.5, which is below not only the 315 former resistance, maybe potentially now support, and of course that 300 mark as well. And it also does, of course, limit the risk to $350. So
Amazon, just sitting here, right? Tesla, let's keep an eye on Tesla. That's the star of the day, star of the week, really. Tesla's still going. I'm not chasing this. I don't have a position anymore. I'll look at it next week.
On the year and slightly lower for the week even, which we've seen a winning week all day.
Trump media is starting to fade. Trump media.
Because it's painfully different when comparing to Tesla.
For sure. Similar companies, two very different stories in terms of the price action. And, you know, I mean, it's not good in this one. I mean, there's no other way to sugarcoat it here. You can see that starting with those highs we had all the way over there, we connected to our next set of highs far below, you know, where we were initially. 24.62 was the high, topped out here around like 19 or so. So a pretty big miss in terms of coming close to recapturing some of these key price levels. So from there, kind of continued to the downside. We have given up our moving averages for a brief time. We had a big spike to the upside here. We recaptured our moving averages. It didn't last though. Now we are below all three of them once again. And we are also at a pretty important point here, our green line, a low point that we saw repeatedly over and over again around this area that we slipped below a few days ago as well here. Now we've kind of
Supermicro turning the corner. It's not going to be a straight shot to the moon, folks. It's going to take some time, most likely. But it does feel good about turning the corner over this latter half of the week. Supermicro, just be patient.
Trend line that you could draw here. So, it's not a great situation, and it's happening on heavy volume where we had these down days here. So, rough to be sure.
The one thing I will say about Rivian, though, somehow it always does have pretty massive volumes. I'm curious then if that translates at all into momentum, if RSI is showing anything different.
Yeah, very high volume. Our 50-day average of volume is about 38.8 million shares here. So that's a large number for a stock. And when we look at RSI, we can see momentum has not really painted an encouraging picture for us here as we try to make some sense out of what's going on with the price action. Longer term slide has been broken with our pink line here. But we also had, unfortunately, you can see, this darker red line here. Even though it's a very modest slope, we haven't really been able to overcome.
NVIDIA looking forward to lift higher. Tesla, you could try to scalp it. I'm just not into scalping on a Friday. Seeing the momentum, looking at the TTM, people are probably still trying to goose it a little bit higher. I'd like to see NVIDIA move. Google's pulling back a little bit. Google, I closed yesterday. Google, I have no position in. Let's see. The sector-wise, we got communications, financials, industrials, tech, SMH, semis, and consumer discretionary. All of those are doing well. The defensive sectors are all down.
One standard deviation channel, one standard deviation below our linear regression line comes in near 673. So one potential area to watch, really quite a lot coming together in the same area. Linear regression line, yellow 21-day EMA, volume profile, point of control, multiple trend lines and lows, all in this area around 10. This is a key area to hold if we do get that push to the upside. Red line here, series of lows, and high there that we didn't manage to close above back there. You can see the price action is kind of a mess, but no strong close above 1275 is the level in question. Another place to watch. And when we look at the long-term chart real quick, I mean, this is what we're talking about. This is why it's so difficult. We're down like 94% from that high point we saw. It's so scrunched up you can hardly even see it here. But this is the recent term, the past few years here since about 2022, trending downward, kind of stuck. Heavy volume near the lows. Rough situation.
AMD turning.
Definitely a rough situation. Thankfully today,
Looking for Microsoft to turn. Supermicro starting to give me a green signal.
Appreciate it, Rick Ducat, our chart master. And now we trade this name. So walk us through the thinking here, leaning into, again, a more neutral to bullish strategy. If you're a believer in hopefully the return of growth in Rivian and, of course, for example purposes.
Yeah, it's rallying after its earnings. So you can kind of point to, hey, they just updated us to the fundamentals. That risk factor is in the rear view mirror, and the stock actually rallied on it. So that's a welcome change, I think, for some Rivian investors. Now, I use this as an example to highlight a strategy that I think a lot
Anybody seen Cayman? How's Cayman doing?
Just because of the nature of the fact that a younger investor maybe doesn't have as much capital to work with. But one of the first strategies that many option traders deploy as they graduate from becoming a just traditional stock share investor to using options around their portfolio is simply selling a put. And the reason is the risk of selling a put, if you allow it to take hold, is that you just get assigned stock shares and become a traditional stock
Meta.
So in this case, say you wanted to potentially
Meta starting to turn.
Rivian, selling the put in December at the 9 strike for, let's say, 50 cents presents you with an opportunity where you would potentially have to buy the stock at an equivalent price of $8.50. But if it never gets down below 9, you'll simply keep that 50-cent credit, which is really $50.
Okay, how many shares of FBL do we have?
And so you
FBL.
assume the risk of a shareholder. So, of course, if the stock were to go to zero, you'd be exposed to that full amount.
500 shares. Do I want to add to it? Just leave this alone.
You're setting up a situation where you already wanted
Leave
to
it
be a
alone.
shareholder. You're getting paid to wait for that price that potentially you wanted to buy that stock at. So you can see why a lot of traders.
Okay, FBL. Facebook is starting to. All right, Meta. Starting to catch a bid.
Stock investment portfolio. This is where sort of trading meets investing, and then you can see how this could go full circle. You get assigned those shares. Perhaps you think about selling the call, creating a covered call. It rallies through. You call it away.
All right, Meta's starting to lift a lot better. All right, watch Meta here. This is probably going to go. All right, looking good. Meta, ABCD pattern.
50-cent credit thereabout. $850.
All right, Meta.
In the similar kind of notional value of risk, even though it's a short cash secured put, as some of the other trades we look at on a daily basis.
Yeah, and that's a great takeaway here. And I will say that in real time, we have seen at least a little bit of an improvement. Now we're only down about 0.2% for the week. So maybe Rivian can close out the week
Meta.
in positive territory after all with a nice 1% gain here on the session. But that'll do it for our Chartmaster segment. Coming up
Meta
next,
starting to go.
another post-earnings move.
Those
that is
cheap calls are
which has been
doing well.
all over the board this morning. First lower, then higher. Now we are up about 3.6%.
They were 50 cents.
We'll dive into
No, they were 30 cents. 30 cents to 50 cents.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free.
Meta, 6,000. All right, so we could get a little bit above.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just.
Okay, see if we can get a follow through here on Meta.
Each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
See if we can get a follow through. Momentum.
It's your number one broker with the best full service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Okay, TTM on the live screen here. Watching Meta for a follow through. All right, watch Meta.
We're experiencing technical difficulties.
Meta.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Do. Okay.
Welcome back to Next Gen Investing. It's now time for FOMO. Today we are talking DraftKings on the back of its quarterly update. It feels like this has been many trading sessions packed into one because every time I look at the stock, we're at an entirely different price. But thankfully, right now we're checking it at a 3% gain. Joining me now to discuss more is Diane King Hall, Senior Markets Correspondent for the network. So, Diane, I mean, there's a lot to get there today, especially because first we were higher, then we were lower. Now we're firmly higher. So, what did the street like? What did they not like?
Yeah, it's so wild to watch this, especially when you saw the reaction when the numbers first came out. Like the indication was that the stock would be sharply lower, but then you saw this bounce back, then you saw things, go a little lower, and then even as recent as like 20 minutes ago, it's pretty flat before kind of popping back up to what we're seeing now, up 3%. It was a mixed bag in terms of its results. Revenue came up short at 1.1 billion. The street was looking for 1.12 billion. Adjusted EPS did beat expectation. That was a loss of 17 cents a share. The street was expecting a loss of 42 cents a share. Now, their guidance, they did whittle down their guidance for the balance of 2024. They whittled it now to a range of between 4.85 to 4.95 billion. The previous one range was 5.05 to 5.25 billion. They said that reflects that some customer-friendly sports outcomes. In other words, that they're going to have to do payouts in the fourth quarter. So that's why they kind of drew that back. They also gave their forecast for 2025. Their revenue outlook for 2025 is a range between 6.2 and 6.6 billion. That would be a jump of more than 30% in terms of the range that we're looking at. In terms of what the numbers look like, again, revenue came up light, but there was
There goes NVIDIA. All right, we're starting to catch a bid, end of day. All right, so we're a little early. Usually I wait for about 2 o'clock, or I look for institutions to start buying. If they're going to do anything, they usually show up after 2 o'clock p.m. Nothing super sacred about 2 o'clock. Sometimes it's earlier, sometimes it's later, sometimes not at all. But Meta, those calls were 37 cents. They're doing quite well now. Okay, let me see what I can close these for into strength. Meta.
We discussed this name yesterday, and I highlighted the fact that there were likely some customer-friendly sports outcomes that had happened, and I thought it was kind of funny that they actually straight up addressed that in lowered guidance as a result. But there's a lot of misconceptions around how this business actually operates from the outside. This idea that half the money's on both sides, and I actually
Meta.
did this on today's episode of Daily Trader. So shameless plug too, if you want to look at that a little bit more, check out the video on demand, YouTube, and check out that episode. I go into depth a little bit more. But all-time highs were over 6,000 in the S&P 500. DraftKings higher again after some weakness. Analysts love this name. Anything else that viewers should note from this report?
No, you make a great
Meta.
about this stock. They love DraftKings.
Okay, go, Meta.
They raised their view on it. CFRA raising their view to a strong buy. They boosted their target to
Tesla's still going. Amazing move on Tesla.
The reason that they see it this way, they say they have
Netflix and NVIDIA look like they're going to join the party maybe. If we get a buy order, if we got a program buy, that would be nice to see all these continue to move higher off the low. NVIDIA looking for, okay, NVIDIA looking good.
Will DraftKings get into the prediction markets, right? We've seen some developments in that space when you think about Kalshi and Robinhood, election predictions markets, in other words. And it sounded like that was a serious consideration before the next election. We know that there was a legal challenge to that. The legal challenge moved in the favor of those who operate in that space and wanted to operate in that space, again, like Kalshi and Robinhood. So I wouldn't be surprised to see an entry into that market as well. Who knows when that will be? They said, in the conversation, the CEO saying targeting before the next election.
Yeah, and I think that's actually a really great point too, because some of these other sort of trading and betting tools are actually really fascinating when you think about the target that they can really, like the mass demographic they can appeal to outside of just sports, which is, I think, relatively not niche, but it definitely then cuts off some that are not naturally interested in sports. But great insight as always, and appreciate it all week long. Dan King Hall, senior markets correspondent for the network. And so now we trade this name, Alex, and I will say that I was all very much excited about Thursday Night Football. It went in my favor for the first time maybe ever.
It was a great game.
It was a great game. I wish that the Bengals would have won, but nonetheless, when you look at trading DraftKings here now for example purposes, walk us through your thinking.
Yeah, one thing I want to say too, kind of to the point about the prediction markets and how
Okay, Meta pushing a bit higher. Tesla gone. Tesla.
But time will tell if there is that full sort of exchange-based movement towards that. But nonetheless,
Shaking my head on this one. Tesla's still going.
For example, here in the midst of what was initially seen as negative,
Wow.
met with optimism, the stock rate's higher now.
Tesla.
Buying a call vertical.
Qualcomm. Is it turning? Qualcomm. Looking for that to turn up. Qualcomm.
And what we looked at here was buying the 39.42
Qualcomm.
vertical. Spending $1.50.
Okay, bouncing Qualcomm. Could see something next week.
position.
Okay,
And
nice move on the futures.
42 is max profit with the risk below 39. So make it kind of a situation where, hey, the stock goes up, if it goes through 42, max profit, fall below 39. Yeah, that's max loss, but it's limited there. So a chance to participate, break even at 40, 50 if you are bullish after the update in DraftKings.
Yeah, and I will say that hopefully we hold on to this decent move, although we're already sort of giving it back in real time. So we'll be watching DraftKings very carefully here as we go into, of course, the close, which is now in a few hours. But we'll leave it there for FOMO. Now, coming up next, we will discuss the truth about some of these election year markets and what we can expect for the remainder of this year into the next with the new administration taking over. We have a special guest joining us today, Dr. Preston Cherry. We'll break that down for us coming up next.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Gamma on, traders. Subscribe to Schwab Network's YouTube channel for brand new limited series taking options trading to the next level. Gamma on, coming soon.
Next Gen Investing. Let's now bring in Dr. Preston Cherry, the personal financial planning PhD and founder of Concurrent Financial Planning. So, of course, we're discussing all that we can expect from this election year market.
Okay, looking for more follow through in Meta.
Also, get your thoughts on some of the biggest myths, because I will say that unfortunately, tuning into the markets very heavily, like we have, I have myself even seen a lot of myths, I think, this week.
Oh, yeah. So thank you for having me, Jenny. Yeah, I think folks want to be extra emotional. I mean, the politics season.
Bitcoin is lifting too. Bitcoin is lifting.
So we want to manage and investing emotion over time. And with politics season, folks are just at their highest emotionally, and managing that could give you some boost to your portfolio if you're able to manage the heightened emotion right now.
Dr. Cherry, thanks again for joining us. Glad to have you back. Let's start there, because this is something I've been kind of harping on all week, and it's not limited to elections, but I basically said, hey, the market doesn't wait for you. Whether you're celebrating, whether you're sad, whether you're trying to figure something out, the market moves on. It prices things in. It looks to the next thing. We just had a bunch of earnings last week. We had the election this week. We had the Fed yesterday, and the markets keeps going.
All right, Bitcoin's trying to break out, folks.
Done to be stoic and be emotionless and make decisions and try not to be biased. We all have our own bias. What are some tips you have?
Bitcoin's trying to make new highs here.
To manage the fact that we are emotional.
All right. Meta pulling back a little bit, looking for that fair value gap to get filled, maybe. ABCD pattern. Potentially a C pivot. Got plenty of time left. Tesla's still going.
We simply can't do it. It's historically proven. That's why evidence-based information is helpful. It is hard to manage emotions over time. That said, if we just stay tuned in, I was just sharing with my 6-year-old son, 6-month-old son, there's a difference between starvation and hunger. And so you manage those emotions early. So if we're in tune, if we know about it, then we have a greater probability of managing it.
Holy smokes. Holy smokes. Tesla just, oh man, crushing it.
Say to ourselves that those are to be expected, and particularly in election years where there's uncertainty. It's not necessarily the presidential election that's given the given the market is direction. It's the uncertainty. And then when you have the president that is incoming, then we have a more certainty, as far as the market is concerned, about what the direction is going to be.
Yeah, I think that's exactly what we've seen this week, frankly. Not so much like the pure, like Trump bump, as some are calling it. I think what we're really seeing is more of that sigh of relief that we at least have some concrete answers for what the next 4 years will look like. But I will say that there is this extra attention right now on investing and trading and buying various stocks. I have friends texting me like, should I buy? And I'm like,
All right, Bitcoin looks like it's going to go.
those that are trying to get into this market or really starting out their journey with investing because it's so volatile right now. I'm like, you know what? Your guess is as good as anyone's at this point when you're trying to time the market.
Right. So over the long run, statistics show that under both parties, and this is going over the long run, which investing should be anyway, the market tends to perform better or perform the same under both administrations, Republican and Democrat, about 11%, so to speak. And then in the market, in the year of elections, 78% of those election years tend to end up positively. So what we're saying is stay invested for the long haul. And if you knee-jerk reactions cost.
Netflix looks good. Come on, NVIDIA, you can do it. Meta, nice move on Meta. Meta.
Recovery days or weeks.
Meta.
Those best days or best weeks, then those are the advantageous parts.
Money.
Long-term positive portfolio over time.
Dr. Cherry, it's almost like you're describing something that was created with the intention of creating wealth for those who are involved. It almost makes too much sense. I mean, that's why you hear the idea, at least with investment and retirement type portfolios, that it's not about timing, it's about time in the market, which is really the point you're making. Of course, we have viewers who are a little bit more active with parts of their portfolio, but nothing should be so binary as all in or all out is always my kind of thought. And you're an investor and you're a trader, and kind of separating and defining what you're doing, I think, is really, really important. But I thought the stats that you had were fascinating. 78% of the years are higher. It's almost, again, like we're talking about an asset that is designed to increase over time.
Yes, absolutely. And I agree with your sentiment there. Speaking to the choir here, we have these core portfolios that are for the long run.
Okay, futures.
Policy that gives opportunities for folks where you have that dry powder on the sideline and you're saying, okay, where are things going to go on sale?
Oh my goodness, look at this market. Yeah, do I have any calls? Any spot calls? Did I not buy spot calls? Oh, I did. I did buy spot calls, but they expire.
What are the market environments? What is the policy happening? What are the
No.
business temperatures? What is the sentiment?
I'm so sad,
Take advantage of those
Uncle Albert.
that may present themselves in truth.
We're so
Okay,
sorry.
these opportunities, I'm curious to pick your brain on diversification efforts because that's something I've long been told to do in times of volatility, in times of
No, I closed it.
But I think that right now with a new administration, there's
Those 615s, I closed them.
the winners and losers. It's way too soon.
I closed them already.
What's your advice for someone trying to?
That was Lee Star had mentioned the 615s, I think.
Well, yes. As far as
Okay, looking good.
sentiment is concerned, you have
Money.
CEO leaders that are saying, okay, what are some business-friendly type of environments
Go, Meta, go.
the growth sector do fairly well over
NVDX.
the last several years, and no matter what is going on in the
Boeing, like to see that lift too. Boeing. Like to see Boeing get out of this base and start moving higher. It's going to move out of this base eventually. Okay, Boeing looks like it might start to move late in the day. Boeing.
Fed and its interest rate policy and sends signals for good business, then those stocks that have that positive sentiment about growth aspects and for their businesses and the economy, then that sector will particularly continue to do well. Absent some of the craziness of
Okay, Boeing's starting to lift with nobody watching. Looking for a move through 161, above 160. 160 will add calls.
I kind of say, hey, the more things change, the more they often stay the same as well. So, Dr. Preston Cherry, I hope you have a great weekend, and thanks for joining us, the founder of Financial Planning.
Semis?
Coming up next is
Yeah, I had semis up. Semis?
hospitality restaurant-based payment processing back-end software company. When we talk about a lot with George, looking forward to the latest right after this.
Empower your portfolio with
Semis.
Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Oh, is everybody having a good day? Yeah.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Boeing, come on, Boeing, you can do this. Bitcoin. Say goodbye to Bitcoin.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market. Weekdays at noon.
Okay, I like to see Netflix is going here. Netflix.
Believe me, when it comes to investing,
Nice.
I love Carl's Way. Take a left here, please. But there's a Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Next Gen Investing here on this Friday. It's under 30 time. We'll take a look at Toast. Fun company, great little logo they've got. Joining us now, George Tillis, Senior Market Correspondent for Schwab Network. We've talked about this company a lot over the years, and it's becoming one of those situations where there's almost
Okay,
like a
Boeing's trying to go.
where you're seeing it sprout up
Bitcoin is blasting higher. Just took out the previous high. Oh boy, there goes Bitcoin. There goes Bitcoin.
It's really generating a lot of what are called network effects. The more installations.
Yikes. Okay, we see it. We're running into a little bit of supply on Bitcoin there.
We've talked about, like you said, at least several times in the past couple of years, this company, which obviously has manifested in some great returns in terms of price action. But, you know, as we talk about the business itself, and they've been growing not just the installation of the hardware, but they're getting more revenue retention, which means they're selling more services on the existing platforms that they're installing in restaurants and hospitality areas. So, you know, they're generating their initial was point of sale technology, but now they're initiating things like gift and loyalty programs, payment processing, fintech, but also back-end ordering and payroll management.
Okay, yeah, Tesla, don't be sad. We'll get some opportunities in the future.
Technology firm that is now, you know, in over 100,000 restaurants domestically, but they're also expanding in other
Still going, Tesla.
areas of that consumer ecosystem.
Okay, NVIDIA, just a little dip there in NVIDIA.
I can see why the stock is higher because they were expected to basically only earn a penny per share. They actually vested that and they earned about 7 cents per share. And if you look at the sales, they grew 27%, beating the estimates. But at the same time, the guidance was raised, and particularly the guidance was raised for subscription and payment processing revenues. They're guiding between 31 and 33%. If you compare that to 27% sales in total this quarter, you know, subscription revenues growing faster than total revenues is a good sign, you know, or suggestive of a good sign, because it gives you an idea that they're generating more recurring revenue. And the more recurring revenue you have, the more visibility you have on your revenue and earnings, and you get closer and closer towards consistent profitability. So, with that said, you know, if you look at the forward estimates for
earnings growth, the company is expected to earn about 49 cents this year for 2024 and over 70 cents next year. So you can actually see that, over the next year or so, the earnings growth is expected by analysts to continue on sales, which are expected to be in the mid to high 20% range. But again, the composition of those sales becoming more subscription based is really a key to expand operating margins and eventually get closer towards GAAP or net income profitability.
So, George, is there any looming threat of competition in the space? Because, gosh, we've talked about Toast 100 times, I feel like, on this show, and then we've talked about the way they've carved out somewhat of a niche. But I do notice, just from my own shopping, my own consumerism, frankly, that I'm seeing more and more of these
Okay, Meta pulling back a little bit.
that are flooding my ecosystem. So, is that a looming threat to this company?
Well, yeah, I think competition is always a threat, especially competition where, entry into the business is not as high. Obviously, if you think about competing with a company like NVIDIA, the entry is extremely hard because of technology know-how and all the intellectual capital that goes behind it. And software typically is intellectually based, but, once a company is generating a lot of revenues in an area of the software ecosystem, then competition starts to encroach. And I can see that happening with Toast as a possibility. And typically, you don't necessarily see a winner take all that lasts in the long run. In the short run, the short run could last, a couple of years, several years, in fact, where the winner takes all initially, and Toast might be that winner. But eventually, competition will start to erode not just the revenue growth, but also potentially the earnings growth. So I wouldn't be surprised to see over time that Toast's revenues start to, growth starts to plateau and revenue growth actually starts to go down. But that's okay as long as they're gaining more scale. And
Tesla, wow, what a move in Tesla. Amazon pulling back.
Yeah, and I think that's a good point here. Well, I'm sure we discussed
Coinbase looking better.
Visitor on our Under 30 segment, though. Appreciate it. George Chillis, Senior Markets Correspondent for the network. And Alex, that'll do it for us for today and for this week, the longest week ever. But we are finally at least closing things out. We do have about 2 hours left in the trading session today. Coming up next, we have the watch list for Nicole Petalides.
So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours live programming. We kick off every day bright and early at 8 a.m. Eastern, the Futures Show, breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in the studio hosting our 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day. We invite top analysts and investors to determine what's driving the early action, how to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange.
Okay, Coinbase looks like it wants to go some more. Coinbase.
Which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the market. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at launch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, trading trends with former floor pros Tom White and Kevin Meeks. At 3 p.m., I'm here to guide you through the close.
All right, Coinbase still going.
The best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
Schwab Bank Investor Checking, the
checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time, and we're coming to you live from the New York Stock Exchange. We've seen records this week. The S&P 500 hit 6,000 for the first time ever. The NASDAQ at 19,000 and the Dow at 44,000. It's been the best week of the year, or in a year, I can say, for the S&P and for the NASDAQ. In the meantime, we have a big show for you. We have the CFO of AvePoint after the company's latest earnings report. We'll have in-depth analysis of the Fed's rate cut and what to look for in the market and the cuts going forward. And our panel standing by to break down the earnings reports across the board. And we'll take a close look, of course, at Airbnb. In the meantime, a quick look at 2 hours left in this trading day, and what a week it has been. And you see all up arrows. There it is, S&P 6,000 for the first time ever. 6,006, it's up 0.5%. The NASDAQ 21.
All right, Bitcoin's making some progress. Looks like it's going to go. A lot of buyers here in the day. Bitcoin looking good.
And the VIX is at 15, at a level 15. The VIX has been down pretty much all week. It's down about 3% today. Well, it's coming off the lows. Now it's down 0.75%. So there you have it. That is the big picture of what we are watching. I want to have a great conversation here. Dryden Pence is with us, Chief Investment Officer at Pence Capital Management. Great to see you. What a week it was. When you think about the action, I mean, what did you make of the action?
Well, I think
Okay, Coinbase is going. Bitcoin is going.
big questions are off the table. We now know who the president's going to be. We now know what the Senate's going to do. So clearly, we're not going to have tax increases, and we're probably going to have tax cuts. So when you take that backdrop, everything moves forward to something that.
Okay, looking for a push higher on Meta. Futures tickling the highs again. Jeez. I tell you what, there's expression, be careful what you wish for. Well, we got what I wished for, but I don't know. The market just feel like it wants to keep going. So what I'll be looking for is an adjustment to the 6,000 level. Lots of options there. Some of it's expiring today. So I'm not making too much of it, but we are at 6,000, new all-time highs. So looks really good. I'm thinking that we're going to retrace into this week's candle. Okay, so if you look at the S&P 500, I'm thinking that we're not going to just go straight up undeterred. I think what's going to happen is we're probably going to, we could do something like we did right here. The last time we had a 4-week pullback, we went below the 10 EMA. Over here, 3-week pullback below the 10 EMA. 10 EMA turned back up. So, I mean, I'll just have to wait and see. But I'm thinking we're going to retrace a little bit into this week's candle. And then, continue this trend. Because it's only 1 week up after 2 weeks down. So looking for the average 2 to 3 weeks, 4 weeks. We definitely have a catalyst. We have a catalyst for higher prices. expectations. You got institutions, starting positions. So look at high volume. If we run a scan, let's run a scan here. Okay, I'll run a scan on high volume. Okay, so let's do that. Let's do a high volume scan. Volume scan. Okay. You can see what we're looking at here. Stocks with more than 500,000 shares. A close is greater than the 200-day moving average. Okay. Looking at the rate of change over 10 days to be increasing. Okay, that looks good. So let's go ahead and run a scan and see who pops up. Only 2 stocks. Sony, which my son wanted to buy. He's going to be sad if this looks really good. Sony Corp. Oh, wow, it gapped up. Damn it. He wanted to buy this stock. Okay, so this is one of the stocks that showed up on the scan. QDell, another one. Big volume. All right, Meta, looking for a follow through in Meta. Bollinger Bands are starting to come together.
So this is a dominant platform. It's a dominant place. So the catalyst for continued, in addition to all the AWS and all the AI, but the catalyst for this point is going to be a strong Christmas, and Amazon's going to get a large percentage of that.
Yeah, look, it's trading around 208 today. Where do you think this stock? I saw Daiwa Securities has Amazon's price target now at 230 and a buy rating. That was today, this morning. So they see upside from 208 to 230. Does that sound like a good place to go there?
I would think that that's a reasonable price. We usually don't publish exact price targets, but I think that you're looking at continued growth in Amazon, and I think that we're certainly constructive on it going forward. And rather than pick a specific price, it depends on how long you're going to hold it.
Right, and the trends and the news flow.
Okay, Bitcoin holding the highs right there in the evening session. Those evening session highs on Bitcoin holding. Netflix looking for a pop. Okay, we got less than 2 hours to go now. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 8th of November. Got the Fed behind us. We've got the election behind us, implied volatility, VIX dropped. So we're looking for stocks that performed well in Trump's first term back in 2017. His first year in office, what stocks performed the best? We're looking for institutions to show what they're positioning in. I have a feeling many stocks in the groups that worked during the first President Trump's first term in the first year, I got a feeling a lot of that positioning will start to show up. So if you want to do your own homework, that would be helpful. Just post whatever your findings are in the trading room. Helps everybody else out. I'll do my part as usual. Looking forward to next week, and more of the same. But I'm looking for a little bit of a retracement into this week's candle. I mean, that was a massive move this week. I can't see us holding on to all of these gains initially. I mean, we could, but I got a feeling I'm going to retrace back into this candle a little bit at least, and then take off to the upside. Get people that are too overzealous and too euphoric to buy because they missed this week, maybe. They get caught, it pulls back, they sell, and then it takes off and goes to the upside. Because we're in positive gamma, we know that dealers will be buying dips. Okay, and with the move lower in VIX, that created the Vanna tailwind that we're seeing with the markets moving higher. So Brett called that right. Okay, looking for Meta to make another higher high. If you took those 0-day calls, I would sell them into strength. We're getting close to the 590 strike. That was the next strike above. They were 37 cents. We'll see if these run end of day. Hope everyone had a good week. It certainly was a good one here. I know a couple of you mentioned that last week was pretty intense. You know, some of you lost some money last week or had a bad week, I should say. A couple of comments were worst week since 2020, whatever. Okay, we got to watch the weekly chart. My son gets this. It should be very easy to understand, okay? When you're in an uptrend, 10 EMA is up and to the right. Count the number of weeks that you're up. As you start to proceed beyond 2-3 weeks up without a pause, you're getting more and more risky. So you want to make sure you're paying attention to junk bonds too. As we're rising, we want junk bonds to keep doing what they're doing. So we got a pretty good tailwind so far. VIX is dropping, so that's creating a Vanna tailwind that's seeing the futures make higher highs here into the close, into the last couple of hours. But yeah, if you watch this weekly chart, that's going to help out a great deal. So on the first week, I'm more aggressive. Okay, second week, I'm still aggressive, but not as aggressive. Looking for the daily to trend. Okay, we're extended up here. We're 3 days above the upper Bollinger Band. That's good reason to think it's going to come back to the 9 EMA. Still be bullish, but come back to the 9 EMA. Doesn't mean it has to. That's just what I'm positioning as far as my risk is. I'm positioned with risk. You also got biotechs moving higher. You see, Frank was trading biotechs. We had biotechs on the watch list. Okay, biotechs were on the watch list. Okay, so last week, looks like I took it off for this week. But last week, I'm pretty sure I had XBI on there, right? 2 weeks ago, maybe? We're looking for that bounce in XBI. No? Could have sworn I had them. Okay. XBI. Huh. Have to go back to September. I know we were a bullish XBI though, because we were looking for these bounces to follow through. Anyway, regardless, if XBI is moving higher, that's a risky asset class. So if traders are risk averse and they're not thinking about trading at the moment, they won't trade junk bonds. They'll get out of junk bonds. They won't trade XBI. They'll get out of XBI on biotechs. They won't trade Bitcoin because that's a risk asset too. Okay, they won't be trading Bitcoin. Guess what? They're trading Bitcoin. So that's risk on. So 4 of our indicators are risk on. We've got the 10-year yield backing off, right? The 10-year backed off. So maybe this can turn back down a little bit. And the US dollar. Okay. Now, during the first year of Trump's presidency, I believe the US dollar moved lower eventually, right? We looked at this yesterday. Trump term. Let me turn this. You know what? I'm going to save this so I can find it easier. Put it at the top. Okay. So during the first year of Trump's presidency, you got to focus on this. This is going to make you a lot of money. Okay. You should be excited about it. Okay. What happened to Trump's first presidency? Because a lot of his policies affected certain sectors more than others. Here's the US dollar. Same time period. What was the US dollar doing? It was going the other direction. Got down to 88 in his first year. Okay. Where's the US dollar right now? Coming off the highs. So if you want to short the US dollar, that's a possibility too. Okay. So we're coming up to supply resistance overhead about 105, 107. So at some point we're going to run into resistance. We got what, 2 months before he gets inaugurated? Not even. All right, so a month and a half. Tesla's still going. Holy smokes, look at Tesla. Angela, you still in Tesla? Oh, my gosh. Looks good, though. Does look good, right? Okay, Meta pulling back. Tesla, though, Tesla keeps going. Oh, my gosh. Look at Tesla. TSLL. They're going to blow this out. Wow. Just impressive beyond expectations. Okay, Bitcoin is going. Bitcoin is going. Let's look at Coinbase. Coinbase should be going too. Okay, Mara, Riot. These should be going. Riot. Okay, those are going. MicroStrategy, MSTR. Frank likes MicroStrategy. You could trade the ETFs, BITO and BITX. BITX. All of these are going.
Portfolios or their outlook or the week that was, Tom?
Yeah, volatility's come in quite quickly here this week, and Nicole, on the back of the Trump election win, and then Fed Chair Powell, giving us his spiel where he, kind of calms the waters here a little bit. So the optimism going into the historically strong fourth quarter, pretty robust here with, three of the major indices at record highs. So yeah, you have to start thinking about, end of the year. What's going to stop the rally, I think. And that's, I think, maybe the thing that's not really out there at this point. There's nothing really, whether it's geopolitical risks, whether it's interest rates, whether it's economic growth, there's nothing really to kind of stop the momentum we're seeing. So it's a dangerous one to play if you're on the short side or short at any point, or maybe lightly a little bit. But when you start looking at valuations, getting stretched here a little bit on this optimism, but another great week for markets here, Nicole.
Yeah, pretty amazing. And look, even Disney has had a nice run this week. It's up 3%, and 3 months it's up 15%. So it has had a nice run. Even talking about AI and AR, I mean, not what we always talk about Disney in that realm, right? We're usually talking about the theme parks or streaming or whatever. Yeah. But you found a trade here, a neutral to bearish trade. Curious to hear more about that.
Yeah, Nicole, it's had a good week, as you mentioned, up 3%. That's probably helped by the overall market rallying pretty substantially, with the S&P 500 up nearly 5%, but only up about 9% so far this year. Now, they report earnings next Thursday. That's going to be a key catalyst for this stock, and I think that's why maybe you're seeing a pickup here in option activity ahead of that. If you look at the expectations here, last quarter, the Disney disappointed the street because they said park traffic is expected to be flat to slightly lower than the previous quarter. So the guidance was a little bit light there. Now, last quarter, they also said that on an operating margin perspective, that their streaming business, Disney Plus, ESPN Plus, and some of the others finally turned profitable. That was a big turning point for that money-losing entity, part of their business. Cruise lines are doing really well, but inflationary pressure is hurting the parks business at this point. And then if you look at the box office, they had a couple big winners earlier this year with Inside Out 2, Deadpool versus with Wolverine. That was two of the biggest box office draws this year. So that's going to be a tailwind for the stock. And then they got Moana 2 coming out. So in that segment of their business, maybe they should do well. The problem with Disney has been they've got all these silos of revenue generation, but they're never hitting on all cylinders at one time. Last time it was parks business, and attendance was starting to stagnate as far as growth goes.
Hope everyone's having a good day.
Going into that report next Thursday after the close, but one of the unusual option activity trades that I saw that kind of stuck out to me, maybe somebody hedging their bets here a little bit going into that report. It was out in the December 20th monthly cycle, so 42 days to expiration. Traders sold 4,000 of the 110 strike calls. This is a neutral to bearish type of play here, selling these out of the money calls. He collected a credit of about $1.05 on these calls, so that takes a break even up to 111.05 over the next month and a half. That's about 12% above the current share price in there, with call volume about 2.5 times normal daily average volume. So this could be a speculator.
Okay, Meta.
The stock can go up, but I don't think it's going to go up above 110. Or this might be somebody that owns a bunch of shares, Nicole, and just wants to kind of create some yield and hedge their bets to the downside in case there's no movement post earnings.
Yeah, and look, it hasn't been.
NVIDIA pulling back a bit. Tesla's still going.
In a long time. I mean, the high was 123 last April, but just like quickly looking, I gotta go all the way back to April. At some point.
Boeing starting to lift a little more. It's up almost 1% on the day. NVIDIA just stalled. Have to wait until next week, it looks like.
What's to come, pushing, obviously, building stuff here, being a genius here. I'm not sure they're pushing EVs, but let's hear a little bit. Full self-driving has good chance, right? With less regulation there. Maybe
77,000 plus on Bitcoin.
NHTS, National Highway Transportation Safety Board.
Wonder what Sam Bankman-Fried is thinking right now.
Under review right now after some crashes. That one just broke out of story out of Reuters. So let's get through some of these video game type numbers.
Okay, Meta pulled back a little bit.
Up 30% on the week. Market capitalization, Nicole, has gained $240
Tesla.
just this week alone.
What a move on Tesla.
Seen since April of 2022 at this point, or 2021. So basically nearly 3-year highs on the stock that it's hitting today. Call volume about 4 times normal daily average volume that we've seen over the last 5 days of trading. And we've seen a lot of trading over the last 5 days in Tesla. And this is all on the back of, the optimism moving forward. Trump gets into office. Elon Musk gave a lot of money to the campaign. Does this pave the way for more accessibility, maybe to contracts, maybe, new investments from outside companies? To how is Twitter doing? SpaceX. I mean, it's across the board. The one key thing to note is that growth year over year, as far as sales going into the end of December, are supposed to be flat. So there's no growth. And this company just gained $240 billion in market cap. So, yeah, the momentum's to the upside. I don't know if it's fundamentally based, because on a forward-looking basis, as far as valuation goes, this thing is just explosive, nearly 100 times what they're expecting moving forward. So you have to start thinking about the numbers. Because
What a week. What a week, huh?
Anti-EV. They don't want to give subsidies out there, and they want to support the whole automotive industry, especially those ICE engines. So we'll wait and see, but it's had a great week here, and investors in Tesla are loving it. And one of the unusual option activity items that stuck out to me was in the 320 strike calls that expire on November 15th. So just 7 days to expiration. And remember, this stock
Microsoft turning up late in the evening sessions, 222, 222. Netflix looking for another push. Google turning up.
320 strike calls in the November 15th option series, paid an average debit of $9. I mean, they were buying them early and often, Nicole, before the stock really started spiking. It was up about 5% when they were 4 or 5% when they were buying them. So to break even 329 over the next 7 days, that's only about 1.5% above the current share price in there. So this trader has done well, or these traders. There's a bunch of small lots here building up. This over 100,000 of those calls have traded on just today's session. Over 3.5 million calls have traded on the day. So video game pinball numbers here for Tesla as far as the options.
Tesla, wow.
Yeah, and all you need is one good headline. I mean, that seems sort of really doable, right? Last but not least, we've seen the financials doing well. Bank of America would go into that. Bank of America hit a new 52-week high this November as well. So a 45 and change, you found a bullish trade, right?
Yep, stock's up 8% this week. So the financials have done really well based on the fact that a new administration might mean less regulations, opening up M&A activity. That's one of the bonuses there. Capital reserves, maybe they won't have to have as much. So new administration giving a lift here to the financial sector. The S&P 500 financials sector is at hitting all-time highs this week also. But Bank of America also got an upgrade out of Citigroup today. They raised price target to $54 from $46. Best way to pick up exposure to the financials, Citigroup says is through Bank of America because the divergence between J.P. Morgan, which had all-time
Home
highs,
Depot,
and Bank of
earnings
America
next week. Home Depot, new highs.
So they like Bank of
HD,
America.
new highs.
And the option traders like it here today too. One of the option trades that stuck out to me was out in the January monthly cycle, so 70 days to expiration. Trader bought 4,000 of the 47
Eli's coming.
$1.15. So the break even where this trader becomes profitable is about 48.15
Wow.
to the upside. That's only about 6%
That's a beauty.
above the current share price. So traders out there expecting more gains here in Bank of America after that upgrade.
Yeah, and you know, it's funny because I was talking about JP Morgan earlier, and you think all the banks are the banks, but while Citi is talking positively and actually upgrading this name to a buy and the $54 target when it's at $42, right? So you have the $12 upside. I mean, that's great news. At the same time, JP Morgan, when I was combing through and doing this earlier, I saw one Evercore had a 238 target. The moment I was talking about it, it was trading at 238. So there's no upside there. And, you know, I don't know if I can find it fast enough, but there was another one that actually, Baird downgraded JP Morgan. I mean, there was no love. There was no love for JP Morgan today. So very interesting to see them jumping on board with Bank of America, and JP Morgan's usually the darling.
Oh boy.
Yeah, just watch levels here.
Just watching the futures at the highs. Tesla. All right. So if you took profits along the way or into this last couple hours, congratulations on Tesla. That was a hell of a move. Wow.
All right, Tom, great to see you for Options Corner every single weekday here on the watch list. Thank you for that. We looked at Disney.
Microsoft turning back up. Microsoft has been sort of languishing here. Okay, Microsoft. Okay, if this can get up and start moving off of the 250-day, we should see 435, 438, these two pivots right here, that upper Bollinger Band. I think we could see that next week, midweek maybe. So if you have options on Microsoft and they're a couple of weeks out, you should be fine. Home Depot has earnings next week. Apple trying to get back up. Trying to get going here, Apple. I don't have a trade on Apple. Do I want to do anything on Apple? Let me take a look at Apple. Do I want to do more? Do I want to do more? What do I want to do with Apple? What do I want to do with you? Apple. Apple.
It's market on close.
Not going to do anything late in the day, but
For the biggest earnings coverage, insights from the smartest minds on Wall Street.
we did an Iron Condor on Apple this week for earnings, last week rather. And that's fine. It's right in the middle of the bands. Okay, yeah, can't really do anything with this right now. Bollinger Bands are tightening a little bit, maybe. We'll get something on Apple probably in a couple of weeks. Meanwhile, just day trading it makes sense. Apple. Super Micro. Love to see this one short covering. Hit this thing and rip this back up towards the highs. That'd be the big one next week, hopefully. Futures, S&P, spiders, doing very well. I do expect that we're going to retrace into this week's candle. Okay, so next week, I think we're probably going to test this first quarter, the top quarter of this top 25% of this candle. Maybe come back to 590 and then follow through and continue on. It all depends on how options are situated next week. Okay, this is an OPEX weekly, so next week is a monthly. We'll see how the monthlies are set up. Maybe we have a better idea. Maybe the call wall shifts up. If it does shift up, that would be a good sign. We also have Bitcoin doing really well. Bitcoin. Oh, before I do that, let me just make a mention about SMR. I took the put side off earlier this morning. Okay, so this worked really well. Okay, the put side was 18.13. I took that off at the high this morning. Okay, that expires at the end of the month. Now I'm looking for SMR, these small modular reactors, new scale power. I'm looking for this to stay inside of these two red lines, somewhere around 22 to 23. I want to take that off. I might even do it end of day if I can get this to back off enough. There goes S&P's going again. S&P wants to go again. Okay, here we go. Spiders at the highs. Haven't had this kind of price action follow through in a while. Okay, BitO is going. BitO's moving a bit higher. I still have some BitO left and some Coinbase. Both of those are up nicely.
All right, let's get to AvePoint. Time for this focus. And global leader in data management, data governance. They help over 21,000 customers worldwide secure collaboration environments across.
Robinhood at the highs. Okay. Looks like Bitcoin. Looks like Meta might get something going here. Watch Bitcoin, Meta. Higher low on Meta. Yeah, Bollinger Bands coming together. Probably going to stay in this area. Okay, Robinhood. Frank was trading Robinhood. Okay, at the high of the day. Okay, that looks good. Microsoft turning. Microsoft is turning off the low ABCD pattern late in the day. Hour and a half to go. Is there a 525 call? Let's see what that's going for. Microsoft 525 call for today. Is there any scalp ability here?
And all three also showed really strong growth in performance.
0 day.
Behind all of that is really now the focus
423.
Data security and data governance. You know, it wasn't too
423, 422.50s or $1.
kind of focus around AI.
The 425s are 9 cents. I don't see this get going, but 425 is up here. Do they run this end of day?
Happening in every boardroom across the country and literally across the world.
And do you expect that demand to keep growing? I mean, the people are saying we're only in the beginning of the AI revolution. Others are sort of.
Okay, Google turning up a little bit more.
What would you say to those folks?
Well, I think we're still in the early stages. I think even when we think about AI adoption and what we're seeing in terms of contribution, I think we're seeing a lot of experimentation still at this point. And the real value, I don't think we've seen really customers and really companies around the world take advantage of yet. A lot of experimentation. But again, I think the true value is still yet to be realized. And I think that bodes well for us because, again, focusing on data management and data governance is a key to having your AI solutions that you're trying to adopt really prove valuable.
And you talk about these three regions with growth of over 20% year over year. Some nice numbers, some even numbers across the board. What do you expect going forward?
Bitcoin's still going.
That's a great question.
Bitcoin's still moving higher.
Nice growth, consistent growth all year. APAC actually leads the way with about 27% growth. North America is at 20, and EMEA is at about 25. So right now, we would expect similar contributions pretty much the rest of the way. We've seen a pretty steady contribution from all three over the course of the first 9 months, and we would expect that to continue in Q4.
What is it that you want people to know about AvePoint as the solution for folks? Explain that. You know, when you talk about data management, data solutions, governance, security, if you were explaining to folks with businesses, what do you want them to know about this company?
Yeah, I think the main thing for us is that we have a platform. We call it the Confidence Platform. And unlike many of our competitors who may have one particular point solution, our platform allows multiple things to be addressed, whether it's when we think about resilience in terms of recovering from maybe a cyber attack, we have solutions there. When we talk about managing your data in terms of the old data estate itself, we have products there. And when we think about like migration,
Okay, Bitcoin coming back a little bit.
On-premise to the cloud or from a cloud to
Okay,
cloud or
Microsoft.
we have solutions for you there. And you can manage all of that information within one platform, one pane of glass, a consistent user interface, makes it very easy and transparent for our customers to use. And the feedback we're getting is that kind of consolidated approach is very valuable as people look to consolidate vendors, reduce the amount of vendors that they have to get through a procurement cycle. That seems to be a powerful message that's resonating and also propelled some of the third quarter growth we saw.
And with over 21,000 customers, you continue to grow. How are you getting new customers? I mean, you're working in collaboration environments across Microsoft and Google and Salesforce.
Okay, we got an hour and 25 to go.
To be associated with. Tell me a little bit about growing customers and, you know, some of the big Fortune 500 companies, how this is all working.
Yeah, we have a go-to-market strategy that's multifaceted. As I mentioned, we play really in all three segments of the customer cycles. We play in enterprise, mid-market, and SMB. We predominantly go to the mid-market and SMB through a channel strategy, and most of our enterprise customers is still a direct motion. But again, we've seen lots of interest. You know, everyone is experimenting in AI, whether it's Copilot or other tools. And again, what they generally realize is that their data estate is not as secure as it needs to be, particularly around oversharing information. And that's where we can come in. Our governance solutions really help.
Okay, we're holding on to the highs pretty good there, Bitcoin. Of course, it'll trade tomorrow and Sunday into next week, so anything's possible.
And you think about how everything's stored or how it's actually working.
Okay, Meta turning back up.
A quick thought there. I guess that's only the beginning of what we're going to see.
Okay, Meta.
I think so. You know, I think you're right.
Meta.
I think, you know, we're at the early stages.
Okay, inside day on Meta. Still consolidating between the Bollinger Bands, Meta. Okay, looking forward to get back up to the highs next week. Was hoping that would happen today.
Unfortunately, the bad actors out there are also taking advantage of AI. And so if we think about the threats we've experienced up till now, just think about the addition of AI potentially increasing some of those threats. So I think, you know, being prepared and being, you know, able to be resilient and prepared for those attacks is something that all companies need to be aware of.
Yeah. Tell me more. I mean, you're based in New Jersey, I believe. And so we have a new administration coming in. The Trump administration will be back 2.0. Is there anything you're watching or thinking about or may do differently, you know, to prepare? You're the chief financial officer. You worry about the books. What are you interesting to you, or maybe you're watching, because things may change, right?
You know, it's interesting. We've been, AvePoint's been around now over 20 years. And so we've definitely gone through more than one election cycle and definitely been, you know, providing solutions for our customers over those 20 plus years in various different administrations. So I think that the thing that we're focused on is delivering value to our customer base. And really
Netflix, looking for a bounce, looking for NVIDIA to bounce. All right, so I'd like to see these New York FANG stocks recover a bit more. It's been a hell of a week. Okay, so the last 3 days, Tuesday, Wednesday, Thursday, were really epic. Got buyers at the low of the day, so that's a good sign. Not the best. That's what I'm thinking is going to happen with the S&P. We're going to pull back into this week's action. Do we follow through on Monday, Tuesday? Or do we just keep going on Monday? I don't know. It's hard to say. But we definitely have a good setup. We have all of our risk indicators telling us risk on, junk bonds, Bitcoin, the 10-year lower, biotech's higher. Okay, let's look at breath too. Breath, I don't want it to be too overbought. Advanced decline percent. Well, we got a ways to go. All right, so we could follow through on Monday. We could follow through on Monday. The top panel is S&P. Then you got the mid caps, small caps, and the Nasdaq. See, the Nasdaq turned down a little bit, but it's not at plus 30%. If we were at plus 30% as we close today, I would think that we'd pull back a little bit on Monday. But the fact that we haven't made it all the way to plus 30% tells me we could see more upside. Is that a guarantee? No, but that's what I'm looking for. Now, I want these NYSE and NASI to turn up. They are. That's a good sign. Okay, the summation index of the McClellan oscillator for both the NASDAQ and the New York Stock Exchange are turning. So that's a good bottoming signal, telling us we could see more follow through to the upside. And if you've been paying attention, let's see, New York Stock Exchange, NYA. Okay, follow through. So if we look at the triple MACD setup, we should see the long-term also crossing over. Okay, it's about to cross over. So this is telling us to look for a follow-through next week. Okay, we're going to cross over on the 1226. That's the normal time frame for MACD. Short time frame is get you in early. Okay, so this would have got you in on the bounce back above the 50-day. Okay, that was on Tuesday. So this looks really good. Probably going to get a crossover. Look at the histogram in the lower panel. That's probably going to cross over the zero line. So that's telling us we'll probably get some kind of follow through next week. Okay, Meta's pushing higher. If you got those 590s, you might want to take some profits here, coming up into strength. Meta.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Join me, Oliver Rennick, alongside Schwab Network's options experts.
Futures. Wow. All right, so this has been a great week. Don't ruin it by doing something late in the day, chasing something. Bitcoin's still looking strong, so we'll probably have a follow through next week.
Welcome back to the watch list, friends. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. We're getting closer to the closing bell and what has been a wild week, and we're going to look at every part of this market as stocks are hitting new highs. How about commodities? How about crypto? Let's have a great conversation with Christopher Mullen, founder, Chief Investment Officer, The Technical Traders. Thanks for being here.
What was that chart you were looking at, Frank? IOND or something like that?
Yeah, great to be back on the show.
SOUN, SOUN, INOD. All right. Soundhound. Okay, they sell those in. No, that's not what I'm thinking. I'm thinking. What is that? Audio speaker system that they sell in Best Buy. Okay, IONQ. On Wednesday into the stock market. Software, Soundhound. Oh, that's the one that tells you what song you're listening to. Maybe somebody buys them out.
I think we're going to continue to see this rally even higher. I think there's potential for another 8 to 13% in the equities markets going forward with this kind of Trump momentum and people piling in right here.
Meta about to hit that 590 level. Okay.
8 to 13. 8 to 13.
8 to 13. Okay, 8 to 13%. What's going to drive that move?
Well, I really think it's actually a lot of people are offside. I think we're seeing a lot of shorts covering, and there's a lot of cash on the sidelines that have been
590s are 42 cents.
We are seeing lots of money moving in. We saw on Wednesday, we saw a big broad market rally. On Tuesday, it was a broad market. That is a sign when all the sectors and all the assets seem to be moving up. That means people are comfortable with what's happening, and they're willing to take risks and push their money into this market. So when we have this broad market rally, it's going to suck a lot of investors in. A lot of people have missed this recent rally. Some of them have missed the recent rally for the last year and a half, depending on how nervous they've been, because the markets do
Meta.
they want to top.
but you don't want to fight this trend. And so what I think
Oh
is gonna
boy.
drive this market higher
Meta.
is simply people moving back in is gonna
Nice
be
move off
FOMO.
the
A lot
low.
of people
Higher
who
lows.
aren't in are going to say, this is it. This is a huge event. I got to get in. Obviously, this is a news-driven pop, but that news is what pulls people in, and it's going to just suck in a lot of people who
Apple
aren't in.
making higher highs in the evening session.
Look, you said that, you know, when you see
Apple, I have no position, right? Apple. Apple, we were looking at a position in Apple.
were you surprised when you saw Bitcoin making
Do we push higher next week? What is the
Yeah, no, Bitcoin is a very strong chart pattern. I've been following it for a while, and when you look at the monthly chart of Bitcoin, it has formed a huge multi-year pattern. In fact, I got long Bitcoin this week, and I expect Bitcoin to rally out of this technical phase. I believe we're going to see $90,000 Bitcoin, and then we're going up to about 112,000 per Bitcoin over the next. It could be a short window. It could be over the next 6-8 months. We could see that target be hit. So the chart pattern for Bitcoin has been bullish for a long time. This, with Trump getting in, I think it's helped giving it a nice pop, a nice push to the upside. It's breaking out. The chart pattern is very strong for an imminent rally, and there's a lot of chaos, a lot of nervousness in the market, and people want to move into this. This is why we're also seeing money. You know, a lot of money's nervous around equities, around currencies, still just because they're highly priced, and so we are seeing money.
Apple.
Alternate assets or currencies.
Apple, what is money magic levels on Apple?
So are you going to
Apple,
sell when
Apple,
it hits
Apple.
100,000 or 110,000? Or you're going to decide at that point whether you keep your money in there?
Well, based on the chart patterns, I think we're going to
Money
run into some
magic.
resistance around 90,000. I'll be trimming some profits off there, moving my protective stop up.
Apple, we're talking 227.50. Okay, we're above that 230. Apple.
Follow the price higher. And so I like the opportunity here, but you do have to take profits.
Yeah, understood. And that's a winning strategy. I mean, names like Coinbase was up 50% this week almost. I mean, it was incredible. Were you doing other things related to Bitcoin?
Well, the blockchain sector is one of the top sectors on our hot list right now, and money's been moving into anything in the blockchain ETF. So Coinbase might even actually be in there. So everybody is moving into that space.
Apple moving above 227.50.
To have Bitcoin reserve and different things are on the table. So anything with blockchain.
Apple moving above 227.50. Be aware of it. Apple.
It's a slower way to play it. It doesn't move as fast as Bitcoin, but there's nothing wrong with something that might be a little more stable. But there are other sectors in the stock market that are performing very well, like the ARK ETFs, the next generation. ARKW is one that we've been
Money.
yesterday around 15%, but it has more upside potential to go. And so there's a lot of strength moving into aggressive sectors and aggressive pockets of stocks like lithium, uranium, even the biotech space.
Okay, next call wall is 230 on Apple. Okay, watch Apple.
I think it's going to be an end-of-year squeeze. Seasonality-wise, this is when we see stocks tend to rally. This whole event with the election, I think, is spurred on some new momentum, and it's going to suck money into the markets. Now, I don't think it's going to last that long. I do think in a couple months it'll fizzle out and roll over. 2025, I think, is going to be a very, very volatile year for almost all asset classes. It'll be probably a game changer. But until then, Bitcoin is up, gold is up, the stock market is trending up as well. You kind of need to hold them and own them.
All right, Chris.
Yeah, Sonos, that's it. Yeah.
Thank you so much.
Okay.
It's great to see you. Appreciate it. We'll watch for those Bitcoin moves too. Thanks, Chris. Still ahead, we'll bring in our panel and talk all about Airbnb.
Okay, watching Apple for a little follow through. Okay, trying to push a bit higher, Microsoft. All right, Tesla, profit taking, Tesla. Tesla profit taking. Hit the exits, folks. You might get a little bit more out of it, but I wouldn't be greedy at this point.
Actually, I'm seeing something from Schwab.
Yeah, Schwab lets your investors trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl,
Schwab, a modern approach to wealth management.
Cut the cord on the way you get market news. It's Market on Close.
Meta, can we do it? Meta, can you do it? Do it.
Coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds.
Okay, there goes Meta. Meta's starting to go. Meta.
Our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading.
Netflix turning up. Okay, Apple, go. Go, Apple. Microsoft.
Also, you can trade brilliantly.
Okay, futures are starting to pull back too. Yeah, I don't expect us to close up there.
Welcome back to the watch list. I'm Nicole Petalides. We have seen so much this
Meta.
week. Airbnb, though, we've seen this stock down now. Came out, did beat on the top and bottom line, but the stock is under pressure. Let's find out what could be a hurdle here for Airbnb. Speak with our panel, Dan Wasiolek, Senior Equity Analyst at Morningstar, David Carr, Senior Insights Manager. Thank you so much for being with us at SimilarWeb. Thank you both for being with us. Dan, some of your thoughts.
Yeah, so I mean, first of all, I thought that demand was solid at Airbnb. You had bookings and revenue growth up 10%. That was a little bit ahead of our expectations, and I think the street's expectations. I think the reason
Okay, Bitcoin still traveling higher. Bitcoin.
Investing back into the business in 2025, expanding into more international penetration for their core market, and also getting more into the experiences or things to do vertical. In our opinion, that's exactly what we want this company to do. They have a network advantage. This will strengthen that network advantage over time. So if anything, we wish they would have done this earlier. We're happy they're doing it now, and we hope that they do spend aggressively into it because the opportunity is very attractive. So this pullback should be viewed as an opportunity more so than anything else.
Yeah, David?
Well, actually, just to second the notion on international expansion, one of the things that I noticed in their earnings report is they talked about income being down partly because they were spending more on marketing into countries like Brazil and Japan where they want to expand.
Bitcoin still going.
I see signs that they're being very successful at that. We see double-digit growth in Brazil and Japan, in other countries like Colombia and Argentina. So they do seem to be building up quite a bit there. And actually, you know, a lot of what we look at is kind of the demand side signals in terms of web traffic, app usage. And when I look at our stock intelligence dashboard for Airbnb, it shows a lot of metrics that are down, but they're down sort of in sync with the rest of the accommodations. Hospitality industry is kind of flat or down, and that international expansion really helped balance things out for them.
Dan, when I think about the consumer demand going forward, a lot of folks say how resilient the consumer is, and it seems so great. But at the same time, Dan, you say that this stock is fairly valued now, or maybe overvalued is a better word that you use. So you definitely would not be buying it here at 134. You don't believe, I guess, the investments that they're making in AI and marketing and all that are going to boost this stock higher. In fact, you said it's overvalued here, right? Why?
Well, I believe in this strategy very much so, but yes, the intrinsic value, our fair value going into the print was 130. We said in our note that we plan to increase that by a low single-digit percentage. With the move back today, it's probably trading just about where, our fair value might move to. But this is a high-quality name. We wouldn't need much of a discount to our fair value or price target to recommend this to investors. maybe some of you might recall last
Okay,
quarter,
Meta starting to move. Meta.
the stock was down
Meta starting to
14%
move.
to around $110 per share. And we thought that that was a huge overreaction, that the quality of the network was intact, that demand was actually intact, and that that was an opportunity for investors. The stock then rallied 30%. And so it can be volatile. Again, it's a high quality name. I would look for opportunities if this continues to pull back. Right here, I would maybe wait for that pullback. But, as far as a company, it's a very well positioned company.
Yeah. And, David, you made the point that the digital metrics are down, but that for Airbnb, but that a VRBO was actually even worse and was down even more. We look at Expedia, we look at Booking.com. What do you think? Are there leaders in this group, and what are they leading in exactly, David?
But Vrbo, which is part of the Expedia Group, they have made progress at growing their presence, their audience. But Airbnb is kind of the brand name. They are the Kleenex of this industry. They are, and in fact, when you look at how some of the competition is growing their share, not only Vrbo but also
Today, the share.
All right, let's see if we can't get a follow through.
And what do you do?
This is a buy. I think you have to hold your nose and buy it. And I say that because if you look at the chart, you're going to think you've missed the move. But the forward PE is still just a tad below 20. Most of the competitors are a tad above 20. As you pointed out, they just announced earnings. They now think that forward guidance for 2025 is going to put EBITDA just above
Okay, Bitcoin,
$60. They just announced
BitO, those are moving higher.
Listen, we're never going to use
Bitcoin moving higher.
than we do right now. They just announced two big plants that
Still
are
going.
for data centers.
Make it
this is a new growth
easy.
new growth area.
Make
That is
it
electricity generation.
easy.
And so now you can pay up for 24 PE and actually feel pretty good about it.
I love the idea that an old line electricity could not old, but you know what I'm saying?
Yes, absolutely.
In the AI boom, that
The new
electricity
leaf on
it
life.
tells you have to think outside the box, but you also have to think inside the box.
Well, I was going to say something like, don't judge a book by its cover, but an old dog can learn new tricks or something.
It's just funny. You go back. I mean, when economists study productivity and innovation, they keep going back to electricity.
Yeah.
And all of these things, when something comes along, you don't know what the ultimate return is going to be. We're still getting returns for electricity. Thank you very much, Scott. We'll be right back.
All righty, looking for Meta, Bitcoin, and the Meta Bitcoin still going. Wow, very impressive price action today across multiple sectors, as we would anticipate. It's only going to get better going over the next year, I would imagine. 2025 should be pretty epic. Okay. The bears are out there screaming, "You bulls are foolish. We're at highs. Look how extreme we are." All the reasons you shouldn't be thinking the high, okay? Got to look at price action, volume, what the companies have been doing. They've been reporting better than expected earnings. Multiples are expanding. Those two things alone is what's keeping the markets grinding higher. Earnings and expanding multiples. AI, that's certainly not making the bears' life any easier. Okay, Bitcoin, Meta squeezing right now. We got an hour and 2 minutes to go. Bitcoin's at the high of the day. All-time highs.
Block online threats now.
Welcome back to Power Lunch. A final check on markets before we go. We are wrapping up a monumental week by knocking out some key milestones here. The Dow topping 44,000 for the first time. S&P 500 getting over 6,000 for the first time today. Check out NVIDIA. Check out Sherwin-Williams. Both stocks officially members of the Dow Industrials as of today. Both those stocks up.
Okay, Meta looking for a break higher. Meta, here goes Meta, starting to push up. Meta's starting to push up, looking good. Meta.
Incredible. And I think, again, it's many things. It was also the busiest week of earnings season.
Bitcoin at the high of the day.
One after another.
There was a Fed meeting too.
Oh, yes, the Fed meeting.
I'm pretty tired.
And you've got a long night ahead of you.
Exactly. A kid tonight with my son.
Well, I hope it goes very well.
Thank you so much.
And thank you, Steve, for joining us today. It's been very good. Steve Leisman, and that does it for Power Lunch. Thank you so much for watching. Have a great weekend. Closing bell.
Welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner, live from Post 9 at the New York Stock Exchange. This make or break hour begins with the bulls stampeding through landmark levels to polish off the index's best week of the year. Here's a look at the scorecard with 60 minutes to go in regulation. Further follow through Wednesday's huge post-election balance is taking the Dow Industrials as you see there.
Okay, Meta looks like it could run a bit here if we can get some short covering end of day. Watch the histogram. Okay, AMD fading. That looked promising earlier. AMD. NVIDIA looked promising. No follow through yet. Maybe next week. Microsoft fading off.
Tesla shares are the biggest upside contributor to the S&P today, given Elon Musk's closeness to President-elect Trump. The stock up 30% or so on the week, 8-9% today. And treasuries are steady a day after the Federal Reserve delivered a quarter-point rate cut with more possibly to come. The 10-year Treasury yield is actually tracking to be down a bit on the week after it had that brief pop to a 4-month high around 445 on Wednesday. It's now 430 or so. It takes us to our top of the tape.
Amazon pulling back a bit. Amazon, no follow through there. All right, I'll wait until next week. We'll wait till next week.
What's not to like? Let's ask Cameron Dawson, New Edge Wealth Chief Investment Officer. It's great to see you.
Good to see you.
You know, it's sort of, you line it all up like that, it looks like green lights as far as you can see. Is there anything to bring into the conversation to complicate the story?
I do think we have to respect the uptrend, which has been just so very powerful this year. And clearly through the election, we removed the tail risk of potentially higher corporate taxes and maybe higher regulation, which is certainly something that the market is celebrating. We cannot ignore that valuations are very stretched. We're at 22.5 times earnings. We also cannot ignore that earnings estimates themselves have actually been getting trimmed over the last couple of months. And so you're seeing this divergence through where the upside of the market really driven by sentiment, driven by valuation, not necessarily because of fundamental change in the earnings picture. So we think we have to watch that the most closely over the course of the next couple of months.
Yeah, I mean, valuation has been certainly a little bit of a shadow on the market for a while, more so now. 22.5 times, as you mentioned, pretty much as high as it's been since the post-pandemic boom, when earnings were probably a little more depressed. And you mentioned, 275 is where S&P earnings for next year have been cut back to a little bit. So whatever you say, it's still 21 times next year's number. I guess you would counter that by saying, in a bull market, if the stories line up, and right now you have this ability to believe that either the cycle can sustain itself for longer than we expected, or it can accelerate to a degree in a private sector friendly way. I mean, I think that seems to be the chatter.
And I do think that valuations at the end of the day need a catalyst in order to be able to be a true weight on the market. And what you typically see is that valuations start to fall when you're cutting growth estimates, when you're cutting EPS estimates, when people are getting more concerned about the outlook. So even though we're now pushing up against those 2020 highs, and to your point, those were 2020 highs based on depressed earnings.
Bitcoin holding the highs. It'll be trading tomorrow and Sunday as well. So Bitcoin could very well just keep going.
Then we do think that valuations keep potentially drifting higher. It's why valuations are a poor timing tool. Really helpful for the 5-year, not at all helpful for 1 year.
In terms of timing or at least tactical considerations right now, you can't really stand in the way of that kind of momentum move we saw a couple of days ago. Usually,
Eli Lilly had a good day today.
Again, as you say, the trend is pretty sturdy. But what about, expectations?
Eli Lilly.
We need to cool off a little?
Lilly had a good day today.
If we look at things something simple as the RSI, so it is expected or would not be too much of a surprise to see a little bit of a digestion. But to your point, you did see that breadth surge. You saw the number of 20-day highs surge to 55%. You had
Axon had a good day on the on and off the IBD 50. This one's just kept going all day today. Axon. Axon, pretty big day today for Axon.
So of course we have to keep those things in mind, but usually the track record of breadth searches is positive.
It is. It's certainly
One that Frank brought today, INOD. That one took off to the races.
Let's bring in Keith Lerner of Truist Wealth and Sandra Cho of Pointwest Capital Management into the conversation. Keith, I'd love your take here on where the market has brought us at this point. The 6,000 level, it's above most strategist targets for the end of the year, well above the median, I think. Where do you think we should expect to go from here?
Yeah, well, hey, Mike, great to be with you and Cameron and crew. It's been a strong market, and we've been trying to keep things simple in our work, right? I mean, you've talked about it, sticking with the primary trend, which is still positive. We do have the Fed still on our side. Even if they skip a meeting, they're more likely to ease than raise at this point. We have global central banks easing, and we tend to look more at forward earning estimates or the blended estimates. Those are still moving higher, albeit at a slower pace than they had before. Valuations, which the discussion has discussed, is high, as Cameron's mentioned. It's tough to make a short-term trade on valuations. I think that tells us more about the long-term returns are likely to be somewhat lower. We also know that credit spreads today are at the lowest level in decades, so that's also showing some confidence as a whole. And then finally, seasonality, when we are up big through October, more than 15% for the S&P 500, the final 2 months have been up 19 out of 20 times. So I think that's all positive, Mike. Like you said, when everything seems like it's all working well, it's like, what's going to hit us? I mean, there's probably something from left field, sentiment scandal, maybe a little bit stretched, maybe some choppiness after this round number, but all in all, we still think that you want to stick with that primary uptrend.
Fair enough. And Sandra, if you talk to clients here after the election, and you had this focal point of anxiety and expectation around it, now we have resolution. The market has relaxed a lot. We're up 25% in the S&P 500 year to date. What would you be telling them in terms of whether the world has changed in a favorable way, or it's more the same, or should we expect some give back?
Yes, I mean, this is post-election, and we knew that half the population was not going to be happy with the outcome. And so I am dealing with clients that, are unhappy. But what I focus on is that the elections are over and the markets like certainty. And I agree with Cameron as far as, there is momentum, and Keith, that there is momentum in the markets right now.
Our block bounced off the 200-day moving average. Block SQ. That was a nice bounce off the 200-day. I see Joe K talking about it.
For year end, we do think that the market is going to continue this trend and it's going to be strong. We look at consumer sentiment; it's up, and we do think that the year is going to end, well.
Expedia.
That would be another just couple percent from here. 61.20.
Nice push higher. Expedia.
Whether the character of this
fade.
has changed at all.
All right, watching Meta, Bitcoin, all of those holding the highs.
Market action where it was like, okay, let's just execute the textbook Trump trade, which is small caps and financials and cyclicals, value to some degree, And then actually a lot of stocks were down, like defensive stuff and yield sensitive. To what degree are we making any kind of a sharp pivot, or is it, again, not necessarily that much of a shift?
It seems like we played that 2016 playbook for one day versus what happened in 2016 is that lasted about 2 months, and then it started to give it back up. So one of the things we're watching really closely is growth versus value. Very simple ratio, but you continue to see growth still outperform even post-election, which just suggests that maybe some of that leadership in the Mag 7 that everybody is expecting to start to fade, at least for now, is hanging in there, and maybe that is because of Tesla's strength. So clearly there is a difference today versus what we had in 2016. And so it's a question of, do we see a continuation of things like the small cap trade, even though you are seeing small cap earnings continue to get cut, valuations aren't that cheap. So clearly there's a lot of questions as to how far we can extend the Trump trades.
Yeah, Keith, weigh in on that, just in terms of whether it's time to step away from the sort of growth quality leadership we've seen in this market for a while, the market cap weighted S&P, and decide to get either more cyclical or look for laggards.
Yeah, it's interesting in our work. Our overweights right now are from 3 different aspects. We have technology, which we've been, overweight most of this year. We think the AI story is intact and earnings are intact. We're overweight financials even before this. We think if the economy stays resilient, credit's tight, M&A picks up, that's all good for the financials. And then we're also overweight utilities, which, historically have been defensive, obviously.
Meta looking for a little run higher.
AI. Yes, AI didn't go great.
We've got 50 minutes to go. 50 minutes to go.
It's not just tech. I mean, this week too, you have financials, industrials, energy, all up over 5%. So I just don't think it's an all or none. I think there's opportunities within. And again, we're playing it from those 3 sectors specifically and still tilted to the U.S. I will say globally, Mike, I mean, it is a big week of U.S. outperformance. We've been Team USA for some time. And, that's something that happened during the Trump trade of 2016, and we think continues into the end of the year.
Yeah, I mean, it does get tricky at some point if the argument is value is going to take over from growth and the U.S. is still going to outperform the rest of the world. But, stranger things have happened. But it seems like those things push against one another a little bit. No, Keith?
Yeah, and that's why we're pretty much neutral on value and growth. Yeah. And I will say, I think it's good for us to be thinking about what can go wrong. Cameron alluded to this, like in 2016, that was arguably a bigger surprise. Yields were sub 2% as opposed to above 4%. The deficit's a lot bigger. And so far, the market is really focused on all the positive aspects, lower taxes, deregulation, and really kind of putting off what happens with tariffs. And arguably, the policy outcomes is wider. So at some point, I think there will be a counterbalance for that market. And sentiment.
All right. Just sitting there scanning through stocks. There's not anything to do. We got less than 49 minutes to go. Looking for Meta to do something.
Basically, reflationary policies into an economy that's been kind of barreling ahead for a while, and we've tried to get inflation under control is sort of a funny mix. Sandra, I wonder what your thoughts are about the bond market here. It's been, I guess, commonly said that it seems like Treasury yields could be the arbiter of whether this policy mix has runway, whether equities can hold their valuation. We got a little bit of a scare from among some people that the 10-year yield was going to get maybe unanchored here. It's not yet done that. After the Fed cut by 25 basis points, you've kind of calmed down. How do you think about bonds as an investor at these levels?
I think bonds right now for year end, I think they're going to be, steady as far as that goes, because the only thing that, we see is that yields are pretty good right now. And we think that that's going to, finish the year. But for 2025, the concern is, as you mentioned, that if inflation starts to tick up, the Fed might pause, and then that might, kind of upend things just a little bit. So we're really keeping a close eye on that, especially if tariffs are implemented in the way that the Trump administration has mentioned. If they're imposing like a 60% tariff on Chinese goods, that really could throw things around. But we really think that that's just posturing in order to come to the negotiating table and implement better trade agreements. So, that shouldn't manifest because it would hurt U.S. companies. And I do think that the administration knows that.
Yeah, well, we'll see. That also mimics 2016, 17, actually, right? Where the market quickly seized upon the positive aspects of policy. And then 2017 was full of trade war headlines that would hit the market at least short term.
And maybe we get the reverse this time because we don't get the negotiations around taxes until the end of 2025. So the prospect of actually lowering that corporate tax is something that we would get towards end of 25 into 26. But we could get tariffs right away and have to contemplate what that means for things like the dollar, what that means for cyclical companies. So maybe instead of getting the good news first, like we got last time in 2016, we get the bad news first.
That could be, although I've often thought that the best kind of tax cut is one that's on the
Okay, Meta, excuse me, Bitcoin pulling back a bit.
before the law was passed. The market was willing to just pay for the prospect of it over and over again. I guess the other piece of it tactically, and Keith, I'll ask you this. You mentioned seasonal effects. You mentioned this tendency of strong years to finish very strong, and this compulsion of people to make sure that they're participating toward the end of a year. Is positioning right now among investors, is exposure to the market, do you feel it's low? Is it middle? Is there still room for it to expand safely?
I think probably middle high. I think, if we remember right before the election, we saw the put-to-call ratio spike. The VIX was above average. So very quickly, we've seen, that fear go out the window, and we saw the VIX plummet, as you mentioned earlier, put-to-call ratios kind of plummet as well. So I don't think, the one thing I always have to write down in November and December of doing this is like seasonality and sentiment tends to be trumped by the trend, no pun intended. So I do think that's probably something more weary for the first quarter, but I do think we have a bit more to expand before year end. I don't think sentiment is extreme at this point because there was so much nervousness and anxiety heading into the election.
Yeah, I think that's the question, Cameron, is kind of just how much has already been, burned off. And does it matter? Because you hear people say, well, there's no reason to sell at the end of a year. And so therefore the market can kind of just continue to ratchet higher.
And the question is, does that create a pull forward potentially of returns from 25 into the end of 24? Because we do know that if you're sitting on big gains because you had a strong year, why would you recognize those gains in trend positions today versus waiting a couple of months and delaying tax payments for 16 months? So we do think that it's likely that we do get a chase into year end, but then that creates a scenario for 2025 where you have even higher valuations, even more stretch positioning, which is why our base case for 2025 is more high single digits to mid single digits types of returns, very different than the 20% plus that we've gotten this year.
Sure. Although maybe on top of, I guess it's like 37% over the last 12 months, many people would take that. We'll say, Cameron, good to see you. Keith and Sandra, thank you very much. Appreciate it.
Okay, it's a slow move. We've got about 44 minutes to go. 44 minutes.
44 minutes left in trade. Mike, shares of Sony on pace for their best day in more than 2 years after reporting second quarter results.
Okay.
Grew almost 70% year-over-year.
Bitcoin pulling back from the highs.
Short. The results were boosted by strong growth in its gaming and network services division, with Citi analysts crediting cost improvements for the latest PlayStation 5. Meantime, shares of Pinterest are plunging after 15%, about 15%, after reported weak revenue guidance for the fourth quarter. The company's CFO telling analysts on the earnings call yesterday that a slump in advertising revenue is likely to continue. Pinterest still beat on the top and bottom line for the third quarter and improved a share repurchase plan of $2 billion, but it hasn't been enough to boost the stock today, Mike.
All right, Seema, thank you. Talk to you again soon. We are just getting started. Up next, former Fed Governor Frederick Mnuchin tells us what he's expecting from next.
Not much to do, just watching the markets at this point.
Still holding above 6,000, the Dow above 44,000. We're watching the New York Stock Exchange, watching closing balance.
Meta trying to push higher. Home Depot with earnings next week just keeps driving higher. Home Depot. Place was busy. The location by us, place was busy, has been busy every time I go there to do something, some project or whatever. There's always people in there. Home Depot, Lowe's, same thing. All right, just watching the strength in Bitcoin and related proxies. Okay, Meta trying to push here. Watch Meta trying to go. Okay, cheap calls just out of the money. Okay, Meta. A few minutes left to go. Okay, there was a big trade on ARK K. There was a big trade on ARK K. Let me do this. Let me stay on Meta here. I'll go on a different. I'll go ARK K. There's a big trade on that one. Okay, ARK K. There was a very large trade that Joe K mentioned earlier. I think 10,000 calls or something like that. In 80,000 calls. A big difference. 80,000 December 60 calls on ARK K. It's only $6 to go. Big volume. Okay, so ARK K finally going to get it together. Big part of Kathy's portfolios, obviously Tesla and Palantir. Okay, ARK K looking for the follow through. 80,000 calls trading at the 60 strike for December. We could probably get there pretty quick. We're breaking above pivots.
The Dow crossing 44,000 for the first time, and the S&P 500 crossing above the 6,000 mark. Investors bracing for a big week of economic data next week, including the October CPI print on Wednesday. Joining me now to discuss what it could mean for the Fed's December meeting and beyond is Frederick Mishkin. He is the former Federal Reserve Board governor and a CNBC contributor. And Rick, it's great to have you here. I mean, you know, yesterday's Fed decision and Chair Powell's press conference really conveyed a sense of comfort by the central bank in terms of where they seem to be situated in the way of policy, not wanting to really stoke too much drama or suspense about the next move. Does that fit for you? Does that make sense given the conditions?
Yes, it does. The inflation numbers have been looking good, and actually the economy has been very strong. But that's good news. As long as inflation numbers are good and coming down on this glide path down to 2%, which seems to be what's happening, having a strong economy is just a terrific thing. I mean, the Fed should never be seen as being hostile to an economy that's doing well. It only wants to limit the economy when it's growing so fast that, in fact, inflation is heating up. And that doesn't seem to be happening. So far, so good. This is looking, nobody would have expected it to be as good as it is now, that the Fed really looks like it's getting its soft landing that it wants. Its big issues are going to be coming down the road, by the way.
Which are those issues? I mean, do they include the coming inflation numbers? Because there has been a little bit of a sense that
A little bit of
yes,
time
massive
left.
improvement, going in the right direction, but perhaps a little bit of a pause in the disinflation process.
So I'm actually looking longer term than that. But also remember that monetary policy takes a long time to have an effect. We've just had an extraordinary election, and the election of Donald Trump as president. That's going to create some very interesting challenges for the Federal Reserve. So one of them is the issue of Federal Reserve independence. As many people know, Trump was extremely critical of the Federal Reserve when it wasn't lowering interest rates to his liking. Trump tends to be a low interest man, just as he says he's a tariff man. He's a low interest man. And when Jay Powell comes up for renewal, it's extremely unlikely that he'll get renominated. And then who knows who Trump will put in. And interestingly, so far the Trump appointees worked out not because they were all great, but because Jay Powell was brilliant in dealing with Congress, so that in fact only the good appointees got through. I think that that's less likely to happen in the future. Jay is not going to be there. So in fact, that presents huge challenges for the Feds, particularly that'll be coming up towards the next election. So that's going to be a huge challenge for the Fed, a lot of pressure on the Fed to keep rates low, to boost the Republicans. That could lead to a lot of inflation, particularly if Trump chooses somebody who is willing to be, quote, a low interest rate person.
Yeah, I mean, of course, Powell yesterday pretty unequivocally says, obviously, he does not believe the president has the authority to fire or demote him, so he's going to serve out his term. And that being said, too, even though there's the potential, as you suggest, for a lot of friction, the Fed's already easing. The economy is already strong. It's almost as if there'd be nothing really to blame the central bank for at this point. So, why would that come to a head?
Well, because it's 2 years from now. Okay, so that's going to be a very, very, very different environment. We just don't know. And it might be that the Fed is faced with some inflationary pressures and has to raise rates, and Trump would be very upset about that. And that could mean that he'll pick somebody. They talked about that he wants to choose somebody who will agree to talk to him and consult him about interest rate decisions. That's completely something that should not happen and should not be something that is a good thing. The independence of the Fed has actually served us extremely well in terms of actually keeping inflation under control. And it's been a linchpin of both academic research saying that that's good, and actually the Congress and the president in the past have done that. Trump has been an exception in recent years, and it could get even more difficult given that this time around, I think he's not going to make the mistake of appointing somebody like Jay Powell. Instead, he'll want somebody who he can pressure much more easily.
What would you look for in the way of market behavior to suggest that there was anxiety building about the implications of a Fed that was less independent?
Well, you even see a little bit of it now. The long bond rate's up. So, the bond vigilantes watch this very, very carefully. And by the way, it's not just this issue of Fed independence, it's also the tariffs. So, again, there's two things that Trump has said about macroeconomics. One, he's a low interest man, and second, he's a tariff man. And in those cases,
RK, looking for that to follow through next week.
Very, very difficult problems for the Fed because they would, if they get implemented, we don't know, that would actually raise prices. And in fact, it's like what we call a supply shock, a negative supply shock, something that raises prices, which creates more inflation. And then the question is, what should the Fed do about it?
Okay, Bitcoin pulling back.
I don't see a problem for the next couple of years right now, but boy, 2 years from now, it's going to be a very, very difficult environment for the Fed. And we just don't know how it's going to play out. Again, we really don't know how this presidency is going to play out either. But particularly, I think that there will be super big challenges for the Federal Reserve at that time. And, who the president is does matter on that, particularly on some policies.
Yeah, I mean, I guess there's some research suggesting that the Fed ought to look through one-time price adjustments due to tariffs.
Absolutely.
But who knows what that means and what else is going to be going on at the time. So, as you suggest, maybe some room for plenty of drama as we go along. Rick, great talking to you.
It'll be interesting times, which is great from my perspective as a scholar, but not necessarily great for the country.
Yeah, some would say great for,
Apple trying to push a bit higher. Apple.
Rick, thank you very much. Appreciate it.
You're very welcome.
All right, up next, RBC's Lori Calvasina is breaking out her post-election playbook. She'll tell us where she's forecasting opportunity in the market under a Trump administration. She joins me at Post 9 after this break.
All right, what's Coinbase doing? Coinbase.
On your favorite podcast app. We'll be right back.
Coinbase, yeah, doing fine. Coinbase off the highs of the day. Coinbase. BITO pulling back a bit. All right, we'll look forward to some more action next week. Looking for a follow through on many of these names. Higher lows, higher highs. Bitcoin in particular. All right, so we've got 32 minutes to go. 32 minutes to go. Market's shaking out the last fleas.
OPEX leverage. The Pet Vet does. We added 25% to our U.S. pet sales force. Where the money comes is actually on the direct to consumer, the TV advertising, the digital, and we'll phase that in as we see the products ramp so you get the return. So you're right, good investment approach, and we'll be able to get that leverage. And that's why when we guided and started giving direction to 25, which we think our investors wanted, we shared that, hey, our growth will accelerate. 1% last year, guiding to 3% this year, and we are, guiding to accelerated revenue growth next year, Oliver, to that mid-single digit, and getting EBITDA growth for the first time in a few years, Elanco. And that I think also showed some proof points that the trajectory is changing for Elanco. That's why we're a compelling value proposition.
I see that a lot of the things we talked about are falling into place. We'll continue to monitor. Appreciate the update. Thanks a lot, Jeff.
Thank you. Thanks, Oliver.
Good thing. Jeffrey Simmons, CEO of Elanco Animal Health. That unchanged on the year, but stretching.
Bitcoin off the highs. Did make a new high, new all-time high on Bitcoin. Pull back in a little bit. All right, people taking profits. Looking forward to next week. Supermicro coming back down to 24 and change, 24.50. I'll look for that to squeeze next week.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network.
All right, Bitcoin still fading a bit from the highs.
Watch the market with the Schwab Network.
Okay, futures still fading. Futures.
Market knowledge and shift your perspective into full view. Real-time example trades and full hours of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to
Oh boy.
spot a trend in electric vehicles.
Okay, we've got 28 minutes to go. 28 minutes to go. We'll take a couple of minute break, and I'll be right back.
Each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
All right, stock market is jamming. NASDAQ kind of mixed, but S&P's hit that 6. Kevin Green joins us for a look at the options flows. Now that we got a 6 handle. Oh, we lost it. But we've had it for a minute, KG.
We did. We did see a nice little pop to the upside. I mean, we were actually kind of trying to break through that level for about an hour and a half earlier in today's session. And that just highlighted the fact that we did see a pretty nice wall there when it came to dealer positioning. And then we finally were able to break out and break to the upside here, kind of getting to around 60.12. And then we started seeing a little bit of a fade back to the downside here, Oliver. What I will say, though, when you're kind of looking at this the channel that we had yesterday, if we actually kind of extend that, the channel has been intact. And so until we actually see a break of that, which would be around 59.90 or so, you still got to say that this is going to be a pretty decent bull market. I would also suspect that we probably will have a significant amount of pen risk at the 6,000 level, just because there is a confluence of call positioning and put positioning, not only on the volume that we have today, but also on open interest. So it acted like a magnet, as you and I kind of talk about, but this could also be a scenario where the market really tries to close relatively close to that level. It may not be right there on 6,000, but it could be relatively close. So good market overall, but definitely a squeeze and maybe some exhaustion here going into the close.
All right, so I guess we might get another little push if we get to 60.25, maybe too much to ask for today, but next week, I mean, it seems like we should just assume the grind continues, and I guess each leg would go up. Folks will have to keep kind of repositioning.
Yeah, I would say that's the case, right? I mean, you never trade you never fade a trend, and that's what we're in right now is a trend. The put volume, we kind of talked about it earlier. It was a little bit aggressive when we started the day, kind of looking at rolling up those puts, but it continued to stay pretty elevated for the remainder of the day. So I would say it's a little bit more balanced on call side and put side. We also had another dynamic too, where we saw. On an intraday basis, VIX up in the S&P 500 up. Now, if you're looking at it from the surface, you might say, okay, well, that was call side skew, and rightfully so. We did see a lot of call buyers stepping into this market, but you also saw some put buyers getting into this market as well, which is why we saw that correlation of VIX up, S&P 500 up. You're starting to see a break of that right now. But you and I know we kind of keep this on the radar. That usually kind of foreshadows maybe a pullback or stalling out of the market, maybe some compression over the next 1 or 2 trading sessions before we try to grind out a little bit higher here. We are coming off a low bar when you're looking at the VIX, but that is something to really note. It wasn't really call side skew that drove this up. On an intraday basis, the puts were also playing a part as well, and I do believe that might be a signal that we have a compression or maybe a small pullback on Monday or Tuesday.
Okay. All right. So vol then, as it kind of settles in at 15, do you monitor the trading in VIX as a product, or are you just kind of watching how it responds to S&P and seeing what's out of whack based on S&P levels?
I'm just seeing what the VIX is actually doing by itself. I mean, you can look at the VIX options, but we also have to just be mindful too. I believe next week we will have monthly expiration either next week or the following week. So there's going to be a lot of activity when it comes to those VIX options and also an unwinding of those trades, which is another reason why we had a catalyst to the upside. We had an unwinding of these hedges in the market here. But I would also look at that correlation between the spot VIX and the front month VIX and really try to price that off the December contract here. We have now that kink that we've been talking about over the last few months is now out of the market. But now you have to also kind of think to yourself, how low can we go from here? If we're sitting at a 15 VIX or even a 14.5 VIX, how low can vol go before people start to buy protection, and that could also once again kind of lead to a small pullback. I'm not trying to say and be bearish here, Oliver. I'm just trying to be able to highlight the fact that we've run up really strongly over the last couple of trading sessions. I would not be surprised if we do see people taking some chips off the table, especially if we do close above 6,000. I mean, that's been a price target for a lot of analysts out there too.
True. Been a bit of a ripper. Can we see into the future for next week, expirations or anything interesting on the calendar, KG, that stands out to you?
That is a good question. Look, I've been out for the last couple of days. I'm not too sure what's actually on the calendar next week that can really shake us up. I mean, we've had a lot of good economic data. The Fed meeting obviously went well.
Amazon pulling back more.
The election, obviously.
Yeah, we knocked out a lot.
All right, stocks are all over the place. Amazon pulling back. Nvidia looking for a bounce. Bitcoin pulled off the highs. Bitcoin will be trading over the weekend too, so we'll be looking for that to follow through. Meta trying to bounce. All right, so we're coming in at the close. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We have about 23 minutes to go. 23 minutes to go.
I think the biggest risk that you have is obviously tariff policy. I don't think it's so much on the inflation front, but I think it's tariff policy and the lack of communication between the administration and very big business leaders.
Okay, looking for the futures to bounce. Okay, we pull back below S&P cash. Pull back below that 6,000 level. Okay, so we briefly got up there, 6,012. So we know more than likely the call wall will shift. We'll find out what that looks like over the weekend. I'll post an update over the weekend, if not Sunday. All right, looking for a bounce now.
expiration next week, but I was wondering more like, and I know you watch some of these big trades and like ETFs and stuff, and where they've got to rebalance and all that. Is there anything like that that's anomalous at all?
No, not next week. So I misspoke. The following week is going to be the monthly expiration. So that QILD trade, keep an eye out on that. That's going to be on the 21st, so the day before expiration. But for next week, we don't have anything major that's going to be kind of rocking the boat. I would also look at the end of month of November too. That's probably when you're going to start having a lot of that December positioning being rolled out to the monthly expiration for January, and that's where you start having the LEAP conversation. Usually the LEAP month in January is the largest expiration that we do see throughout the whole year. So, but that's another couple of weeks down the road here. For next week, from a positioning standpoint, we're kind of in the clear as far as any major institutions adjusting positions.
All right. All right, we're back in the wedge in the upside this time. Love it. So continue. But the folks that got squeezed out on the other end were pretty good. It seems like KG, good to have you back. Thank you, sir. Appreciate that look at the options trades coming up.
Meta, nice bounce in today.
I'll take a look at commodities, trade a little cryptos, some coins.
Tesla. Tesla's not done, it looks like. Momentum traders. I would not be buying it up here. I'm just saying. Come on, what's going on, CNBC? All right, so we got Tesla turning back up. Meta had a little short covering just now. Futures trying to turn back up. Probably going to pin right near 6,000. Okay. Yeah, it's been a really good week. Really good week, closing positions. Expect some closing positions here. OPEX, weekly Friday. Next week we'll have the monthlies. And then, of course, a lot of things will be most likely rolling out into December and January. Looking for a follow through. All right, so the markets did drift back down below 6,000. Tesla trying to turn back up.
Thanks. About 19 minutes till the closing bell. Let's get back to SEMA for a look at the key stocks to watch.
Mike, shares of Bloomin' Brands are on track for their worst day since June of 2022 after reported a weak outlook and declining same-store sales. Traffic at Outback Steakhouse fell about 4%. Bonefish Grill fell about 8.5%.
Defensive sectors faded over the last couple of weeks. We've got all the offensive sectors, including communications, financials, industrials, tech, semiconductors, and consumer discretionary, all pushing higher into the close, even though markets are pulling back. You should expect to see some pullback after that big run-up that we've seen the last few days. So not doing much with this at the moment.
Optimism around the Trump administration's impact on the company boosts the stock. That market now is Jed Dorsheimer of William Blair, who has an outperform rating on the stock. So Jed, if you had to explain with some level of specificity why the stock is up so dramatically over the past couple of weeks around the election, could you bring it back to what it means for the company?
Yeah, I think so. I mean, Mike, you kind of have two things going on, and you have a little bit of a yin and yang, mostly on the yin on the positive side, I guess, which is, less regulatory burden on Tesla. So if you look at the big opportunities for Tesla, it's probably going to be, and this takes away, or if you take a step back and you say, hey, Tesla's not just an auto company, but it's, is it a bigger, whether it's an energy, how we look at it, or an AI, and one of the big risks for Robotaxi, which they just rolled out a month ago, is the regulatory burden on that. And so I think what you're seeing here is a reduction of the risk that Elon's involvement in the Trump presidency is going to be able to probably ease Tesla in getting over that automated vehicle AV hurdle. On the negative side, you clearly have the IRA and risk around that. That's hitting all of the solar names, some of the solar names that we cover right now. But if you also dig under the covers in a bit deeper of what Trump has been saying, it's unlikely that he's going to be targeting domestic content. And Tesla has more domestic content for batteries, for energy storage, and for autos than, and including EV, of any other company. So I think that's what's justifying the move here. It is clearly a momentum move.
Well, exactly. Yeah. I mean, I guess we have been at these prices before and even higher. The stock was around 400 at the peak, but there has been a huge deceleration in terms of, obviously growth rates and earnings estimates being cut for this year and next. Do you think the market is going to continue to kind of look past that?
I think it's probably the opposite of shoot first, ask questions later. You're getting all the benefit right now. Because you've got a couple months before any policies can be enacted, and so I think you're getting the best case scenario, and I think that's going to continue to play out here. If you looked at if you cut the tax credits for EVs, that would have a pretty meaningful hit to gross margins for Tesla. So obviously you're not getting that to play out, and I think this lasts for a while.
All right, we got 15 minutes to go.
There has been a lot of talk that, other automakers would be more disadvantaged if those EV credits perhaps went away, but obviously that's a kind of 100% profit margin revenue for Tesla when they get bought. So, Jed, we'll have to leave it there.
Agree with that. Yeah. From a long perspective, you take the duration of the long term, that would be a real positive for Tesla.
All right. We'll say, Jed, appreciate it. Have a good weekend. Thank you.
Thank you. You too. Thanks for having me.
All right. You got it. Still ahead, shares of Expedia and Airbnb moving in opposite directions. We'll drill down on those moves coming up.
Okay, Meta's starting to push in today. Meta. All right, Tesla. Had a great day, Tesla. For those of you who took profits, I took all the profits off the table. We'll see if we get some sort of follow through next week on Tesla.
That's way in a micro strategy already. Like, does that take Bitcoin itself?
I don't even know. I mean,
Okay, we got 14 minutes to go. Looking for some of these big tech names to rally.
Taylor's had with that because when it was a bear market, which we won't probably see that well until like 2025 when something like that starts. Where
AMD turning back up, shorts covering AMD. Looks like people closing positions.
Deflationary environment. That's where Bitcoin really starts to struggle there, but that's not forecasted out for a long time, and it's really just on a lot of forecasted models, so it might not even happen. But yeah, it's been an incredible ride for that guy, and I'm really happy for his net worth and everything.
Is there a reason to dabble in the non-Bitcoin coins, like the chart for Bitcoin versus Ethereum, right? Like night and day.
Yeah. Okay, so I think that we've seen periods where even right now you're seeing Bitcoin is negative on the futures contract where Ethereum is up. I think there is some rotation going on between the two because people believe that, hey, you throw out Bitcoin and you start looking at what could be the forward return, okay, up to $100,000. So you're going to get that type of return back. But if you look at something like Ethereum, you could get, if you start modeling out something where it's like $10,000, well, that's going to be a 4x on your money. So that's where I think people will gravitate to.
Okay. Next week around inflation, what do you think's the trade?
I think hope is not a strategy that these metals start to rise back up. I think you're still a dip buyer on anything as far as U.S. equities, cryptocurrencies. Energy prices are probably coming off a bit.
Gold back to the 50-day. Got a nice bounce off the 50-day if you're interested in gold. I have no position in gold or silver.
Right. Like the eyes on all the cross assets. Always a good and nice mixed bag of content. Thanks, Phil. Keeping us
Meta back to the top of the range from the evening session.
All right. Thought you were gonna have an S&P 6 hat. Be honest with you.
I don't have one yet.
Have a great weekend. Yeah, Phil Streeble, Chief Market Strategist of Blue Line Futures. All right, coming up, got the Schwab team taking us into the bell. We're going to talk bonds. We're going to talk a little policy. Coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals.
Bitcoin trying to hold on to 76.6.
Keep your money safe. Also, because your Investor Checking account is linked,
Not doing anything, just watching positions.
in one convenient location.
Looking for Bitcoin, Apple, ARK, K, Tesla, and a few other names to continue next week. Meta. Looking for Amazon to bounce. Some of these nano nuclear, small modular reactor stocks, looking for those to bounce as well. SMR is off its high of the day.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platform.
What?
Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills.
All right, we got 9 minutes to go. 9 minutes to go.
Crafted just for traders.
All right, starting to see some short covering at the bottom down here. After that fade off of the highs, S&P 500 faded from all-time highs. Pretty decent day today.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Pearl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something.
Super micro drifting a bit lower.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes.
Let's look at a few names like Twilio going forward. Twilio, that looks like it's going to continue. We've got some buyers at the low of the day. Twilio. Okay, just keep buying the lows. Twilio. I really like the weekly on Twilio. You know the story here. This looks like it could keep going. 138 is a 236 Fibonacci from this high over here.
Afternoon, guys. Great to see you. Mike, so how many more votes we got to count?
We still got a few votes to count, but you know,
Shorts covering end of day.
This is still not called in the Senate in Arizona and Nevada. Both of those look like they'll go with the Democrats. And then there's a handful of races still that probably won't be called until sometime late next week in California for the House of Representatives. But it looks like Republicans are poised to end up with the trifecta, control of the White House, the House, and the Senate. The House maybe only by a couple.
Okay, NVIDIA starting to bounce here. NVIDIA. Shorts covering.
It could be tricky for some of the policy agenda next year, but looks like Republicans are going to get all three in the end.
Okay. So full sweep then, odds are like what, 90+%?
Something like that. I don't know if it's quite that high. You know, there's a little plausible path to maybe have Democrats get the House by a seat, but it looks like, yeah, maybe 90, 85, 90 that Republicans will end up there.
All right. Obviously, the election was the highlight this week, but Powell's kind of interesting yesterday, Cooper. Bonds fading a little bit from an early rally, trying to push back against higher yields. Seems like bonds are kind of chopping it up this week. What's your takeaway?
Yeah, obviously we had a very, very busy week with the election, then also Powell's meeting, the Fed meeting yesterday. So I think more of the move in treasuries today is a little bit of a breather, a little bit of a respite from what we've seen over the past few days. Our expectation is it's likely that we're going to see higher yields over time, or we would lean more towards higher yields. So we think that there's a potential risk there. So I know my colleagues, Kathy and Colin,
6 minutes to go. 6 minutes to go. Meta's starting to bounce.
Oliver, we're shifting a little bit. We're sticking to a benchmark or below duration just because there is that potential for risk of yields to move up a little bit higher. So I think that's worth highlighting as far as kind of the change in what's occurred with this week going forward.
Okay. We got a little bit of a pinch in the yield curve last couple of days. Anything to be worried about, Cooper? Market seeming to say maybe Powell can take a breather for a meeting or two, possibly. What do you think?
Yeah, I don't think that the movement in the yield curve is too much to be concerned about. But in terms of what this means for the direction of Fed funds rate, our expectation is that we do expect that the Fed is going to continue to cut rates, but it's going to be at a slow and methodical pace. Now, prior to the election, I think what's been priced in since the election has occurred is just fewer rate cuts. So I think that that's relatively appropriate, especially given the potential for fiscal stimulus that might come down the pipeline, tax policies that might come down the pipeline, potential for tariffs that might come down the pipeline. I think if you take all of that together, there's just a lot that might be coming. And so to take a slow and methodical approach from here,
Robinhood going.
relatively appropriate. We heard that from Chairman Powell. In the near term, the election doesn't really change.
Robinhood.
But going forward, I think, yes, they have
Watch
to
Robinhood.
consider a lot of things. And they have said that they're going to start to consider a lot of things once we know what a lot of those things are.
Yeah. One thing it seemed that we learned, Mike, is that Powell's going to hold his ground if Team Trump comes after him. But then we also saw a report that Team Trump's not going to come after him. I'm curious what you made of those headlines.
Yeah, absolutely. My favorite part of the news conference, no question, Oliver, was Jerome Powell's one-word answer to the idea of whether he would resign if Trump asked him to. He said no. And then later on a question about whether Trump could fire him or other Fed governors, he said, not permitted under the law. So 6 words, 2 questions, very, very powerful. But you're right that, Trump seems to have backed off that idea. One interesting thing kind of making the rounds here in Washington is whether he would potentially appoint or nominate the successor to Powell, whose term doesn't end until May of 2026, but maybe nominate a successor, say a year early and have this kind of a shadow Fed chair that he could use as kind of a mouthpiece going forward. That'll be interesting. But, this is one of about 100 priorities the Trump administration is going to have to figure out in the weeks ahead.
Okay. Hey, Mike, what else, give us kind of for those not so politically inclined, or what typically happens in the couple months? I mean, how much momentum do you think his team could build? I mean, they really are saying there's so many things that they want to do. There's people who are civilian citizens that are going to be involved. Elon, RFK, it's like, well, what do we know what to expect? Are they just going to start doing stuff already, or what?
Oliver, one of the big differences between the last time, the first time that Trump was elected, he really didn't have any structure at all. I don't think he really expected to beat Hillary Clinton in 2016. And so it was really, really hard to kind of get things up and going. I don't think you're going to have that issue. They're going to have a lot of the cabinet sort of pre-picked so that when he's inaugurated, they're ready to go pretty much right away through the Senate confirmation process. And I think they're going to make a lot of decisions about, executive orders and that sort of thing that they can have going right away. I do think the markets are going to spend the next several weeks kind of trying to parse out what are the priorities going to be. You can't do everything on day one. You can't do everything in month 1. And, sorting through tariffs and taxes and some of these other issues, those issues are going to take a while once he's inaugurated to actually happen. So I think the market is in this period of kind of feeling out what is going to be real. Is he really going to put tariffs on everything? That kind of thing. And I think we'll get some signals about how that's going to play out here over the next, 10 weeks or so.
Yeah, all right. Cooper, next week for inflation, any potential movement on that? Has the bar kind of shifted a little bit to the possibility of warmth?
Yeah, I think what we've seen in terms
Robinhood
of
looking
is
really
that there's
good.
been a little bit of a recent stalling out in terms of moving down closer to the 2% target. That was also acknowledged just yesterday in the statement. Powell also mentioned it in the press conference. So our expectation is that eventually we're going to get down to that 2% road, but it is going to be a choppy road to get down there. So it could be another source of volatility in terms of the market going forward, though, Oliver.
All right, great stuff. Well said. Thanks, guys. Nice little prep for the coming weekend months. Thanks for the help all week on the election stuff. Mike Townsend, Cooper Howard, Director of Fixed Income Strategist at Schwab Center for Financial Research. We got the bell in 90 seconds. See you in the technical weekend, my weekend.
All right, folks. Have a great weekend. The weekend video, of course, will be out near 2 o'clock on Sunday. Now that I got everything squared away. Nice little pop in Robinhood and pulling back in now.
Giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts.
Hope everyone has a good weekend. NVIDIA with a nice bounce, NVIDIA. And that's a wrap. That is a wrap. Okay, nice finish on Meta. Almost got to 590. If you took those calls, hopefully you took profits. Anyway, have a hard stop. Hey, take care, everyone. We'll see you on Sunday. Ciao. Have a great weekend.